Now you got a cold in your throat. Oh no, just call your boss. Take the crust from out your eyes. So tasty, not a coffee.
Good morning, you knuckleheads. Happy Wednesday to you both.
Hello.
Update. Woo woo.
Woo.
I've been waiting for this morning because I want to hear about Vanetta's night. She was out hanging with the youngins.
Cubs game. Did the Cubbies win?
Cubs did win 7-4. It was very exciting. Yeah. First of all, I was in the suite, and I cannot
treated
go
like the woman
back.
you're supposed to be.
Right. I cannot go back to regular.
See, that's the problem. That's the problem.
Like, no, you get in a private elevator, and there's a man in there who's been there since 1929, and he pushes. I'm not kidding. He pushes the button in the elevator, and everyone at Wrigley Field so nice, just the kindest people. So when I scanned my ticket to go in, there was a very nice older gentleman, and I didn't know how to get to the suite, obviously, and so I was like, "Oh, can you? Here's my ticket," and he's like, "Absolutely." He's like, "You just get on this way, and then there's an elevator," and he's like, "Is it your first time at Wrigley?" And I heard, "Is it your first time in the suite?"
Yeah.
So I said yes, and he's like, "Little lady," he's like, "You got to get yourself a special thing." He's like, "You go over there for every first-time visitor to Wrigley." And I was like, "Okay." I didn't want to tell him that I had been to Wrigley before, but if it's your first time at Wrigley, they give you like a little special something. It was super nice, but it was a perfect night for baseball. The one thing I was surprised at, I hadn't been up to Wrigley, I think, since we did the golf thing, which was a while ago, and I wasn't there that long, but it's so different. It's so clean.
Yeah, they had that renovation of
I saw on Twitter.
And all of Wrigley. I mean, Wrigleyville, too.
Yeah, Wrigleyville. Yeah, I saw on Twitter, it's basically, they're it looks like Nashville. And I was like, oh, yeah.
Yeah. You still got sluggers there where you can go.
Yeah.
I know, but the Salt and Pepper Diner is not there.
Yeah.
The Taco Bell. If you did not fight somebody or your own demons in that Taco Bell, you are not a Chicagoan. Nikki knows. I know.
That was an iconic Taco Bell because it was the old school '90s look. It had the fake terracotta
Been there forever.
Roof. And the bell outside of it, the old logo, that was a classic.
Yeah. So R.I.P. to that Taco Bell.
We used to be able to park there.
Yeah.
I was having this discussion, and I think I was confusing it with United Center boxes where they have the dessert truck.
So I did post a video to social. So the game was fun. The pageantry of the Cubs, and it's a historic park. You should go to Wrigley. Yeah. But yes, there was a dessert cart, and when I tell you, adults of all ages were losing their damn minds.
What'd you get?
So it looks like a beautiful antique white cabinet. Ooh. And this very nice lady comes, and she's the sweetest lady.
She's
and
also been there for
I'm ma'am.
years.
I was like, "Ma'am, you were my favorite person ever." She's like, "I get that a lot." But they had cakes at the top. So there's cheesecake, and then a 7-layer rainbow cake, carrot cake, a lemon meringue cake, and then ice cream, cookies, candy. I had the carrot cake. It was the best carrot cake I've ever had in my life. It was Michelin star carrot cake.
Yeah, you never had the Mrs. Carrot Cake cupcake.
I never got it. I would have happily evaluated it.
I ate all of it, but
yeah.
But
that sounds amazing.
Yes, it was great. It was fun. But I guess we swept the Phillies. Cubs are exciting. They're an exciting team to watch. I do not know a lot about baseball. I don't know anything about
Did you head down to the DraftKings Sportsbook and
I did walk past it.
How did you feel in there?
It's weird. I didn't go in there.
Were you like, oh, now
I was like, I know Nick Batista.
But you can see the allure.
I cannot.
Oh, you can't?
No, I can't.
The screens, the endless screens.
No.
Sports and magic.
But it was just I'll end this and get into something else. But I love this city so much because there's an energy here. There's a vibe. We were It was Tuesday night, and like I was walking Tracy Golden, because she needed to go home, and I didn't want her to walk by herself because she's from Arlington Heights, and I was worried about her. I was like, let me help you,
She's a
Tracy.
mom.
Her to have
She's
good
a mom.
experience.
She's smaller than me. I was like, Tracy, I was like, I got this.
Yeah.
Like she's smaller. So I was like walking her out, and she was just like, this is amazing. Like, it's fun to be a kind of a tourist in your own city. And just like everything was cool. Like people were just vibing. The cops were out, but everyone was like being respectful. And it was just the weather was immaculate. And it was just, Chicago's a good time.
I was waiting for you to say like you went to like Old Crow is Old Crow even there anymore? No,
There's so many other country bars and bars I haven't heard of.
Have you been, when was the last time you've been to Wrigley?
I mean, I went last year.
You did?
I forget which one, because they have like it's just like the bars change names.
Yeah.
It's like the same bar, but
Yeah.
it's like changes names every like 2 years.
And then like all the illegal or now legal, the rooftops on the buildings, they all have like corporate sponsorships. And it's just like weird. I don't know. It's just weird.
Are those
different.
all illegal? Like you can't do
No, well, they got bought out. Like they bought corporate high. I don't know.
Grandfathered in.
Yeah.
Didn't they tried to like block a lot?
They did block a lot of them,
for years. I mean, even the Cubs would put up like walls and stuff to block their views. If anybody doesn't know, if you're out in the outfield of
like on
Wrigley,
Sheffield or in Waveland.
the buildings, the quintessential like 3 flat
like
Chicago
brownstones.
brick buildings, they would put things up on the roof and you can see and watch the product, which is the Cubs, for free, and then they would charge you and serve you drinks and stuff.
But that was the greatest because it was all inclusive. So you'd buy your ticket and they would have like food and booze there, and it was just you could like walk back and forth, and there was no like assigned seats. So
It was very cool. Very
dogs,
cool.
Yeah. Did you have a hot dog?
I don't eat beef.
Oh, yeah.
So they had beef, Vienna beef, but they had Vienna beef.
Did you pose with one?
No, they had Vienna beef and Italian beefs in our suite. I had a caprese sandwich and this like elote salad. It was very good. I was
So
like,
bougie.
what is that? I know.
Elotes
But it was
at
just
a
real fast.
baseball game.
There were guys like selling shirts out front of Wrigley. So they still do have some of that charm, the character selling shirts. So there was, of course, a bunch of Pope Leo shirts, which I was surprised because he's a South Sider.
Yeah.
And there was like a funny Chicago Bears shirt, but it said Cocaine Bear. And then the best shirt, the shirt that I wanted, it said Jordan Pippen 96, like an election shirt. And I was like, that's kind of funny. But like, let's bring back Jordan Pippen 96. I think we can all vote for that. But how was your evening, Nikki?
Nothing like, I know you asked Nick, but nothing like yours. I mean,
I sat on my couch and watched some of the hockey, and that was it. Nothing cool like that.
Who was playing in hockey?
We were watching the Avalanche a little bit.
That one went into overtime, didn't it?
I didn't finish it.
Yeah, that one went into overtime.
Sleepy boy.
They're all 1-1 now.
Yeah.
Okay.
Which is pretty cool. I know the Sabres lost last night.
Do you have a pick that you think is going to go all the way to the cup?
I don't have
The fighting is just amazing.
fighting
every time.
Playoff hockey is so good. It really is. Yeah. I mean, they basically had a bench clearing brawl. I mean, they had like 10 guys in the penalty box at one time. Yeah. I mean, it was
like all on top of each other.
Yeah. And you didn't have to pay extra for it.
That's exactly what I read in my book.
I did say last night to Cassie, I was like, "Welcome to the boy farm," because that's what I call baseball, the boy farm.
Everything is like a boy
aquarium, the boy zoo, the boy farm.
Yeah.
So
I like that.
Yeah,
like
get into it. How about you, Bat? How was your evening? Any shenanigans?
The only reason I was watching the Sabre game is because I was at my own son's game, so they had the TV out in the corner there, so I was doing a little bit of both at the same time.
Did your son win?
They did 4-0. They bought. They beat GBN, which is like a rival to them. We're GBS, they're GBN. So South versus North kind of thing. It was very good. The South won again.
What'd you just sell, Nikki?
I got some silver. I mean, yesterday was just
silver up 2.25%.
Yeah,
Nice.
Into the close yesterday. I mean, we were down 50 handles, and then we got our patented
down 50 handles on the S&P.
0.5% tweet is what I'm calling it. So if the market is down 0.5%, you have to expect a tweet to come near or just after the close.
Okay.
To reverse that sort of move.
Okay.
The tweet will likely have no real significant.
Yeah, nothing new.
It will be posted on Truth. Will likely not be Truth. But it will likely move markets at minimum about 50 handles, which will reverse that 0.5% down move. So I had some lucky timing there, not so lucky timing in the NASDAQ, even though I scalped like 50 points. I'm now down that 50 points because it's rallied. So net.
Somebody, they're right. Avalanche is 2-0 against the Kings. Everybody else is 1-1. I apologize for the fake news. Fake news. Fake news. He called me a hater. I just made a mistake.
Uh-oh.
Yeah, you got to be careful. You got to be careful with the allegiances.
It's my buddy Aaron. Yeah.
I got when I said something bad about Iowa State, I had some people in the chat.
Were they Cyclones?
Yeah, I was.
Oh, look at
surprised.
me! I knew that. Hey, I support you, Iowa State.
Yeah, I was kind of surprised there.
Hey, we got a great show for you today. It is a wonderful Wednesday here on Tasty Live. Happy Hump Day to you all. At the top of the 8 o'clock hour, we're bringing you an options jive. Why time is not on your side after 21 DTE. That sounds ominous.
Do you like that?
Yeah.
This is a really good one. So it's a little bit about time decay, also about gamma exposure as you get closer to expiration. So it's a double whammy of Greeks for you. Both of them really, really important. And it goes to like why we manage trades, specifically naked positions. It's really kind of
It's like why you don't go to Taco Bell at midnight.
yes.
That kind of thing. Should be able to figure it out.
Anyway, the bean and cheese burrito would save me right now. Anyway.
Do you need, did you have a couple of...
No, I didn't drink last night. I had to get up early. But the booze selection was like, it was just pour
it's unlimited.
It's like pretty much they had everything.
Was there, I was trying to kind of, because sometimes in past tasty events, we would call it the MVP award, which was just.
I am not I'm not outing anyone. Look, this is my first time ever getting invited. I'm not about to blow up anyone's spot. Everyone was lovely. Everyone was perfectly composed.
It had to be one MVP.
Yeah.
If you had to make an MVP,
composed.
who would it be?
The only thing I will divulge is that we are all gamblers. Like, they like betting on like, okay, is this going to be a ball or a strike? And I'm like, what are we doing?
I like that.
Not me, but yes. But now I'm not.
In past sessions, prior to having a corporate HR, the tasty events would get quite interesting.
Yeah. No. I was good. But I also left at like the 7th inning. So what happened after that is none of my business.
Come on.
Look, dude, I had to get up at 4:30 this morning. We also have What's Your Assumption today? Because it's Assume the Position Wednesday. This is where viewers submit in their trade ideas, but they have a directional bias. And the bats try to put on viewer-submitted trades.
Yes.
It will be interesting because yesterday was down, today is up, and so might need to make some adjustments.
The pendulum swings back and forth, back and forth, back and forth.
Back and forth. 9 o'clock, a little tasty extra. TP in the house. Solid retail sales push retail stocks up.
It should be amazing. This from the cherry picks. Looking at some of the retail stocks, Target, Walmart.
That's like
nothing says amazing at 71.55 on EMSPs like Target.
I know, but here's the thing that's retail. A scam is like what they consider retail, like gas is included in that. I was like, I don't consider that like a fun little sweet treat. Like if I'm doing retail to get myself a little sweet treat, because I did something, I don't consider gas to be like, woo.
That's fair. Yeah, but they don't really have that in that basket. I mean, this is more of your Target. Walmart.
Right, I know. I just mean like a number that came out that was part of that retail sales did include gas, and that seems wrong.
Yes.
What is your sweet treat of choice?
Oh, like a little for myself, probably something from Ulta, like a pretty eyeshadow or
I was
lip
thinking
gloss.
like a piece of candy is what I was.
I meant like sweet treat, like, or it could be something like sweet too.
Got it.
I really just meant lip gloss. And then we have live from the trade desk at around 9:20. Quentin in the house, Q counting down all the top trending tickers over at Tasty Trade. And Mr. Ryan Grace on the crypto side of things.
Yes, crypto going nuts this morning. 78,000. Look at this.
Hey, I got some crypto stories. And then, of course, live from the SIBO. Listen, Jenny, at 10 a.m. It's always electric when the lady's alive. It was crazy. I don't know, a couple big orders maybe came in, but I was watching their show yesterday and it got like really loud at some points. But that's fun though, because it
is cool.
It's spontaneous and you don't know when that's going to happen.
Yes.
So, in the meantime and in between time, you guys want your daily dose?
Ah!
Hey, hit me with my theme music. Let's go.
Our leading story, breaking news,
Today's
coming across the wire. Leading story, top story, just in.
Today's headline. This just in.
Breaking news.
All right, everybody. Today is a wonderful Wednesday. It is what day is it? Oh, it's April the 22nd. This is the part of the show we like to call the Daily Dose, where we talk about today's financial news and headlines. My name's Vanetta. Are you ready for the news?
Ready for the news.
It's Earth Day.
Oh,
who knew?
I love you, Earth.
Good job, Earth. Good job. Too bad AI is going to destroy you. Hey.
Did you see that picture from the Artemis spaceship?
I've been seeing lots of them.
Or it wasn't a picture, it was a
The
video.
iPhone video that Reed took on his
Video
iPhone.
of like the Earth going behind.
Yeah.
The moon. That was pretty cool.
Yeah.
Did you see your lunar?
No confirmation.
Because we were on the other side.
Could be a
this
big
time.
piece of cheese in the sky.
We were on the
don't
other
know.
side this time.
We don't know.
I mean, I know I'm like hardcore Apple fangirl, but just real fast, the testament that you're like, he has a consumer iPhone, and the fact that his phone friggin' works in space, like that's an iPhone ad.
Yeah.
That's amazing.
That's what I'm
Your
saying.
iPhone works 250,000 miles away from Earth.
Send me a picture of that lunar debris.
Sitting on the other side of the moon.
Well, fly over there, okay? Take a
Fly
pit
me
stop.
to the moon.
Apple up $1, by the way, $2.67.
Ooh.
Earnings for today, Mr. Bat.
Ooh, for today, Tesla. I mean, that's
Yeah,
what
Tesla.
everybody's going to be looking at. But you do have Las Vegas Sands and
ServiceNow.
ServiceNow, Love, maybe a little IBM,
You got,
LRCX.
oh, yeah, Texas Instruments. You got some of the chippies in there. So
Instruments.
it should be an interesting one. Tomorrow morning, you have like Lockheed Martin, AAL, American Express, FCX. So there's a handful.
few.
All right, it's happening. It's percolating. It's picking
We're
up.
We're popping off.
Moving. We grooving.
Yeah.
Hey, Trump extends ceasefire in Iran. Cue surprise face, citing seriously fractured Iranian government. Like Nikki said, the tweet came out last night, and President Trump has extended the U.S. ceasefire with Iran. Let's talk about oil and the dollar and things that are affected by our new reality.
Oil-
every day.
Yesterday could be summed up. I'm sorry to interrupt you.
Yeah, go on.
Yesterday could be summed up in the last 30 minutes of trading.
Yeah.
And that's really what the whole day was the last 30 minutes of trading.
And what happened in those 30
So we did nothing for most of the day, oscillated back and forth. Volume was
two-sided
okay.
action. Yeah.
Oil was higher earlier, came off a little bit. And then all of a sudden, oil popped to the upside. Market went lower by 50, 60 handles on the E and the S&Ps. And I'm talking about maybe 5 minutes before the close, right around there.
Yeah, 5 minutes before the close, we were down 60 at the lows of the
60.
session, volatility expanding, oil at highs at 95, 96. It looked like we were back on.
Everything looked like it was back on. Wednesday was here, and whatever was supposed to happen on Wednesday was going to happen. And then all of a sudden, the market just reversed by 30, 40 handles back to the upside.
Yeah.
Oil sold off, not quite as low as it was previously, but it was the whole day in a 5-minute time frame. And then, I don't know, we caught a little bit of a bid last night when we opened on the E and the S&Ps. They were up around 30 and sat in about a $10 range for most of the evening. And by evening, I mean before I went to bed.
Yeah.
And then they're up 50 some odd handles now, so they've doubled their and oil back under $90.
The thing about it, and he obviously knows exactly what he's doing, and all of the people around him are market.
Hey, what time is it in New York? Shoot, I'm a little late with this tweet.
Yeah, well, it is perfectly timed to when you have a little bit of funkiness of liquidity.
Usually it's the weekends, right, with these tweets?
Yeah, but it's right. The ones in the middle of the week.
the ceasefires have been in the middle of the week.
The ceasefire is not coming at noon. Okay,
Yeah.
It's coming right at the end of the day. A little bit. You got to be on your hand. You got to be.
Watch your position sizing. Is
Watch
what
your
you're really
positions,
saying.
and especially for people that are doing, and this will get better with the PDT rule going away, but people that are trading like SPY, stuff that is settled to shares, that you could have had calls that were.
Oh, you're talking about 0 days in SPY.
Yeah, a lot of
like
people
that.
trade them
for
because they got to
sure.
get smaller, and
You can get an out of the money option in SPY.
that all of a sudden
exercise.
a tweet comes out and it's in the money, and
Sure.
you get you got to be careful with this stuff.
That's why on the close, if you noticed, the options that were out of the money in SPY that were $2, $3 even out of the money were still 15, 20, 30 cents bid.
But you're seeing that across the board like every day with those 0DT options as well as individual stock names, because those can move as well. Because if they're, if the NASDAQ rallies 300 points and Amazon, rallies to 52 and you're long or short the 50 calls where they're out of the money, at the close of the bell, but in the overnight, or not the overnight, but the after hour session, it rallies, you have expiration risk there.
Sure.
You got to be careful.
Yeah.
Got to be careful.
I hate this new normal, but that is good advice though, Nikki. Yeah.
Yeah.
Hey, speaking of which, though, traders are piling into call options as FOMO grows, and that's according to the SIBO. Easing geopolitical concerns turn focus more towards individual stock options amid earnings season. First of all, why are you publishing family business? And do you think this is really a case of FOMO? I know people misunderstand, unusual options activity, but I did want to talk about this.
I mean, who sells them? Remember, or who buys them if it goes in the opposite direction? It's so easy to say after the fact, but who's the dumb money that sells these hundreds of thousands of options? It's not Nikki or I doing our couple of contracts, or the grandmother in Iowa again doing, one contract. There's something that is said for both sides of the trade. Remember, we don't know what's on the other side. So they could be buying futures against these calls or selling futures against these puts. I mean, who knows?
I also just like the retail basket is so small relative to just the rest of the market, and these headlines that make it almost like retail is doing this.
Sure.
Yeah.
Sure, retail's in it, and retail is what, 10%
that's a good
of the
point.
market. Mm-hmm. It's everybody else that's doing it in bigger size. This isn't. It's always it almost puts the blame on the retail trader, and so I kind of
turning this
on these headlines.
But turning this into something useful, where are you seeing interesting call or put skew in your own portfolio that you can take advantage of?
So a lot of it's funny because it flips so quick. When you have vol at 25 to 30, everything has put skew, extreme put skew, especially in the indices.
Yeah.
Now with the rally that we've had, and some of these stocks like your Nvidias and your Amazons and your Googles, they now have upside skew. You look at these options, and this is a complete flip of where we were 2 weeks ago when we were at lower prices. It just goes to show you kind of the velocity of risk on both sides of this market. I think at some point in the near future, put skew is going to be less of a thing, and you're just going to have tail skew on both sides. I think we're getting to the point where it's pretty obvious that the elevator goes in both directions.
Yeah.
It's not just a stair step anymore.
That's correct.
And
You're right about that.
You know what I mean?
The elevator going both ways.
When you get really hot,
like back in the 80s.
I think Craig. Yeah, thank you. Even Craig mentioned that I think yesterday about how it's it seems like the elevator is a good way of saying it works both ways now, not just on the way down.
Not just on the way down.
Yeah,
and I think an interesting way to look at markets is when volatility is really, really high, you should be looking for tail convexity, on either side of the market or both sides, because we don't tend to have long duration resolve. It's usually the pendulum swinging very, very quickly in both directions. So I don't know. Maybe that's another research piece for the future.
New York's Attorney General has sued Coinbase, and Gemini, claiming their prediction markets violate state laws against illegal gambling. The state attorney says that Coinbase and Gemini's so-called event contracts are quintessentially gambling because event outcomes are outside of bettors' control or amount to a game of chance. What is Coinbase doing?
Up about $10, 205 or so. This would be the high end of its most recent lower range, right? It got into around 160, 170 area, up to about here, 200, 205 or so, where it's going to be right now. This will be the highest it's been since in February, kind of early in February. It does have earnings coming May 7th.
Yeah.
Earnings looming, good IV rank of 62. Stocks in play. May options are good, 40, 50 cents wide. Not the best, but
in a coupling with this, so even I have a hard time keeping track. So Coinbase is going to do prediction markets. So then the next story, Kalshi is now going to do crypto trading. Oh, I'm so tired. So Kalshi plans to launch crypto trading beginning with perpetual futures. Good Lord. Kalshi is licensed by the CFTC, but it would put them in direct competition with exchanges like Binance. They want to get into the prediction market space like Coinbase and Kraken. Kraken set to do their IPO. What are your thoughts on this?
I mean, it's a race to get into everything. I mean, like, this is what, like, an everything app. I mean, This is kind of this is the thing. Why shouldn't it be? I mean, like, you should have all this stuff kind of in one place. And it's all in the same realm, right? The predictions, the crypto, the stocks, the futures, the FX stuff. I mean, like, this makes sense.
it's all coming to market eventually. So if not now, when? Might as well, right?
Yeah.
What's Bitcoin doing this morning?
Oh, good. Thank you for mentioning it, because Bitcoin's up $3,300. That's probably the biggest one-day move I've seen.
Yeah.
We had one 3 or 4 days ago where we got up to around this same level, but we just hit 79,000 on the futures. We're 78.7, up around 4.33%. That's a big move in Bitcoin. Can't question that.
Yeah.
We'll have Ryan coming on.
It's been
today,
relatively
timely.
strong too.
Yeah.
It has
quietly,
been.
like over the last 2 weeks.
It's not the magnitude of the market, but it looks just like the market. And in a percentage basis, it's pretty close.
It is.
It just doesn't seem like it because it's...
You're used to the 10K Bitcoin days.
Exactly.
And it's not, I think it's a little bit more of a mature market now. And so you've had, like those, I don't know, the liquidity is there enough to make two sides. I think a lot of the OG Bitcoin craziness was just illiquidity and hard to trade it and hard to trade on both sides of it. Now with an option market and IBIT being, a massive liquidity pool, I think you've kind of dulled the potential for that realized volatility.
Getting to earnings from last night, United Airlines cut their 2026 earnings forecast to an adjusted $7 to $11 per share, down from $12 to $14 at the start of the year before the U.S. and Israel attacked Iran. The carrier's first quarter earnings did top Wall Street expectations, and its unit revenue was up in every reported segment. Normally, when a company slashes their forecast like that on earnings, the stock goes down, but United keeping its wings up this morning, small.
Unchanged, up $1, maybe $2 if it trades on the offer. But I mean, if you tried to buy a airline ticket, you would think that the stock would be higher. I mean,
sure, right?
No matter what they say, they're charging enough. So I don't know.
Should be a good day for traders in that market. I mean, premium should come in pretty nice.
Yeah, Vol was pretty good. IV rank of 58. You got Love coming today with an IV rank of 87.
Yeah.
So it's got some...
but basically they were like, look, we're not going to make a boatload of money now. We're only going to make like a bucket load of money. Oh, that's fine. I still love
bigger than a bread basket.
Yeah, I still love you, United. Hey, President Trump has announced that a deal with Anthropic for the Department of Defense to use its AI is possible. That comes out after we found out that the Department of Defense is still just using Anthropic. The Pentagon labeled the AI startup a supply chain risk at the beginning of March after negotiations broke down, and the company was like, yeah, we're not going to let you do war crimes. And then the Pentagon was like, why not?
If Anthropic is anything like Intel has been...
I got it. Put it up on the board. Intel results to show if supply chain issues are dimming its AI ambitions. Investors on Thursday will focus on Intel's efforts to sort out supply chain issues. But the company has been strong and dominant, part of the government portfolio. What are we going to do in Intel for tomorrow?
That's what it was before pre-crash numbers there. I saw that tweet. It was like... it's 20 years ago. It finally regained its duration. That's all you need. Over direction. That's all you need.
Yeah.
And it really did it in the last 2 weeks, right? Going from 45 to 60.
Yeah. I mean,
67
it happened into a couple good things, like being added to the government portfolio that exists prior to the last couple months. That I think that kind of helps. But yeah, I have a little short delta here. I don't know how you don't have short delta given the stock has rallied 100%. So I could use it a little bit lower.
Are you going to trade it for earnings?
I'm pretty locked and loaded. I mean, I'm short premium, but I have calls that are in the money at this point.
Okay.
I think like around the 60 strike, 55 strike.
Earnings are April 23rd. That's tomorrow after the close.
Like if we get a $5 down move, I probably scratch the position, which is roughly the expected move.
Okay.
Yeah.
Like
Not today you won't, but I mean, never say never.
No, not today. It's up $1 today.
Yeah. Mm-hmm. I keep talking about them every day, but every day they keep coming out with news. So what am I going to do? Amazon One Medical has launched a GLP-1 program integrating obesity care with Amazon Pharmacy. Amazon's pricing for the popular weight loss drugs will begin as low as $25 per month with insurance. Shares of Hims and Viking Therapeutics and others fell yesterday on the news as investors weighed competition fears.
Amazon up a couple of bucks, but Hims, it looks like it's up about 50 cents, $30 or so. So Hims catching a small little bit. It's had a decent rally the last 5 days or so, but it's on the low end of its range. Amazon
on a tear.
Amazon's on a tear, flirting with new highs. 252 is close to the old highs of around 255 or something like that it made back in November last year.
I have a feeling we're going to be looking at Amazon a lot higher later this year.
Why, have you looked in front of my front door of my house? Is there something there I should look? I got a Ring camera.
I mean, Amazon's done like kind of nothing for many years, and it's not really been the stock at the forefront, or at least the
it's been around $230 since August. It's been lower, it's been higher, and it hangs out.
It just kind of is there, and it just I think they've been on the Anthropic side for the entire.
Sure, and their cloud had its own dominance and prominence, but it's kind of invisible because we don't interact, but we know when it goes down.
For sure, yes. And just Amazon as a product and a service, it's completely changed everything.
Well, imagine now with this GLP, like you go in your backyard, open your mouth, wait for an Amazon drone to drop a skinny pill into your mouth. Boom.
They could do this with anything.
I know.
They could just destroy hundreds of businesses and.
Well, but they also said they were going to be looked at for like collusion because they were bullying companies like Levi's to like be like, look, you can't offer your jeans cheaper on other websites than you are on Amazon.
Yeah.
So like, I mean, but you can't do that, Amazon. You're not the mafia.
But you're bigger than the mafia.
Yeah, they're a lot bigger.
Well, then Amazon said we don't sell your product, and I mean, that type of, and I'll call it extortion.
Right? Yeah.
Sounds like it. That goes on everywhere in business.
Sure,
so,
but
that's the horrible thing about it.
It's especially bad for consumers. I like Levi jeans.
Yeah. Well, the consumer is always the one that suffers, right?
In software stock news, Microsoft must face a mass lawsuit alleging that it overcharged thousands of British businesses to use Windows Server software on cloud computing services. And that could be a pretty hefty fine. Could be almost 3 billion pounds. £2 billion, $2.8 billion.
I don't know. I'm still
Microsoft up.
I'm a little upset about the smoking ban that the UK put out there.
I think that's great. You don't even smoke. Oh, you vape.
No, I don't vape.
Oh, you Zyn.
I don't. Don't tread on me, okay? If I want to smoke a cigarette, I'm going to smoke a cigarette.
What they do, 19 or something like that? Is that what
anybody born after 08
or 09 or whatever?
Cigarettes.
Yeah.
Those people are going to be your age one day. What if somebody told you not to buy a cigarette? What would you say?
Why are you so upset about lung
GFY.
cancer?
Cigar? You can't smoke a cigar.
Look at
What would you do? What would you do if I told you, oh, yeah, that whiskey you have looks nice. It'd be great with a cigar. You can't have one.
Can't have whiskey either. There you go.
Don't tread on me. I don't.
Yeah, no, yeah.
It's crap.
Anytime you try to limit something,
do something else.
This doesn't work. It didn't work during Prohibition. It's not going to work here.
So are you saying you want to claim your independence from Britain? Because, baby, I'm going to hold your hand when I tell you this.
Yeah, we need to
We've already done that.
We need to liberate them. That's what we do. After Iran, we're going to the UK and showing them democracy.
I'm going to hold your hand when I tell you this.
Freedom.
Hey, SpaceX is moving ahead with plans for one of the most anticipated IPOs in history as it hosts analysts this week for 3 days of closed-door meetings at its launch facility in Texas and at a mega-sized data center in Tennessee. Also news coming out that SpaceX could potentially be in talks to spend $60 billion on a company called Cursor AI. I don't know if this is a situation like when you're doing a mortgage, they're like, hey, don't buy anything right now when you're trying to get it approved. And like, is it the same for an IPO? Like SpaceX is going to IPO, but they're also trying to buy a company for $60 billion. Maybe don't. I don't know.
Yeah, I mean, this is an arms race. I think all these companies.
Well, Musk said you're worth $60 billion, but if you work for us for free, that is priceless.
Yeah. Yeah. I mean,
he has a point.
You're trying to acquire a company that, makes it even more diverse in the AI space. Like, it makes sense.
Sure. Well, Tesla on the chopping block for earnings after the bell. What would you like to set up in Tesla?
I have some long delta. I don't feel great about it. I just feel like I feel like at a certain point, Elon's going to have, you're going to have to pick a favorite child sort of thing. And I don't think it's going to be Tesla.
It's up about $2, trading 388. Almost 389. Remember when the markets were making their lows around 340, it's back up to 380, well off its highs of 480, I'll say. I'm just rounding.
Mm-hmm.
To be fair, he does have a kid named X. He does not have a kid named Tesla.
There you go. Yeah. There you go. If you were looking for a little bit of an edge, you're
welcome.
One.
I got that inside.
Yeah.
Tesla has earnings after the market closes today.
And again, just a wild tweet to post. President Trump says that the federal government could help Spirit Airlines. Nobody asked for this. The discount carrier is facing the possibility of liquidation after its second bankruptcy. So then President Trump said that the federal government could help the airline. And he said, I don't mind mergers. And he think that he'd love for somebody to buy Spirit. So, what's up?
I mean, didn't somebody try to buy them and they poo-pooed it?
JetBlue.
Yeah.
Yeah, but there was a different administration. So, but that happens.
Yeah. Oh,
just let free markets.
I think it should be free markets, but there are other free markets that don't seem all that free as well.
Well, another market that doesn't seem all that free, Avis. Budget shares touched record highs as the short squeeze hammers bearish bets. Analysts pointed to a short squeeze that has dealt steep losses to investors betting against the stock. As of Monday, 86.2% of Avis's free floated shares were shorted. But it's kind of an interesting way that the shares are held and by whom. And it's just, what do we do now, baby?
I put on a very silly trade in there. And
silly. I'm a very silly boy.
And it's shockingly not moving all that much. I mean, I'm out a couple dollars, but on the downside with a put diagonal spread. But vol is through the roof. You really can't trade this. There's nothing you can do here but watch in awe.
Barclays did downgrade them.
Yeah, I mean, we've been talking. These companies, Hertz is in the same bucket.
Sure.
I mean, Hertz has filed bankruptcy like 15 million times.
I think you need like $200,000 to short 100 shares of stock. I mean, it's ridiculous.
You can't do anything.
You can't do anything. It's hard to borrow stock.
You can't sell call spreads. You can't sell calls. I mean, you can't do anything here.
Yeah.
Even if you buy the calls, we were joking about the 725 calls that expire in 2 days. We're trading at $100. Even on a $50 up move today, you probably make $500.
The 200 puts with 2 weeks to go are $5.
Yeah, you don't make any money. You can't do anything here.
So hedge funds, SRS Investment Management, and Pentwater Capital hold 25 million shares, which accounts for over 71% of the total outstanding shares.
Yeah, I mean,
And then Pentwater significantly increased their stake, shrinking the available float, according to a filing earlier this month.
Yeah, it took regulators 25 years to reverse the PDT rule.
Yeah.
The last thing they're going to do is, fix silly, goofy stuff like this.
Yeah, just be careful. I would stay away from this, but that's just me. And then finally today, in case bros can't get enough protein, Mug Root Beer has entered the chat. They introduced their own take on protein maxing with Brotein. No, it's Mug Zero Sugar Root Beer and a vanilla protein shake. Okay, that doesn't sound that bad. It's their own take on a root beer float. George Kittle of the San Francisco 49ers and also Swiftie. He's a Swiftie. He is the face of Mug Brotein.
I love a Mug. Mug is a great root beer.
I have it in my fridge.
Yeah.
Yeah, kids love it.
Yeah, caffeine free.
There you go.
Hey, there you go.
Yeah.
I mean, I do this with coffee every morning where I just take my coffee and I pour a vanilla protein shake into it. So, but I'm not calling it Brotein. I'm sorry.
Why not?
I am just not. I refuse. Finally today for my viral video of the day, kids today, they might just be okay. I did not ever think to put these two things together, but this looks like fun if you're young and your knees work. Watch this. So it just says, what happens when you freeze your friend's shoes?
Huh?
Like I said, if your MCL is intact.
I like the guy running with the iPhone. Why don't you just put a pair of these gym shoes on? Oh, he broke up.
Yeah.
Very funny.
I don't think I would survive that. I did. When Mikey was in Japan, I was.
You did this?
No, I was scheming, but this brings me back to that. I was thinking about The Office when they put they put all Dwight's stuff in the
in Jello, yeah.
Like I was like, that would be fun.
That is funny. But looks like fun.
Yeah.
Well, good job out of you, Vanetta. Go rest up a little bit. I know you can't burn the candle at both ends. You had a late night last night with the team. Very, very nice. Yeah. We'll take a quick 90-second break and come back. We got more Tasty Live. Immediately following these messages, we're going to take a look back at yesterday. And seemed like it was a nothing day until the last 5 minutes. We'll talk more about that. About 90 seconds. Tasty Live.
We built Tasty Trade's web platform for today's traders. See it, click it, trade it. Research with fundamentals, endless forecasts, and more. Drill into data, find opportunity, and track the action with hundreds of indicators. Track your options profit and loss history over time per symbol. Note your progress and plan your tactics with a trading journal. See probabilities, max profit, and Greeks in one click. Fund your account and start trading right in the app. The tools, the data, the knowledge. See it, click it, trade it. Join the club. Tasty Trade.
Ready to take your trading skills to the next level? Dive into the world of stocks, options, and futures with Tasty Trade courses. Whether you're a beginner or more advanced trader, our courses can empower you with the knowledge to succeed. Watch as our team in Chicago shows you how to use the Tasty Trade platform and go over the basics of trading. Perhaps you'll learn about a new strategy or a potential product for your portfolio. To find our courses, go to the Manage section of our web platform or head to courses.tastytrade.com. Start taking control of your financial future. Visit our courses today.
It feels good to get smart. Get even smarter with the ultimate how-to guide. Learn 31 different option strategies, covered calls, iron condors, jade lizards. Become a trading mastermind. Get the guide at tastylive.com/guide.
Think you know where ball's gonna go? Test your theories with backtesting. Pick from hundreds of symbols, any strategy you want, and all the data to trade smarter. Tweak the delta, dial the DTE, stack the legs, see what survives. Trade what you want, when you want with Tasty Trade.
Grow a strong community with Tasty Trade's referral program.
When your friend joins Tasty Trade, you'll both receive $100. As your community grows, you get more bonuses. Only at Tasty Trade.
First thing about Tasty Trade is how easy it is.
It's a very quick, light platform.
Whether it's a pool, a puddle, or a sea, you can navigate your way out of it with the Tasty platform, so I love that.
On Tasty Trade, adjusting your option positions is a right click away. Rolling just got quicker. Switch to Tasty Trade and earn up to $3,000 in commission rebates.
Nicky, we are back, son. And you know what that means. Time for a little more Tasty Live with a little Tasty Extra. Look back to yesterday. Right now, you got even the S&Ps and everything up around 5/8 percentage point, or about 45 handles.
It's unbelievable. I thought we were gonna get a little scare the children. I still feel like we need that.
After 2 weeks and 10% rally.
Still feel like we need that. You need that to like be a little bit healthier. I don't know.
I know, but
you're just never gonna get it. I know. I get it.
That's it.
I get it. But I think that's what I was saying this the whole way down. It's like everybody is hedging for this Iran situation, the crash, buying puts, selling out of shares. You had all the stuff talking about retail is now doing covered calls. Like, like all the signs were there that everybody was
in
ready.
Hindsight, but yes. But we were leading long and doing it every day, so I get it. Now, it's a hard pull to go long, which leads me to believe that
yeah, but now you have people, now you're all the psychological stuff, the 200-day moving average, the CPAs, you have the Vecchios, you got everything. Everything is like, everybody's like, oh, yeah, it's fine.
Vecchio might be turning bullish. I saw him
he is bullish. He's back, but I need to teach him about buying low and selling high.
Do your best, son. Do your best. I'm tired of banging my head against the wall. Do your best, will you?
I wanted to talk about real quickly something that is coming up very soon, June 4th. PDT is going away. We have a nice little landing page if you want more.
June 4th is the date?
June 4th.
It's not May the 4th be with you, but it's June the 4th be with you.
Is 1 month from June 4th.
Okay, awesome.
Yes.
After 25 years, look at this.
Yeah, it's crazy that it took this long. It's not crazy that this is going away. It's great that it's going away. It'll be applying to everybody that is in a PDT call, equity maintenance call. There's all sorts.
It all gets expunged.
It all gets,
as you would say in the mafia,
washed away. It's beautiful.
About freaking time.
So we put together a pretty great site that has a little bit about the PDT rule, what it is, if you have not heard of it or been subject to it.
That's that QR code in the right there that you can.
Yes. All information that you need on like which accounts it applies to, which is everything. When it goes away, why it's going away, what the changes are, the new limits, which I think is just $2,000, which should basically apply to 99.9% of the people trading options. So really good stuff. Just check it out and prepare.
If you can't or don't know how to do the QR code, you're a man of my age or a woman of my age, please just email me, bat@tastylive.com.
Yeah, and I posted in the YouTube chat as well. So if you're watching on YouTube, there's a link there. But this will be huge. This will be huge. And we are going to do it. We're going to flip the switch. There's going to be a switch.
June 4th.
We might have a party for it too. I'm working on that. I'm working on a party.
All right. You make it happen.
Yes.
Very good. June 4th. Can't wait.
Quick little recap.
Yes, let's do it.
Let's do it. And it's funny because all these things kind of reversed into the close. So all these numbers, you're going to be like, are they wrong? No, they're not wrong. It's just that in the 2 minutes preceding the close,
things changed.
Things changed quite significantly, which is par for the course in this market.
Yes. I mean, it was all oil related. You got oil up almost $2 right now, just about 2%.
Yeah. I still think, and I think the USO trade, I did it for my fill-in for the option trades today.
I saw. You did an excellent job.
Thank you so much. Thank you. Everybody was like, I got a lot of tweets saying, hopefully this is permanent. I can't keep losing money on these trades.
They're all on the follow page. You can check them out. You know right now he's got his tongue deep in his cheek.
Yesterday, kind of a weekday throughout the session, we were going on our 13th straight day up. We did not make 14, which would have been a record. We did not make 15 either. If you consider just the normal trading session, of course, in the after hours, we basically made it all back and we're essentially flat. But yesterday, a little bit of weakness here. When we look at the Mag 7s as a group, it was a pretty weak set there too. If we go to the next one here, the Mag 7s on the upside, you had a little bit of strength in Microsoft, and Amazon was up a handful there. Apple the weakest. You had Tim Cook announcing the step down. I honestly feel like a 2.5% move is pretty bullish for Apple, given that their leader of
free world,
the stock went up 1,000% under his tenor. So a 2.5% move.
Everybody's replaceable.
That's true. Seems pretty decent there. Tesla has been relatively.
But Apple's been more of a dividend stock these days than the growth stock of yesteryear. I mean, it's been going sideways to nowhere for the last 5 months or so.
Yeah. But across the board, relatively muted. I mean, all these stocks have been pretty strong here.
Yeah.
When we look at the sectors, energy was up, a little bit of a bounce there. I think that's an interesting spot to look for some long delta. I'm long XOM. I have pseudo long delta in USO because I've been doing these 1x2, 1x3 type ratio spreads where I'm selling a lot of tail upside in the shorter duration to capture some of that vol and get long delta and gamma further out in time to give me a little bit of upside skew to my position, but selling a lot of volatility there. Semiconductors have been just on fire. It looks like they're going to be on fire even more today. Financials have been wishy-washy, kind of back and forth. The rest of the market here kind of back and forth. Energy and semiconductors, I think, have been the most consistent in either direction here. When we look at the up stocks, it was a pretty typical down day where the up basket is relatively uninspiring. You had UNH in here as kind of the biggest mover. It had earnings and was up around 350, but still, near the lower end of where it's been trading. You got some of the oil names in there, some of the fertilizer stocks, CF is in there. But other than that, not
the NASDAQ movers that you would see or the big boys from the S&P, right? Completely different group. Kind of almost like where you go to hide.
Yeah, less volatile stuff. Yeah, for sure. On the downside, it was kind of the same story here. It wasn't, you didn't have like a huge day in the market, so it's not like you have any huge names on this list. Coinbase was down 7 and change. You had a little bit of weakness in Bitcoin, which is now being reversed. Coinbase is back up to where it was, kind of the high yesterday. Light is in there, which is one of the high flying optical stocks. It's up $50 to $100 or down $50 to $100 basically, day to day. GE had earnings there. You had Hood down 5 or 6%, but has had a nice little rally. I don't take a lot from yesterday's price action, even more so with the tweet reversal at the end of the day. Kind of tells you that, market's kind of awaiting the next resolve, it feels like here.
Hood is in there. I only mentioned it because IBKR came out with earnings and it's basically unchanged, down small, but IBKR is on its highs where Hood is closer to its recent lows.
Yeah.
So maybe Hood catches a little bit of a bid today.
Looking at our heat map here, pretty mixed bag across the board here. Even in the tech space, it was basically a 50-50 split. Don't take much out of yesterday's.
No, but you big move in energy, big move in oil, and that's why you see all those oil-related stocks so green on the right-hand side. Usually when the market breadth is strong, it's the left-hand side of this heat map.
Yes.
Good job. Good job. Let's take a quick 90-second break. We'll come back. We've got confirm and send, where we go review our emails, and we'll take a look at what's going on in the market right now. We'll be back in 90 seconds. TT Live. Right.
When the market moves, traders need to move faster. Tasty Trade Active Trader Tool offers full depth of market visibility, one-click order entry, and instant position management so traders can react in real time. While others charge for professional tools, Tasty Trade provides them for free. Opportunity can move fast. Seize it with Active Trader. Try it now on Tasty Trade.
Global markets never sleep. Explore them with Forex on Tasty Trade. Get in on 80+ Forex pairs, 24 hours a day, 5 days a week. FX marks the spot. Trade it on Tasty Trade.
There's a beast in the financial world, and it's not the bull. If that's you, join us on Tasty Trade. Genius loves company.
I started trading around 2018, as soon as I got out of college. Stumbled upon a couple of different YouTube videos and learned that way. Truth or skepticism with Dylan Radigan was actually kind of what really caught me in the early stages, because Dylan was sort of the skeptic, and like I was a skeptic as well. And Tom was able to sort of convince him, and that was kind of my favorite show from the beginning. The fundamental principle that present fear of future uncertainty is fundamentally overpriced. In other words, volatility and selling volatility is the key to getting a statistical advantage in financial markets, is the biggest takeaway. And that's kind of just the overarching principle I follow.
First thing about Tasty Trade is how easy it is.
It's a very quick, light platform. It's all on one page.
And with 1 or 2 clicks, you can be anywhere on the platform. Being able to see graphically where your profit and loss zones are. Whether it's a pool, a puddle, or a sea, you can navigate your way out of it with the Tasty platform. So I love that.
Tasty Trade is now on TradingView. Trade stocks and futures directly on TradingView charts with Tasty Trade's low commissions. Try it out and leave us a review.
Diversify your portfolio with stocks, options, futures, crypto, and more. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Tasty Trade. Download today.
We are back, son, and you know what that means. Time for a little bit more Tasty Live with confirm and send. But before we look at those viewer emails, let's look at what's going on in the market. Even the S&P is up 42 to 71.40 and change. You can see here the last couple of days we've been going, I don't know, what do we used to say? Violently unchanged? I think that's what we've had over the last 4 days or so, right there, kind of at the high end of its middle most recent range, from around 7,100, just under that, to just around almost 72. We haven't gotten there yet. We're 71.40 and change. NASDAQ up 195, doing the same thing over the last couple of days. Russell doing the same thing, maybe a little bit stronger than the rest of the group, at flirting with new all-time highs, also up $20. A little bit stronger relative, NASDAQ and Russell this morning too. And the Dow up 280 and change. They've all been, as you would expect, doing the same exact thing over the last couple of days. Volatility down by 35 cents. Kind of seems to have reached its floor here at around 20-ish or so. It's 2060, down 35 cents. That's only a 1 3/4% move on a 0.5 to 3/4% move in the market. Relatively small, I would say. Bonds are up 5 ticks, 114.11. That's where they've been sitting for what seems like the last 10 days or so. Bitcoin not sitting where it has been for the last 10 days. 78.7 after the futures flirted with 79 and went to $79,060. There's 78,700. That's your biggest mover on a percentage basis here, about 4.5% top to bottom. Ethereum doing the same on a percentage basis, up a little bit more actually than Bitcoin, $109, which was 4.75%. But you can see off of its high from around 4 days ago, where it got up to looks like 24.84. It's 24.22 right now, just a skosh off its highs. Oil, I think a little surprising with the market strong this morning, trading 91 and change. I think oil was the culprit yesterday that kind of took the market a little bit lower when oil caught itself a bid where it was trading not too far from where it is right now, which is interesting, right? Yeah. I mean, oil trading 91.30.
I mean, it was up at 95, 96.
Yeah, I'm seeing. Well, the peasant. Yes, the contract here looks like it's 91 and change. It looks like as high as 92 and change. Am I?
No, today. I'm talking about yesterday, into the craziness.
Got it. Gold up $43, 47.60 or so, about $30 off its highs, up around 1%. It's just an asset buying at this moment. Silver, which you just scalped from yesterday, bought a little bit yesterday, took a fucking change on your future scalp, which was nice. 77.70 right now. It got up to 78.60, and you sold it SIC at 78.75. You're an animal. VRT down around $15, Boeing up around $8, UAL up around $2, ISRG up around $10. Today you got Tesla would be the big one, Love, IBM,
ServiceNow,
LSCX, ServiceNow.
One of the software names. I think that's
correct.
That'll be a tell for the rest of the space, or at least some of the bigger names, because ServiceNow is one of the bigger.
Sitting right there at $100, went a little bit lower than 100, got down around 85 or so, but that 100 seems to be a line in the sand.
It'll tell you if they've baked in the pain already or not. A sympathy move, as I would say.
Yes. All right.
Confirm and send. Let's do it.
Let's do it. Wednesday, April 22nd.
There's a lot of attention to who will lead the Federal Reserve. I understand Tasty believes the market determines interest rates and the Fed follows. Yes, markets certainly price most of that in. At least, I think what's Vecchio's stat, like 60% of the time, 55%? Based on the
nominee?
No, based on the pricing in the markets. The expectation, if it's above 55% when you price it out.
55% of the time, it works 100% of the time.
No, the Fed has never gone against the market if it's priced at 55%.
That is correct. Whether there's going to be a rate hike
or cut or stay.
Yes. I thought you were talking about.
No. I'm saying the market prices it.
New Fed chairman.
The market does a good job of pricing.
Yes.
I believe that.
Yes.
But
the Fed watch tool, right?
Yeah, the Fed watch tool, which takes all the positioning.
Yep.
But what would happen if the Fed cut rates when the market wasn't calling for it? Would the market adjust lower? Has this ever happened before? And if so, did the market rally or sell off when it happened?
Yes, and it's done both. I mean, it's sold off when rates have gone lower. Usually,
no. I mean, like if they go against the market, I don't think.
Like you said, I think when the Fed watch tool is above 60, I forget what he said.
It was a little bit lower. I thought it was
could be. But it hasn't happened, so I can't answer the question because it hasn't happened. I don't know what the market would do. I would venture to say, if we were at all-time highs like we are now, and they did something unexpected, that would be bearish for the market. If we were at all-time lows,
even if it was a cut.
Even if it was a cut, because they'll spin it as they have to cut because it's bond prices we have to pay. Some BS. Yes, macro view.
Yeah.
And if we were at all-time lows and they did something that was unexpected, then I think we would rally. So I really think it has to do with whatever the market likes to have a wall of worry, but it doesn't want to be validated with anything out of the ordinary. That's my guess.
I agree.
Again, just a guess.
I think shock is generally going to be bearish, regardless of if it's a bullish thing.
Mm-hmm.
Next one, please. Oh.
Is there anything wrong with selling puts in an illiquid underlying if my plan is to let it run to expiration?
I guess no. I mean, it's going to be hard to price it, and you're probably going to have like wide bid-ask spreads, and P&L is going to kind of swing if you're selling a put with the intention that you're going to like wheel into stock. I guess it doesn't matter. I mean, just generally speaking, this is it's a easy question to write. In practice, when you sell the put in something that's illiquid, you're going to be like, wow, this position stinks. So, I mean, I guess if you have a bone to pick and you want the shares, go for it. I would say it's different on the call side. Like if your assumption is I'm going to sell a put because I want to buy the shares, at lower prices, and if it stays here, I'm just going to collect the premium, go for it. But if you asked me this on the call side, if you were like, I'm just bearish the stock and it's illiquid, I'm just going to sell the calls, I would say that's silly.
I'm going to answer this similar and say you only can control entry. And if you realize that it's illiquid, but you want to hold it through expiration, and you may love buying the stock when it's 100 now, you might like selling the 85 puts and saying, I would love to own this stock under 85. And when it gets to 75, you're not going to want to own it anymore. That's neither here nor there. If you are bullish on the stock and you want to trade it, and you know that the only thing you control is the entry, and you know that by how you wrote it here, sure, go ahead. I mean, do what you want. A lot of illiquid stocks, people enjoy trading. So sure, if that's what you want to do, as long as you know the risk of it. Next one, please.
Is volatility more affected by puts or calls, or is it equal?
I mean, it's going to have an effect on both sides of all products, because that's what volatility is. When you watch volatility rise and contract, it's calls and puts, not just calls or not just puts. Now, something like an ETF where it has like a SPY, Qs, IWM, diamonds, and kind of mirrors the markets, triple leverage, all those things. They usually have another triple leverage if it's bullish, but there's put skew in those products. And if volatility expands or contracts, it's going to affect the bigger tail part of that product side, puts in my example, than it would be on the calls, because the calls are just so much smaller priced relative to the puts.
Yeah.
And in something like a car or anything else that has huge call skew, if volatility would go up, it's going to affect those upside calls. So it really depends on where the skew is, in my opinion.
Yeah, a good point. But just in general, both sides are going to affect volatility and be affected by change.
That is correct.
Next one,
please.
Last one.
Following a recent earnings announcement, I heard that the results beat expectations but fell short of the whisper number. What is a whisper number, and why is there an expectation that differs from the regular expectation? So, I see your expectation and raise you an expectation. Not a regular one, just a different one.
I don't know the exact makeup or where the whisper number comes from. I think it's just like a expectation for large holders.
Mm-hmm.
And this goes to the randomness of earnings. Like earnings don't necessarily, it's not binary whether the earnings are good or bad. It's market dynamics. Like there can be good, quote unquote, good earnings where the numbers are better than expected and the stock goes down. Like there can be bad earnings, where the numbers are less than expected and the stock goes up. This is randomness. That's what it is.
Just remember, the whisper number is an unofficial number.
Yeah.
And if you really want to...
The projection, it's based on past, projections from last earnings report, what they project out into the future, the rest of the market.
Allegedly shared with institutional investors, professional traders, whatever that is. But just remember something. You have all of that at your fingertips. All you have to do is look at the expected move. And 85% of the time, a lot more and better than the whisper number is what the market is projecting, because it's a two-sided liquid market, especially in liquid markets. Yeah. You ready to take a quick 90-second break?
Yeah.
We'll take a quick 90-second break and come back. We got more Tasty Live after this. What comes up next?
We got an option jive.
You're 100% correct. We'll be back with that.
Not going to want to miss it.
Beautiful.
Your crypto needs a wallet. And crypto is better when it's tasty.
You can now do more with your digital currencies with the Tasty Crypto app. We're proud to offer a self-custody wallet for Bitcoin, Ethereum, and Polygon. Transfer your digital tokens directly in-app and access thousands of tokens available only on-chain. Your wallet is your key to decentralized finance. Download the Tasty Crypto app and get started today.
First thing about Tasty Trade is how easy it is.
It's a very quick, light platform. It's all on one page.
And with 1 or 2 clicks, you can be anywhere on the platform. Being able to see graphically where your profit and loss zones are. Whether it's a pool, a puddle, or a sea, you can navigate your way out of it with the Tasty platform. So I love that. You guys have the most unbelievable customer service in the business.
Email support, call support, get through right away.
They actively listen to the customers to make changes to the platform to make it better. In fact, I've never seen anything like it in any corporation in the United States.
Gonna go to Florida. I got Rob. Rob in Florida. What's up?
Hello, Tony and Nick. I am a big fan. My wife and I watch you guys for hours and hours every day. You can be very, very proud of your son. He is doing a great job. I really didn't know anything about stock prices or options or anything until I started watching probably 500 hours of Mike and his whiteboard from years and years and years ago and learned all about it. And we've been trading actively since February and just couldn't be more pleased.
Awesome, man. Thank you so much for the kind words. Really do appreciate it.
Global markets never sleep. Explore them with Forex on Tasty Trade. Get in on 80 plus Forex pairs, 24 hours a day, 5 days a week. FX marks the spot. Trade it on Tasty Trade.
Think you know where ball's gonna go? Test your theories with backtesting. Pick from hundreds of symbols, any strategy you want, and all the data to trade smarter. Tweak the delta, dial the DTE, stack the legs, see what survives. Trade what you want, when you want with Tasty Trade.
It's options. Jive. Niggy, we are back, son. You know what that means. Time for a little bit more Tasty Live with an option jive. Why time is not on your side after 21 days?
A good one. Let's do it.
Let's go.
Why time is not on your side after 21 days. A quick little breakdown of theta decay and gamma risk. This should be a good one. So most people learn options decay and they look at a chart like this where you have this kind of sloping theta decay where you start off at a high, it's kind of slowly decaying, and then as you get closer to expiration, you get kind of the steepness to the curve here. As a result, many people question our early management strategies. We constantly get the email like, theta decay is fastest in the next week or two. Why are you closing trades before the biggest part of the theta decay curve? And there's a lot of reasons why, and we're going to kind of get into those here. So when you analyze the actual decay of at-the-money puts, we're looking at this from 2005, normalizing for Delta and Vega, we see that the theoretical textbook image of decay is pretty much true. So you have kind of a slower ramp or a slower decay from days, 45 to 20, and then it starts to get faster as you get closer. When you look at the days in the trade, you're starting at 45. That's at like that's the
optimal time. I mean, markets are so.
But this chart is looking as like if you started 45 days, how many days in? So at the 45 mark, that's day 0. And you can see it's slower moving as you go from 0 days to 20 days. You've gotten about 20% of the decay, and then when you go from 20 to 45, that same kind of 50% of the time, you go from 60, you get 60% of the decay. So there's a lot there's a lot more decay in that second half than the first half. So the question becomes, why do you close around, that point? And so that's really what we're going to set out to answer here. So the answer is pretty simple. We rarely trade at the money options. So most of the time we're trading these 16 delta, 20 delta, 30 delta puts, calls, strangles, that sort of things. And in fact, out of the money options have a theoretical decay curve that looks more like this. So you have a much steeper decay in those first 20 or 30 days, and then a more flat decay as you get closer to expiration, assuming those options are out of the money, because those options, there's less premium, but it moves quicker as a percentage. So when you're at the money, those options hold a lot of value because they have time value, they have gamma risk, so those options can move to a higher delta very quickly, whereas your out of the money options, even if the stock kind of chops around, they're not going to move as much if the stock stays in that range. And so you have a much faster decay curve that happens for those 20 or 30 delta options with less value. The same dollar of decay is a higher percentage on the out of the money options, but it happens quicker than the at the money options generally.
Well said.
Speechless.
Well said. I mean, you're talking about a decay curve here, and I think we've done a lot of this as a great illustration on it. So keep going.
And so with the theoretical decay curve in mind for out of the money options, we can observe the realized average running P&L of the 16 delta strangle increases at a decreasing rate, which is the same as the theoretical out of the money curve. What this is saying is that
you wait a long time to get paid if you're selling premium. After 21 days, the decay.
After 20 days, it's diminishing margins of return.
Right.
You get
still decays.
It still decays.
And it still has market risk to it, meaning that, this is a strangle, but if you had one side or the other, it would still move with the market, but also the delta is going to change too, right? What once was a 20-ish delta become a 10 delta. On a dollar move, it's going to move half as much on a 20 delta. That's just the math.
This tells you two things. So it tells you that, at that 21-day mark, which is roughly halfway in that cycle of 45 days till expiration, if you're starting there, at that 21-day mark, you've probably realized that 50 or 60% profit target that you're looking for. And moving forward, the value of that option being lesser makes each day less advantageous to you from a decay standpoint. You've already realized, the value there. There's less value in the same amount of risk. It also shows you that in that first week or so, the trade is not moving all that much. So it goes to the point of when you put on a strangle and the first day you're losing money on the trade. That's not a shock. You can see here in the first, handful of days, you're going to have small profit, small loser. It's not going to move all that much. It really starts to ramp up after that first week or so. That's when that decay comes in. But you can't just say, okay, so why not start it at 35 days or 30 days? Because sometimes that decay is going to be 10 or 15% at that point. So you got to kind of start at 45, look around that 21 day. And here's just a more putting the numbers to it here on the next slide. So nearly 75% of the P&L of a 16 delta strangle at 45 days is captured at the halfway mark. So you've gotten most of the decay.
You took the risk. You've gotten most of the decay.
And now that the rest of the 20 days or 21 days, you're getting paid less to take the same amount of risk you had at 45 days.
So if you're going to keep that risk on, it might be advantageous to take that risk, same amount of buying power approximately, and go into the 45-day option on the next month or the 60-some-odd day option and get more of that data decay with basically the same risk that you have in the front month.
100%.
Now, we'll have a little lower probability of success because you'll be further out of the money. Well, you'll be the same distance out of the money, but less time in the front month. So but the payoff is you do that for a large credit.
Yeah.
So
but that goes to the next part of this of gamma risk. This is what people don't think about. They think about the theta decay and the profits and getting every bit out of that trade. The charm factor of a 45-day strangle that starts at 16 delta is about 50% by 21 days, which means that on average, a 16 delta strangle at 45 days will turn into an 8 delta strangle by the halfway point. Basically, if you're selling, a 1 standard deviation strangle, your position gets cut in half halfway through the duration. It's pretty simple there. Since we don't usually open 8 delta strangles, we would generally not keep an 8 delta strangle on the books. So when you look at your position, not only is it that you have profits on the table and all the same risk, but the position is significantly different than what you started with. If you sell a 30 delta put and you wait 20 days and that put is now a 10 delta put, you have to ask yourself, would I be opening this trade? Would I be opening this trade now if I didn't already have it on? And the answer is probably no.
That's right. The answer is probably no.
And that's why you're closing the trade, because you wouldn't put the trade on to begin with. And that's another way.
Pretty simple logic, right?
It's another way of looking at managing trades and managing winning trades specifically. It's because you wouldn't normally put the trade on if you didn't already have it. The thing that a lot of people miss and don't talk about is the gamma risk. So this is really the next key to the puzzle here. So gamma represents the increasing directional risk over time for an at-the-money option specifically. When you have an 8 delta option, there's not a ton of gamma to that option right at the moment. If the market moves significantly, you then bring in gamma risk to that position because it gets closer at the money. But the small movements in between a strangle, for example, with a 10 delta on either side, your delta doesn't change all that much. But if you get a big move, it changes significantly. And so for at the money options, gamma begins to increase right after that 21-day mark. So you'll notice if you put on a trade of 45 days and you're tested in the first, week, your position delta doesn't really change all that much. You might go, if you're selling a 30 delta strangle and you're tested on the put side, your call might go to a 15 or a 10 delta. Your put goes to a 45 or a 50 delta, and you have net 20 or 30 long deltas, even though your trade is right at the money now.
That's right.
It's not like your trade goes to a 60, 70 delta overall. That happens as you get closer to expiration. That same strangle that's now tested and has chopped around right at the put strike, every day you're going to pick up more long delta because the short delta decays, the long delta gets closer to 50 or 100 if it's at the money or in the money. And so your gamma risk increases really significantly. Gamma risk increases about 40% as you get closer to expiration, as you get to expiration where it's at 100%. So your change in relative gamma and delta of your position is about 40% for the first 20 days. When you go from 21 to 0, you have another 60% in terms of the speed of change of those options. So it increases significantly as you get closer to expiration. And that's why this also goes to kind of why I tend to let defined risk trades kind of sit and play out, because this curve is much, much flatter and more linear, because those trades just don't move all that much. You have spreads that are going to move, especially if it's a relatively tight spread. The delta of those options is going to change basically the same until you get to like that last week or so.
Very good. Wrap it up.
So our decision to manage trades is 21 days to expiration is derived from extensive research that holds consistent with theoretical expectations and actual historical performance for out-of-the-money options. Generally speaking, your gamma risk is one of the bigger things that comes into play with naked positions. It's also a diminishing margin of return and theta decay question as well. Since 75% of the profits of a SPY 16 delta strangle were realized by the trade's halfway point, on average, redeploying capital in a new position has shown to generate more profits over time. I think this is something that people get caught up with. Like, I have this option, it's so far out of the money, why not just wait until it expires and keep all the premium? And that value is probably less than what you'd get from a week's worth of decay on a new trade 45 days out in time. The 10 cents or 20 cents that you have left on your put that decays this week and the capital that you're using to hold that, to capture that is far less than what you get with a new trade further out in time.
Basically a piece on capital efficiency right here too, right?
That
I mean,
too.
on top of why you shouldn't do something, right?
For sure.
Good job out of you. Good job out of the E-mini S&Ps. Look like they're regaining their...
Can't stop, won't stop, the E-minis.
Yeah, rallied about 10 handles since you've been talking on that segment. Up around 49. We'll take a look at that. And we got the opening bell immediately following these messages. We'll be back in 90 seconds with Tasty Live.
Look who's back testing. Tasty Trade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at Tasty Trade.
Global markets never sleep. Explore them with Forex on Tasty Trade. Get in on 80 plus Forex pairs, 24 hours a day, 5 days a week. FX marks the spot. Trade it on Tasty Trade.
Tasty Trade's Active Trader interface makes futures markets your arena. Built for the bold, not the bored. Trade CME futures with a single click. From micro contracts to major ideas. And go even further with futures options. Tasty Trade lays out multiple ladders and charts for total visibility. Plus, hundreds of built-in indicators for traders who want a broader view. Tasty Trade, pro-level tools, intuitive design, total control.
Tasty Trade is now on TradingView. Trade stocks and futures directly on TradingView charts with Tasty Trade's low commissions. Try it out and leave us a review.
In the world of investing, a beast lurks between the numbers, ready to pounce. Some traders hide from it, some ride it. If that's you, join us on Tasty Trade. Genius loves company.
Pay for back testing? No. Pick from hundreds of symbols, any strategy you want, and all the data to trade smarter. Tweak the delta, dial in the DTE, and stack the legs. See what survives. Check out Tasty Trade today.
When you trade options at Tasty Trade, you see your probability of profit and loss right where you need it. Earn up to $3,000 in commission rebates.
Nicky, we are back, son. You know what that means. Time for a little bit more Tasty Live with the opening bell imminent in about 2 minutes or so. E-mini S&Ps just up 50 a moment ago. There you go. NASDAQ up 250. Russell up 25. Dow up 49. That all means the market's up around 3/4 to almost 1%. Volatility now near its lows, down around 2.5%. Remember, a moment ago, it was down around 1.5%. So again, a little bit soft here, down 50 cents, trading near the low end of what seems like a little bit of a floor here in volatility. Volatility goes under 20. You might catch yourself a little manster to the market. In the opposite.
I just don't see that happening.
I don't see it happening either, especially with everything that's going on. Market subject to a tweet one way or the other, or any kind of news coming out of the Middle East, which is horrible. Obviously, what's going on. Bonds are up 8 ticks to 114.14. Nobody talks about the Ukraine anymore, by the way. That it's amazing how the memory is short after 4 years. Anyway, Bitcoin 78.9, just a skosh off its highs. Ethereum doing the same. Oil 91.18, up $1.50. Gold up $48 or so. Silver up $1.50, back about 60 cents off of its highs. You can see here about $1.40 off its lows, up 2%. Net gas, I didn't mention all day, catching a bid, trying to get to 3 again, 2.88 for earnings. You had UAL was one of them. It was up around $2. It looks like it's it looks like it's actually down about $1 now. That should help everybody in
yeah, it's going to be a good one.
It's because inside the expected move. VRT it's still down, catching a smaller bid. It was down around 15. Looks like it's down around 8. Boeing BA was down. Is up around $8, same as it was before. There's your opening bell, my friend. Even the S&P is up 50 on the number. Surprised.
And we're off.
Amazed.
Confused.
What else?
A little bit of everything. How could you not be?
Agreed. Agreed.
This has been just an incredible market.
It is an incredible market. Let's see what's moving this market to the downside here. VRT for earnings down $8. UAL down around $2. USO, obviously, everything down small here. As you can see on this list, it's really only the first page here of stocks. Uber down a penny or so. Target, which I think TP is going to mention when he comes on at 9 o'clock, is down small. Volatility products are down, obviously. Let's see what's on the upside. There's the numbers big. Car making it to the list up, it's just up 74. It was just up 66. Now it's up 70. You can see there on 400,000 shares of stock, hard to borrow stock. I would avoid it, but, listen, everybody plays at their own risk. SanDisk, 22. MU, which I was able to get out of on a small little dip lower for about $2 profit on my option trades today, back up to 466 in change. BE catching a bid, 4.5% move, up $9. Coin up $9. UNH up about $6. Circle up around $5 and change. I don't see anything that's conflicting in the market here. What about you?
Yeah, I'm just going through some of my stuff.
What are you going through? What are you looking at? What do you hear? What do you say?
Nothing crazy is happening right now.
From the market,
I had something. I guess the Bitcoin move is really nice here. I don't think the UAL options open yet. They're just really wide.
If they're red and green, then they're open. A little hack there on Tasty Trade platform. So yes, they are open.
Yeah, the Boeing strangle that I did, it really hasn't come in all that much. UAL, I had short.
They are wide.
That really hasn't moved. It basically flat. Yeah, I wish I had more to do right now.
I understand. Sometimes it's okay. You not having anything to do means that your trades haven't reached kind of a profit target that you want to get out of, and you don't have any bad trades, which is the good thing about trading, right? The good trades take care of themselves. The bad trades seem to be the one that get all the attention or the light.
Yeah.
I'm looking at a couple of diagonal spreads that I put on. They're up small, which means to me that volatility is still staying bid, even though it is by 50 cents or so, because we're up near those highs where I had placed them earlier. Taking a look around, I'm looking at my own positions here. I don't really have too much to do on the bad side. When I take a look at my positions right now, I will go to my other account and take a look here. I've got a little bit of short delta in NVIDIA now, basically unchanged on the trade. Amazon, I've got a little bit of short delta on the trade, but it's working out. It's an iron condor. It's become short delta because the stock has rallied a little bit, about $20 away from the call side, about $35 away from the put side. Citigroup.
Up again.
Call the plunge protection team down 47 cents, 131 or so. Gold, I've got a little bit of long delta on a 1x2 put spread there, but I'm back to unchanged, maybe up small in there. GM, got a little bit of neutralish delta there, need about 50 more cents to take that in for a decent profit. Nike, I've been trying, I bought right after a big move lower. drifted higher, up about $1. I'm trying to make $2 or more on that trade. And I've got a SPY iron condor that I've had to roll up the puts. I put it at a 1 standard deviation. My short strike is 704, and believe it or not, SPY is 708. When I put it on, my short delta was around 15. Now remember, if you put something on with a delta of 15, there's about a 30% chance of a touch. For it to touch 2 weeks after placing the trade, that's a big move in that direction, and I'm talking about the upside right now. Even
What do you think for today? Do you think the upside is kind of capped?
I do.
I'm thinking about doing one of those broken wing butterflies.
On the call side?
On the call side, because I have
an ETF that mirrors the market.
Well, I was going to do SPX.
Sure. So you get bigger with a smaller strategy, right?
We hit one last week, which was nice. Paid a little bit of a debit for it.
Okay.
I mean, we can go wider today. Like we could do maybe $1 for it. I mean, you still have upside risk though. You do just like a butterfly. You do a cheapy butterfly.
Sure.
Like a 15-point wide.
Sure. Why not?
Yeah. Like on the upside, just for $1, $2.
Sure, you could do that.
Yeah.
Right?
I would ideally love for this to like expire out of the money.
I ideally would like it to expire out of the money too. I would have no problem with that. Even the S&P is up 45. Volatility in by 50 cents.
I can't. I missed it. Moved to 20 cents now.
There you go.
All right. I did a cheapy little butterfly at the expected move on the upside.
Awesome.
If we chop higher, it'll be a constant.
Chop higher, it'll be money.
Yeah, it'll be a participation trophy for me.
You did it for a small...
small debit, $2.
Small debit, that means you did it in the 0 day, right?
I was looking at it. I'm like, do I want to put $1,500 in buying power out there to do this at 90 cents? Or do I just buy in the risk right now and do it at $2? Because volatility is relatively low. So it's not like volatility is high and you could do the broken wing butterfly, and put $1,000 of risk on, move that long strike,
I moved it twice as much.
You're way further out than I was even
You're still getting,
It's like, do I want to pay 90 cents for that and have the silly tail risk if something goofy happens, which this market is goofy and things like that happen? Or do you buy the wing and just put $2 of risk out and say, you know what, come get me? That's what I'm doing here.
So you did the 25.40, which is $15 wide, by the 40.55, $15 wide. This trading for $2, you did it for $2.20, is like an SPY butterfly trading for 22 cents. Just to give you the perspective, because it's 10 times the size. So it's a relatively small shot in a big product.
Yes. I mean, it's a nothing.
Yes.
I won't even think about this. And I'm not touching it. Just like the other butterflies.
So help me.
I'm not touching it.
Help me.
It's just staying there.
I'm not touching it.
Do I take a small loss on the CMG position and remove a line item from my portfolio?
Did you get the directional move you needed?
Kind of. I had I did a Jade Lizard type position. I didn't cover the full width of the spread on the upside. But
so you had a limited amount of 15, 20,
it's a
40 cents?
50-50 shot here. I don't know. I'm out 40 cents on it. But
so you'll close it.
Yeah, but I just removed a line item, which is pretty awesome when you have 3 pages of stuff.
So it makes it a little more advantageous for you to see your positions. I get it.
Cool.
Get it. Don't have too much more to say here. The S&Ps have had about a $5 move top to bottom. They're sitting up 48 right now. Russell's caught itself a little bit of a bid. Up a little over almost 1.25% right now, $33. So That's the strongest of the group, as the rest of the market is just kind of hanging in there, up around 5/8 to 3/4%. You want to take a quick 90-second break? We can come back. We got What's Your Assumption? Where our viewers have
hopefully we got some new trades there. Before we go, throw up the PDT again. Just
one more time.
One more time. I'm just trying, because we got
twice as nice.
Yeah, twice as nice. Sure. Check it out. Give it some love. Our very own Mikey Butler is the author of this content.
Oh, nice.
So it's good stuff. And there's a little history lesson in there. I don't know. It's just like kind of cool.
Very cool.
Check it out. PDT, it's going away June 4th. Awesome.
Check it out. We'll be back in 90 seconds. This is Tasty Live. We got more with What's Your Assumption? Viewer submitted trades. We'll be back in 90 seconds with Tasty Live.
We wanted to call in because recently some traders may have known there was some crazy activity in the SPX, and for some reason they were stopped out 200 or 300%. And what happened, unbeknownst to us, is the trade desk just emailed us and said these trades have been busted and you're not going to have to pay it. It saved us about $10,000. And then Marty calls us this morning and says, I just want to explain to you guys what a trade bust is. When you really get down into the nitty gritty and you're in the foxhole and things are going bad, when you can reach out to the trade desk and you talk to someone that you've spoken with before who understands your account and the way you trade, that is a feature of Tasty Trade, which I think you guys need to emphasize more, because it certainly has meant a lot to us. It saved us a lot of money, and it's taught us how to trade a lot better, and that's really helped a lot.
Well, thank you.
This was not a paid, you're not getting paid for this advertisement.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from Tasty Trade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. Tasty Trade. Download today.
First thing about Tasty Trade is how easy it is. It's a very quick, light platform. It's all on one page.
And with 1 or 2 clicks, you can be anywhere on the platform. Being able to see graphically where your profit and loss zones are. Whether it's a pool, a puddle, or a sea, you can navigate your way out of it with the Tasty platform. So I love that.
Looking for market insights you can count on? Check out Option Trades Today, your go-to podcast for timely trading analysis and strategies. New episodes drop every Tuesday and Thursday at noon. Available on YouTube, Tasty Live, or wherever you listen to podcasts. Don't miss out on the trades that matter. Stick with the bat, stay ahead of the market. Watch Option Trades Today.
Global markets never sleep. Explore them with Forex on Tasty Trade. Get in on 80+ Forex pairs. 24 hours a day, 5 days a week. FX marks the spot. Trade it on Tasty Trade.
We built Tasty Trade's web platform for today's traders. Drill into data, find opportunity, and track the action with hundreds of indicators. Fund your account and start trading right in the app. Join the club. Tasty Trade.
Nikki, we are back, son, and you know what that means. Time for a little bit more Tasty Live with What's Your Assumption? I think we're spot on. I think that's because we haven't had too much movement in the market. Although
I know there's nothing to
$2 now.
Boring it.
So far. OVX CGI. Let's take a look at that because it did pop yesterday. That's the volatility. Before we get to this, what's your assumption? That's the volatility on oil options. And you'll see here it popped significantly to around 85 or so. It's in by almost 7% with oil higher. It's one of the few rare times that you've seen volatility contract here as oil's gone higher.
I think it kind of tells you that oil is going to be in this range.
That's exactly what I think it tells you.
Like it tells you, yeah, you might see 100, but it's not going to 150.
And we're still in backwardation by about $4 here for the next 20 some odd days. And then you go out here, you've got about $4 worth, $3.50 worth of backwardation too, until you get into the mid 70s as we go further out in time. Yeah. Subject to change, everyone. Subject to change.
Yeah. That car diagonal spread I did. I know I keep talking about it. It's the stupidest trade ever, and I'm sure it's gonna. I think it's gonna work, but
it's not working now.
Well, I'm out $200. I put the trade on.
Because you were out with the stock lower. You were out more, weren't you?
Yeah, because volatility is exploding into the upside.
Yeah, look, IV rank 125.
I put this trade on. The stock was at 535. I mean, the bid-ask spreads are wide, obviously. But the stock was at 535. Stock
I hate everybody talking about this stock.
$250 higher. Yeah, you can't do anything here. Right. $250 higher, and that spread hasn't moved. It just tells you there's just so much vol there.
Yes.
Don't touch it with 10-foot pole.
Can't touch this.
What's your assumption? Let's do it.
Come on.
Are you kidding me?
Volatility in by 40 cents. It was about 20 cents lower than that just a second ago. So volatility hanging in there.
Let's do it.
I'm ready. Let's go.
Yeah. I need some trade ideas. E-mini's up 50.
E-mini S&P's up
71.50. Can't stop, won't stop.
Can't stop, won't stop.
Volatility getting a little bit bid here. I needed this bounce in gold and silver, though. That was nice. Saved me.
So far, so good.
Saved my day.
Saved your tuchus.
Saved my tuchus. DraftKings, Jared. All right.
Let's go.
22.90 right now. I have, my DraftKings position is just gross. I'm short 2 of the 25.
Just gross, did you say?
Yeah, I'm short calls against 100 shares of stock. So I'm long 100 shares of stock, short 2 calls against it. DraftKings is one of the few names that hasn't bounced yet. I'm stepping in with a put spread here. All right. Well, I have 2 calls, so I have an extra put to sell. And I'm long the share. So it is at lows here. And they're not in a great spot. I mean, I love them because they were the first of my betting apps. Now I have 15 of them. So my children.
So this is your first. You always remember your first, right?
Yes, exactly. I'm going to sell a put here at the 22 strike. I would take another lot of stock if we go lower, but I'm now 1-to-1 in terms of my risk. I have 100 shares in a short put against 2 of the short calls, so I'm 1-to-1 there.
Very
straddle.
Good.
So basically a straddle here.
Very good.
22 to 25 would be ideal.
DraftKings.
Yes. So I'm in.
Oh, so you're 1 for 1.
1 for 1. It's a good start.
Immediately. I mean, that's a good thing.
Yeah.
Very nice.
As you could expect out of me, right? Tesla, earnings trade, you're bullish. Neil, Providence, Rhode Island, neutral to slightly bullish on Tesla, but IVR is low. Diagonal feels like the right way to do it unless you guys see something better. I do have crab trade here that's basically hasn't moved. I did the trade when we were right around here. So I'm long the 400 in June. I'm short 2 of the May 450s and long 1 of the 500s to find the risk there on the upside. So I did that at an $18 debit here. So I've got some long delta. Let's see what we can do with Tesla.
All right. See what you do here.
Do we take more risk? More
risk.
You want to get a little spicy here?
Why not? What do you want to do?
I'm thinking.
Talk to me, Goose.
Do I put $1,000 into this? Is the question.
What do you think? What do you hear?
The margin requirement's a little high, obviously, because you got earnings coming up, stock has rallied, high volatility, yada, yada, yada. What do you think the move is? Inside up?
In Tesla?
Yeah. If not down? Like, are you afraid of the upside, Tim?
No, I'm not afraid of the upside for some reason. You got Ivy rank is 13.
That kind of scares me.
That kind of scares me because usually when you have an Ivy rank that low, you get moves outside the expected move. They're bullish for earnings.
I have it on, but what about if we do? You think we'll go back?
Tesla doesn't seem to get the love it's been getting.
You think we get? I mean, 420. It was just 420.
Yeah,
420 has been mentioned a lot by Elon.
Yeah,
Elon's a big 420 guy.
Yes, he is. Yes, he is.
And that it happens to be the 1 standard deviation in the 2-day. What if we did?
That's old school going back to that 420 because he's been mentioning
420 funding
for years.
Secured. Yeah, funding secured. That was the OG.
That's right.
That was the OG pump.
Funding secured.
Yeah,
420.
funding secured.
Mm-hmm.
Do you do? I was thinking 1 by 2, doing long one of the 400s in May, sell 2 of the 420s in the 2-day, but then you're naked and it uses a lot of capital.
Then you're naked. You don't want to be naked.
I think we're just going to do it. We're going to do that. We're going to play the game. It's a lot of risk in Tesla going into earnings. I don't think I love that. But I did a diagonal spread. I agree with you. I think that's kind of the way to play it here. I did May and then the weekly this week at the 420 strike. So I'm long the 400 in May, short the 420 in the weekly. I did the whole package at $11. I kind of like my longer duration crab trade a little bit better just because it's not so binary. But I'm with you. Let's take a shot.
Okay.
Why not, Neil?
Okay. Beautiful. I like it too.
Thank you.
Good job out of you.
Thank you.
Okay.
SPX, 0DT. So we just did the butterfly. Keep it neutral today, going with a 15-point wide iron condor instead of a 20-point wide. Luke in Kansas City, I like your thinking. I'm on board with that. I did the upside butterfly. I have net short delta here, so I would actually like a little bit of a downside move in the market. So I'm not going to go neutral here. I put the little upside butterfly as a please make this expire worthless because everything else will probably work for me. So I'm with you in my SPX trade. I don't consider that this is like a half check mark.
Yeah, I get it.
Not a full check mark.
Not a full check mark. I get it.
Yeah. So we're there, but yes.
Yeah. And that SPX trade, I don't think should be performing that. Yeah, it's right there.
Yeah, it's not.
It hasn't moved.
It's not going to move all.
I mean, I just wanted to mention since they're looking at an SPX trade here right now.
All right, cool. Next one.
Good job out of you.
Good job out of you. CCL neutral. This one is clearly range bound. How about selling a strangle with 24 on the downside, 33 on the upside? I have not looked at these stocks recently. You want to do the 24-33 June.
What do you think here? CCL has had it was one of the weaker stocks this morning. It was lower by about 50 cents or so. It's unchanged now, up 16 cents.
Markets are not great.
What are you thinking?
24.30. I'm going to go to the 25, or you're looking at 24.33. I'm going to go 25.30. Tighter bid-ask spreads, lean slightly short delta, $2.40 some odd cents. There we go. I'm in. I moved it a little closer, more around the 30-ish delta in June.
Beautiful.
So I'm with you.
Okay. Perfect.
Proud, Kevin.
CRWD, June trade.
Just went from back to 450, as foretold. Neutral, June. Kevin, getting back to last year's highs feels early. I see a wide range here, sticking with defined risk. Okay. You're going into June. You got earnings coming up there.
Ivy rank of 50 is pretty good. Earnings are June 2nd, so that would be about 2 weeks, a little less than that before the expiration here.
What's the high? The high is, let's call it 550. The low is kind of 350. I'm looking at
what you looking at, Boo?
About the 20 delta on either side.
Okay.
So 390, we can go like 20 points wide, or maybe let's go 30 points wide. Make it like, yeah. Do like the 550, 580 on the upside, the 390, 360 on the downside.
I like it.
I don't know where the bid ask spread is going to be pretty wide here, so I'm going to work this order.
Work it.
Work it. Work it. 75, no fill there. 850. About one third the width of the strikes, a little bit less.
Beautiful.
Cool. I'm in. Crowd strike, neutral.
Feel ya.
It's wrong.
It is wrong. It's sick and wrong.
All right, dude, that's par for the course for you.
LRCX. LRCX, not something I trade all the time, but you've traded a couple of times. Lamb Research has earnings coming out here too. LRCX has earnings, I think, after the market closes. Let me go look for you. I'll give you exactly when. LRCX. LRCX. After the market closes this afternoon. LRCX.
What do you do? What does a new subscriber do here?
It's a great question.
The premium is like not. I mean, on a $240 stock that has gone ballistic to the upside, and is in the chip space, I would not expect there to be, $16 expected move. I think it was up $16 like 2 days ago.
Yeah.
You know what I mean? Like, it just doesn't. I don't know if I want to do this like in the weekly.
Oh man.
What do you do?
This is a tough one. So they want you to go into the earnings cycle here, right? You've got an expected move, like you said, of $16, an Ivy rank of 83, which is pretty good. You've got the stock on its highs going sideways. I mean, the last thing you should be looking at is what the depth of the markets is. And by depth of the markets, I mean the bid ask. You go out to May and you've got $2 wide markets here. If you do anything in here, it's probably defined risk and short term just for the earnings.
Yeah.
Maybe there's going to be call skew. Maybe you can get an upside broken wing butterfly or something like that. I don't know.
They want to be bearish here.
That's what they want to be. I mean, I don't know if you're going to go with what they want.
I'm going to see where I get filled on this. I think this one's actually kind of interesting. If I
Okay.
can get filled for a small credit here. If you're
Okay.
okay with holding some upside risk.
I like it.
Look at Bitcoin.
Yeah, Bitcoin 79, 3 and change, almost up 4,000, a little over 5%.
They're not going to let me in this trade. Absolutely terrified.
Terrifying.
Now we're getting more aggressive with this.
Okay, I like it. I like it. Even the S&P's a bitty.
All right. So I have the 250, 240 put ratio. So that's 1/2 in the
Okay.
2-day.
Okay.
We're playing this for earnings. And I sold the 275 call against it. So it's basically a strangle, but there's the down, instead of collecting a higher premium, like a $5 credit, you're giving up some of that credit to have that put ratio on the downside. So you're break even on the downside.
It's a short delta trade. It's got 24-ish short delta. That's about what we put on when we put on directional. If you're doing a diagonal trade in just one direction, it would have around 15 to 25-ish deltas. You got the same directional bias here. That's the way I look at everything as delta.
Yes. So you got your downside break even 230 or 225-ish because you have the credit here. But it's a neutral to bearish trade. I would look at this.
Awesome. Awesome.
Cool.
Okie dokie.
All right, so we're in, but that took a while to fill. That was not very liquid. Baba. All right. What are we looking at here? Baba has been holding the.
Put that LRX trade through?
I did. Yes. Okay. I think so. 57 days out. So you're looking at June, the 120 level. All right. Let's do it.
What do you think about Baba? I hate these Chinese stocks, to be honest with you.
There we go.
Ooh, that did.
I'm in.
You're just selling a naked put. 57 days.
Cookie cutter.
Cookie cutter went right to what Hannah in D.C. wanted you to do.
I'm a man of the people.
You're a man of the people. You're right. I don't see that LRCX trade, just let me know.
It's not through? All right.
What did I see?
I will put it.
I see the Baba trade through, so.
Good. Both in.
There you go. Now I got it. Perfect.
Next one, please.
Perfect.
Goldman Sachs tie in May. Okay. Bullish post-earnings flyer here. The 950 butterfly and taking it off as soon as it tags the short strike. Cheap shot with high IV. All right. Stock's up 14 today, so you're looking good, Ty, if you put this trade on. You're doing this in May. You want to do the butterfly. I mean, this stock, it's all the way back to highs.
It's amazing. You mean the S&P's up 56, making new highs?
What do you do?
What does a new subscriber do in Goldman Sachs? They want to remain bullish. I say remain bullish because the stock has gone from about 800 to 940 without a downtick. Ivy rank at 35 is pretty good. I don't see earnings.
No, they had them. They have earnings like early in the session.
Yeah,
early in the earnings season.
Right. Ivy rank is 35. That earnings probably near around April, early in April. You can see the uptick in volatility there. Ivy rank's still relatively good here. What are you thinking? You're going to definitely have call skew in June. Again, this is another one. $6 wide markets.
I think I'm just going to pass on this one. I mean, if you did this, you're probably taking it off right now because you're essentially at 950. I mean, you had a $12 rally today. It's at 940. So good trade out of you. I'm going to pass on this.
Very good. I think this brings us to number 9,
yes,
please. I like the post-earnings flyer there. I like the idea of butterfly. Tough one to do. Delta. DAL. What do you think here? With UAL was up small, I think. Let's see what UAL is doing right now. UAL is actually down $3 to 94.
60.82.5 in June.
Delta down 25 cents.
Justin.
Just in time, Milwaukee, Wisconsin.
Be a little bit more aggressive.
What are you thinking?
If I can actually get filled at anywhere.
Okay.
Markets here are not great either.
No.
Markets are not great. It feels like there's
feels like markets aren't great anywhere?
Yeah, like is everybody just out of money? You know what I mean? Like you bought.
Markets are just getting wide everywhere.
Like there's nobody. Everybody's like, please, I can't buy anymore. You know, there's just nobody. All right, I did the 65.75 strangle. I did it in May. A little bit shorter duration here at 283. Basically a 30 delta on either side. Playing it a little shorter duration. I don't know. June's a little kind of on the long end. We've put some June positions on. I'm just going, this one's a smaller one, lower capital requirement, higher volatility. You got 7-8 points more vol. And
yeah.
No earnings, like earnings already passed.
Right.
I think you kind of try and play the vol here. So
another almost engagement type trade.
Yeah, small. I mean, it warrants a position. 41 IV rank.
Yeah, I mean, it is a strangle, right? I mean, it's the riskiest of positions. IV rank of 41, pretty good.
I got to look at some of my Johnny trades because I have a delta position that should be working today. The stock's basically unchanged, but I think it warrants a position. Why not?
Good job out of you. Let's see what the next one here is. And the last one from Dave in Phoenix, Arizona. Missed my fill near 90 last month. Now it's back down there again. I'm long Netflix for the next few months. He's bullish. Medium term, what do you think in Netflix?
So I had some failed earnings trades that were pretty small. They were diagonal spreads. I still have the 105 calls on. They're basically zero. 37 cents. I actually added some.
So you're in May, June right now, am I correct?
I'm in May, June. I added the 95, 100 diagonal spread June, May. So 95, I'm long the 95 in June, short the 100s in May. I'm thinking maybe add some short premium here too.
That's the position you have on right now, trading around 326. It has, like I said, around that 20-ish delta long type of strategy put on. It does have positive theta decay, trading for around $3.26. That's the position you have on right now. What are you looking at doing in addition to that?
Add some puts or something?
Volatility staying bid here in the market, only down 28 cents, 20.65.
I'm going to pass. I have it already. I'm not going to add here.
Okay. I don't mind that.
We see 100 again. That's great.
Correct would be fine. Look at you, 8 out of 10 here. Pretty good. I mean, that's nice.
Decent. Netflix already kind of.
I mean, we had a $10 move in the market pretty much. Even the S&P's up 45 to up 55. They're up 49 right now. Volatility, that's the only thing that's catching a little bit of a bid here. Well, I mean, volatility's catching a bid. Bitcoin's catching a bid. There are a lot of things catching a bid here. Oil's up $2 still, hasn't sold off. Gold up $42 there too. Let's take a quick 90-second break. We won't keep our man with a tasty extra, Mr. TP, in the house.
Fan favorite
is right. We'll be back in 90 seconds. You're listening to Tasty Live.
Beautiful.
Tasty Trade's active trader interface makes futures markets your arena. Built for the bold, not the bored. Trade CME futures with a single click. From micro contracts to major ideas. And go even further with futures options. Tasty Trade lays out multiple ladders and charts for total visibility. Plus, hundreds of built-in indicators for traders who want a broader view. Tasty Trade, pro-level tools, intuitive design, total control.
First thing about Tasty Trade is how easy it is. It's a very quick, light platform. It's all on one page.
And with 1 or 2 clicks, you can be anywhere on the platform.
Being able to see graphically where your profit and loss zones are.
Whether it's a pool, a puddle, or a sea, you can navigate your way out of it with the Tasty platform. So I love that. You guys have the most unbelievable customer service in the business.
Email support, call support, get through right away.
They actively listen to the customers to make changes to the platform to make it better.
In fact, I've never seen anything like it in any corporation in the United States.
Grow a strong community with Tasty Trade's referral program. When your friend joins Tasty Trade, you'll both receive $100. As your community grows, you get more bonuses. Only at Tasty Trade.
Global markets never sleep. Explore them with Forex on Tasty Trade. Get in on 80+ Forex pairs, 24 hours a day, 5 days a week. FX marks the spot. Trade it on Tasty Trade.
Pay for backtesting? Nah. Trade that capital instead. Pick from hundreds of symbols, any strategy you want, and all the data to trade smarter. Tweak the delta, dial the DTE, stack the legs, see what survives. Check out Tasty Trade.
Today's episode of Market Measures is brought to you by SIBO. SIBO is partnering with tastylive to provide educational opportunities for traders at all levels. Did you know index options like these can provide opportunities for diversification, lower volatility, liquidity, and other benefits? To continue your education on some of the mechanics learned in today's market measures, check out SIBO's Retail Trader Suite at www.sibo.com/minis.
Nicky, we are back, son, and you know what that means. Time for a little bit more Tasty Live with, Tasty Extra with fan favorite, Mr. TP. How are you, brother?
Hey, Dad, I'm doing all right. Nick, good to see you again, brother.
Good morning, sir.
Yeah, it's been crazy trading over the past couple of days, and I got whacked in my Iron Condor, my SPX Iron Condor yesterday. I need some winners today. But you know what? You go back into the ring, and I just got sold a bunch more of SPX Irons this morning, a little bit before 9, because I knew I had to do my makeup and hair for the show.
Of course.
And I get a little indisposed. I get a little crazy with that. They have trouble with working the trades and stuff. So anyway, I want to make sure I get that done. So we'll see how it goes. But it just shows, this is how defined risk trades, especially when it is so bloody sensitive to, the ceasefire is off. Now it's on. Now it's off. Now it's on. The JD Vance is on a plane. Now he's not on a plane.
Before you came on, Nick and I were just having a discussion, and we said almost the same exact thing. I think that you're echoing right now. If you listen to just the news, you'd be so twisted in the wind everywhere. I mean, the market has had some two-sided action. We're at all-time highs right now. But you would be selling into the hole, buying into the rally, selling into the holes, and talking about how everything is rigged here. You really do have to just kind of look at price and just trade price. Now, you just mentioned trading price with your Iron Condor. I have one in SPY2 that I've been rolling up the put side to. I put it on, and the market had rallied about 5 or 6%, maybe 4%. And now we're up another 5, 6, or 7% on top of that. And we're already at a standard deviation. I went all the way out to 15 delta and said, all right, 30% chance of a touch. Let the market beat me. Defined risk, $10 wide. Collect almost 1/3 the width of the strikes. And here you are being tested. But you're down small on the trade if you've rolled up some puts.
Yeah, and that's the key. And you got to stay engaged. You got to stay on top of it. And losing trades sucks. Okay.
Yeah.
Anybody who hasn't been doing this for a while, if you just kind of starting to watch us, Tony and I have been doing this forever. Nick, you've been doing this for 12, 13 years now. You age in dog years in trading.
Yes, you do. Yes, you do. I'm like 90 years old in trading years.
Right.
You two are like freaking dinosaurs.
Nick, Tony, isn't he a charm?
But if you guys were dinosaurs,
charm.
If you guys were dinosaurs, it would be T-Rexes, though. Like you guys are the king of the jungle, Like you guys are the apex.
Making us the apex. Appreciate it.
Yeah.
But think of this, Nick. If you had gone into any other sort of job, as an accountant, as an engineer, as a whatever, okay, you'd spend 7 years twiddling your thumbs, working the copying machine,
Well, I never would have gotten hired because the background checks would have shown all the things. Like those are real jobs, Like I'm a show monkey.
Okay, but so hang on with that though. The point is with that, and I'm not saying that trading is the refuge of the damned, but what I am saying is that if you can make money as a trader, you'll work.
Yeah.
Okay. You're hired because that's the only thing that matters. Of course, you can't, have a criminal background and work for a broker-dealer. Of course. Okay, fine. But the point is, it doesn't matter who you know. It doesn't matter what school you went to. It only matters if you can squeeze money out of the markets. Mm-hmm. And this is especially true if you're trading on your own. If you're an individual investor, you're by yourself.
Yeah.
And you learn so fast trading.
Yes.
There's no training program. There's no we're going to start you out as a junior trader and then work up to a middle trader. That doesn't work. You're stepping in, especially if you're trading now. You're stepping into it. You're stepping off the deep end, and you're getting full trading experience in less than a week.
Yeah, unbelievable. The best. Really is. The best. I mean, these last 5 years, you've seen a little bit of everything. I mean, if you've made it and survived, you've had I feel like
yes, I agree.
You've experienced enough to have some confidence moving forward.
Absolutely.
Well, and this is, and one of the bones I have to pick with the whole industry is a lot of times they'll take a new investor, new trader, somebody who's just starting out, and they make it harder. In other words, I forget what they call like level 1, level 2, level 3 accounts, that sort of thing. Level 1 is just a cash account. You can't trade spreads. Typically.
It's unbelievable.
Yeah.
Typically.
Well, PDT's going away, so that's a good positive.
That has been, I remember writing the logic to code that in on the platforms. It came out in like 2001, 2002, whatever it was. It was a pain in the neck. It was so stupid. In other words, what counted as a day trade? Is it then the question is, when does the trading day actually start? When does it end? So there had to be timers involved. Nick, it is stupid.
It's unbelievable.
And I will have maybe I'll make a little tombstone for myself because I can work with. I'm pretty good with concrete. I can make a little.
What, are you Italian?
No, I'm not. I just play one on TV. And so, no, it's. I'm thinking about making a little tombstone for pattern day trading because it's dead. Hopefully, it will never rise again because it was stupid. It was stupid. It was fixing a problem that the people didn't understand.
Yeah.
Go back.
We lost him.
Come back, TP. Come back. Well, let's get to the slides while we get to TP. We could talk a little bit about.
You were before your time where the market was taking. The market would buy these crappy little stocks. They lost money, and they thought they could solve the problem with these stupid pattern day trading rules.
Yeah,
didn't work. People still lost money.
Yeah.
All right, let's get into this cherry picks nonsense.
Let's do it.
Because one of the things that I saw yesterday, and I know, Nick, your antenna are up for all this stuff, is the retail sales numbers for March came out. Yes. And I'm not a big government data kind of person. I don't really pay too much attention to it, but it just came up as a headline on some of the sites that I read. And the March numbers were the increase was the highest increase in 3 years. Okay. Like 1.7%, higher. Mm-hmm. Why is that? Well, because gasoline prices are high. And to the retail numbers calculation, they don't care where the money's spent. If you're buying Nike tennis shoes or hot dogs, it doesn't matter. You're spending money on gasoline, that gets thrown in there too. So it was again, going back to why I think it's hard to use the place. Yes, it was up, but does that mean that if you took gasoline out, that you wouldn't see that increase? In other words, was the retail spending actually down? Well, no. Because they took it out, and it was still up 0.6%. It was up 0.7% in February. So up, but not up as much. And so, Nick, I think what we're seeing, and I don't know if you see this in your dealings with your colleagues, not colleagues, but the people you hang out with, the people you see, the young people you see. It is a K-shaped economy, and there is no question there are people who are spending money now. No question. And they showed numbers spending on like home furnishings, furniture, things like that. Relatively high ticket items, electronics, appliances, all that stuff showed strong growth. But the bottom line is, if you're spending, $900 on a dishwasher, you're not broke.
Yeah, it's true.
And when I say a K-shaped economy, you get this bunch of people, this population on one side of the K that makes a lot of money and can do this spending. They don't care if gas is $4 a gallon. Okay, it's just right, whatever. And then you get the you don't have anything at all about this, the tariffs and all this stuff. If you add a 50% tariff to a $20 item, it goes from 20 to 30, right? Okay, that's bad. That's terrible. But if I didn't have the $20 to buy the thing in the first place, it really doesn't matter. Okay. Right. And so the point of all this, these retail sales numbers, yes, they are stronger, but they tend to be concentrated in, towards a little bit higher end things. So looking at these stocks here, and I looked at so I calculated 1 day, 1 week, 1 month, 2 months, year to date, which was, obviously for 2026. And Tony made a point a few weeks ago, actually 1 year, 365 days ago. Right. A lot of these retail stocks have been very strong over the past year. And it's been a mixed bag over the past couple of months, especially with the whole Iranian war and all that stuff that punished them. Okay, and the market went down. The market sold off, granted, and not surprising, the retail stocks fell. But over the past month or so, though, specifically the past 3 or 4 weeks, they've been pulling themselves up off their lows. Like Kohl's has been strong. Kohl's has had a massive swing. If you look at a chart on Kohl's, you don't have to do it now, but just pull up KSS on a chart and you see this massive swing over the past 6 months. Macy's has been relatively weak, pretty flat over the past few months. Again, the reason I look at these symbols, guys, is there are a lot of retail stocks, but most of them have crappy option markets. And to the point that I don't care what the story is, if it doesn't have decent options to trade, I'm not interested. I can't work with it. Okay. So Kohl's is decent, Macy's is different, Amazon, obviously I trade Amazon a lot, TGT's okay. Some of the other ones, Baba's not bad, but Home Depot, it can get filled in Home Depot. So you got to pick your spots. But these symbols have 3- and 4-star liquidity indicators. So that sort of gets you on the dance floor with this stuff. So as we go to the next slide, here's some of the relative performance. And I talked about the swing in Kohl's we saw. So KSS is that brown line.
Okay. That's quite the swing.
The skid mark here. So you saw this massive rally in early June, then it got crushed. It just got crushed. And so you see the other one, Target obviously rallying up. Walmart, pretty strong. TJX, what is that? What's TJX?
TJ Maxx.
TJ Maxx.
A Mikey Butler favorite.
Thank you.
Mikey Butler.
Mike Butler loved it. Yes. Well, he's a stylish kind of guy. So TJ Maxx, those have all been relatively strong. Those have been propped up over the past few months. But a couple of others have been laggards here. Stocks like Macy's and Kohl's, those have been sort of, just starting to peak up a little bit. So that's what I'm looking at for trades. Let's go to the next slide. And looking at the volatilities, Kohl's volatility has spiked higher. Everything else has a decent volatility in the 40s, typically, sometimes in the 50s. And earnings are coming out for these stocks in the next 6 weeks or so. Yeah. A lot of them are coming out towards the second half of May, towards the end of May, or even in the early part of June, or in the middle of June. So we've got earnings coming up. These stocks are profitable still. And one of the things that I'm looking at for these trades, why would I consider bullish trades in something like Macy's or Kohl's? 2 reasons. First of all, the consumer spending, to tear a phrase from the report, seems resilient. Okay, fine. You know what? If $4 gasoline in a shooting war in the Middle East doesn't scare them, what will? That's the argument. And the companies do pretty well beating earnings. Over the last year, both of these stocks, Macy's and Kohl's, have beaten their earnings estimates. The other point is they are relatively low-priced stocks, and that's important. And we're talking about level 1, level 2 sort of accounts, is because of their low prices, the margin requirements, capital requirements on short naked puts in there are manageable. They're not cheap, okay? You still have to put money up for them. But if you have a $2,000, $5,000, $10,000 account, that range, you can, if you've never sold a naked put before, something like KSS or M could be a way to start playing with that. As you go to the IB ranks, let's go to the last slide. And the ranks are all higher. So so stocks like KSS and M, they fit a couple of the basic criteria. A, they're liquid. The options are okay to trade. Second, their volatility is higher. Third, their stock price is relatively low, making the capital requirements manageable. And if you are bullish, the skew is pointed to the upside with these things. The market is expecting higher prices, or I should say, let me restate that. The market sees risk to the upside. Doesn't mean the stock's going up. That's not what it's saying. What it says is they're afraid of risk to the upside ahead of earnings for these two stocks. So that's why I was looking at some bullish trades, selling naked puts in KSS and M in the May expiration ahead of earnings. That if you don't want to trade through earnings, which I don't blame you, selling an out of the money put, I forget what the strikes were exactly, but a few strikes out, you collect decent credits, get a decent return on capital for selling naked puts in there.
I like it. I went to Walmart and Home Depot, took a little bit of a upside directional play there. I think Macy's, maybe I should buy a couple shares of stock, try and scalp some stock.
I mean, I think
very good.
I think that's probably one of the ways you can go. Yeah, sure.
Let's sell the 19 puts. Sell the 19 puts in Macy's.
Okay. I mean, he got.
I mean, it depends. Yeah, it depends.
Did we lose him?
I don't know. There we go.
No,
Watch me for a second there, guys.
There you go. You're back.
I'm sorry.
Oh, that's okay. That's okay.
Nikki, they heard us talking.
They had to shut us down. They were like, no, don't take
please,
our
don't
alpha.
go into Macy's.
Don't go into Macy's. We're scared. Please, sir.
All right, good. I'm gonna let you go, TP. You have one more slide?
No, that's
you're
it.
good.
No, that's
Thank
it.
you.
All I'm saying is, folks, if you're trading in any of this stuff, don't take any more risk than you're comfortable with these days. Sell a naked put. Just keep your helmet on and keep focused on what's on the market. Just keep your eye on it.
Even the S&P is 71.65 or so, up around 65 handles, just rounding up here, about 20 handles off its trading highs of around 71.85 over the last couple of days. NASDAQ up 340 and so, Russell up 19, NASDAQ's the strongest of the group, Dow up 380 and change. Volatility in by 40 cents, off its lows by 20, off its highs by around 30. Interesting market, TP. We're going to take a quick 90-second break. Thank you so much for coming on. We've got more Tasty Live with Q and Ryan. I didn't even mention Bitcoin, which is up 4,000, a little over a 5% move there. I know Ryan will be smiling. We'll be back in 90 seconds. Tasty Live. Thanks, TP.
Thanks, TP. Look who's back testing. Tasty Trade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free?
Get back testing at Tasty Trade.
We built Tasty Trade's web platform for today's traders. See it, click it, trade it. Drill into data, find opportunity, and track the action with hundreds of indicators. Track your options profit and loss history over time per symbol. Note your progress and plan your tactics with a trading journal. Fund your account and start trading right in the app. The tools, the data, the knowledge. See it, click it, trade it. Join the club. Tasty Trade.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from Tasty Trade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. Tasty Trade. Download today.
First thing about Tasty Trade is how easy it is. It's a very quick, light platform.
Whether it's a pool, a puddle, or a sea, you can navigate your way out of it with the Tasty platform. So I love that.
Global markets never sleep. Explore them with Forex on Tasty Trade. Get in on 80 plus Forex pairs, 24 hours a day, 5 days a week. FX marks the spot. Trade it on Tasty Trade.
Nicky, we are back, son, and you know what that means? Time for a little bit more Tasty Live with these guys. Tasty Trade World Headquarters, your friend of mine, Mr. Q. How are you, brother?
Fellas, how's it going? Doing well. I gotta say, Nicky did a good job yesterday with the DDD. I had to put some respect on his
Seat's
name.
getting hot.
He did well.
Seat's getting hot, buddy.
Everybody's replaceable.
Everybody's replaceable.
Everybody's replaceable.
Everybody's replaceable. Thank you for the well wishes for those who missed me for the half an hour or so that I was out of the show. I just had to go to the. How are you busy on the desk? Can I tell the story?
Yeah, please. No, do.
This is a ridiculous story. I mean, this is the most. This is
nothing. Tell me you're a boomer without saying it.
I'm worried that the dementia is coming quicker than I thought.
No, I knew it was there.
I know.
Just nobody believed me.
Yeah.
So I don't know if you know. I don't know if you know this. I've about a year, almost to be a year this month. I've been wearing hearing aids so I can hear. 30 some odd years, or
things are going quick.
25 years or so.
I gotta get back on that home search. I get the emails like every week, like a new spot opened up at Tranquil Place in Deerfield, and I'm like,
Tranquil Oasis.
Yeah, the Tranquil Oasis. Like they have, a nice little cafeteria for you. They have game nights. You can play bingo. Like it's really, it would be good for you.
Extra wheelchairs to wheel me around.
Yeah.
Anyway, before I was interrupted, like I was saying, 25 years of people yelling in my ear. I mean, they say it was the sound of a jet engine most days. Took its toll on me so that I could provide the lifestyle that people became accustomed to that relied on me for their food and shelter. That being said, after last year, I've been wearing hearing aids with a little plastic thing, and you clean it every once in a while. And I was cleaning mine, and I don't think I put it in tight enough. I wore my hearing aid for the rest of the day, took it out, and it wasn't there. So I figured it fell on the floor, but I felt like something was in my ear. So for the last 6 months, I've had this plastic thing lodged deep into my ear. And I went to the doctor yesterday, and I said, you got to take a look at this because my wife thinks I'm crazy because if it was been in there for 6 months, it would hurt. It wasn't hurting me. I just could almost like feel it. Like when I went in with a Q-tip, I could feel like there was something there.
Something in there.
Kind of thing. And he looks at it, he goes, nah, it just looks like wax. And I'm like, I don't usually get wax. It's not something I do. So the technician came in, and she's a nice young lady. She started flushing it out. She's like, man, I think there's something stuck in there. and they go in there with like a long tweezer. They pull out the old plastic thing that's probably there for, my wife says 4 months. I think it's 6 months, but it was in there. I can hear really well now. So it was one ear.
Wait, so do you have the hearing aid like in both ears?
Yeah.
Okay, so you had the hearing aid on top of the plastic.
That's right.
It was like the little, like on like a headphone, the little plastic.
Yeah, like the little plastic. That's exactly what it's like. The little
lodged
plastic.
in his freaking ear for the past, however long.
Oh my God.
Yeah.
Good for you for getting a hearing aid, though.
That's
like some people.
They're so great. You can't even see them now.
Yeah, you
People
can't
don't
even see them.
You didn't notice, right?
Yeah, I had zero clue.
Yeah, I've been wearing for a year.
Yeah, nice. All right. And you had freaking plastic stuck.
I know.
In your
Yeah.
Ah.
That's how you get like a weird infection and then it's all done.
Nothing. Not even any
I can't
redness
believe
in the
nothing
ear.
happened.
You know why? Because it's made for that's what I was trying to tell my wife. I go, I'm not feeling any discomfort because it's made for your ear. Like whatever the plastic is, it's not, irritating your ear. So it was just clogging it.
They said the chat is actually saying, did they also find the brain worms?
They may have.
It infected
My
your
name's
brain.
not Kennedy.
Yeah. Did they find that in there too?
Yeah, well, all right. Well, you missed my big announcement yesterday. PDT.
Which was? Oh, well, go over it again. Tell it to me again, man.
Yeah, 'cause I'll tell it
I've
just
been
for
pounding the pavement for this. I know prior administration was pounding the pavement. I'm sorry they can't be here. But as proxy, I will take all the glory for their hard work.
For
But
sure.
Go ahead.
Yeah, so PDT will be gone June 4th. And so that means if your account is classified as pattern day trader, the restrictions will be removed.
Bye-bye.
If you're set to closing only for any day trade calls, which is a slightly different restriction, closing only for that should also be removed. We plan to be ready on day one for June 4th. That's the earliest. Yes.
I say I quit. If 48
Do it,
hours after this patent date, if you guys are not prepared for this.
48 minutes.
Okay, perfect. But I'm going to give you
ready
48 hours because I love you guys. Okay? You're my preferred broker. I love you guys. I feel like I was instrumental in its creation. I'm going to give you 48 hours. I give him 48 hours. I created him. I'm going to give you 48 hours. Okay?
Okay.
All right.
I'll take it.
Okay.
I'll take the extra grace. But yeah, we plan to be ready right on June 4th, and that's the earliest that we can implement the rule. And so if we could implement it now, I mean, we'd love to, right? But then, so if you're restricted due to anything PDT related, you'll no longer be restricted. And then also, like, there's just no more classification as pattern day trader. So you could do as many day trades as you want. There's no like.
So if you were in purgatory hell of patent day trading where they.
You're out.
You're out.
You're out. Freedom. It's like Braveheart, like when he's on the table and they're cutting him open.
It's a great scene.
Freedom.
It's a great scene.
Yeah,
the end of a love story.
This is like our Traders Liberation Day.
Yeah.
Is what I've been calling
Great. And there's nothing you have to do. So this will be automatic. You as the customer do not have to click anything, do anything, change anything. It's all just going to be like it never happened. Cut away.
Rule is just gone. The only like one thing I'm upset about is like I know that rule down to a T, and all that knowledge is now useless.
Now you can forget it. It's great.
Yeah.
Well, but
Now
then you'll get to tell the new customers years from now, hey, listen,
Back in my day.
Once upon a time, back in my day, you couldn't even trade this.
Oh, I am so gonna be that guy too. I'm gonna be like, back in my day, you had to have 25,000 to be able to date.
You have no idea
You're
how
about
hard it
20
was.
years from being able to do that, though.
Oh, but I will do it for sure. Like I'm just saying, I'm gonna 100% be that guy.
I love it.
But so there's no action needed or anything like that. Like there's a PDT reset now, right? But you won't need to use that. That will also be gone, and we'll be all good for all that sort of stuff.
Beautiful.
It's great.
Good job out of you, my friend.
Yeah. I mean, I was instrumental to that rule getting removed as well.
Everybody's going to take credit for it now. Why not?
Yeah.
Why not? Rightfully so.
All right. Well, let's get to some business here. Top 20 symbols going through the system and their IVR. At number 1, we've got Micron with 72, Tesla 14, Microsoft 91, MSTR 53, iBit 34, NVIDIA 33, AMD 69, USO 55, Apple 59, Boeing 70, RH 32, Palantir 40, SLV 38, Oracle 56, CLS 73, PayC 101, TWLO 87, GLD 40, Meta 71, and Amazon 54. Bit of a eclectic group there.
Yeah, a little bit.
Top 20. And like Boeing hasn't been there for a
what is
while.
Robinhood?
Boeing had
Or,
earnings.
not
That's why it's active and in there, going up $6.
RH must have had earnings too, and Paycom as well. I mean, I don't know. RH is basically unchanged. That's a weird one.
RH.
Is that tariff?
That's earnings June 11th. I don't know why it would be so active there. I'm looking at, I don't know.
The funniest thing, that's probably like a tariff thing. Like everybody thinks the tariff refund going to help like an RH or somebody that's like importing all that stuff, which it probably will. But I was talking to my boys at Flowers for Dreams, local Chicago company. Have you ever used Flowers for Dreams?
I have not, no.
They do good. They do good work. They donate to local charities. Very nice. I was asking him, I was like, so are you guys getting a big bag from the tariff refund? You're going to get that slush fund, because we got 160 billion. He's like, no, it's the goofiest thing ever. It's going all towards like basically the importers. So, the importer of the flowers gives it to a distributor. The distributor, sends it across the country to the flower shop, and the flower shop basically passes on. The cost started at the importer, and so the importers are getting all of it. So it's basically the megacorps that get this 160 billion. Like not zero of this goes to.
So like the fee will get passed through to the small businesses, but the refund
and that goes to the consumer, and the consumer pays it. So all the tariffs go straight to the consumer, and this whole refund is all the importers, the companies that can import themselves, like Walmart and Amazon, all these other companies. None of it gets pushed down the line. So they can't even apply for it.
Doesn't sound fair.
Which is crazy.
Yeah.
Horrible.
Yeah.
So.
But after what happened with all the COVID relief money that went God knows where, I mean.
Oh, that went everywhere. That was just an increase to the denominator. That was just like that just got pumped into. They should have flew planes over the country and just dumped it on people. That's what that was.
I should have never mentioned that. I actually hate myself for mentioning it. I'm going to let you go. Because I know I've got my man Ryan coming in, and it's rare that we get a 5% move in Bitcoin and we get Ryan coming on to talk about crypto.
That's a great job out of him.
So I'm going to let you go. Oh, let me hear how good yours is.
Well, no. You can't spoil it.
My man Ryan, crypto, what's up?
No love for you this morning, Tony.
Every day. I'm hustling.
God.
Well, it's par for the course. I mean, in previous administrations, he was just a punching bag the whole time. At least I tell him it's a team game now. At least I say, like we're a team here.
Yeah.
Before it was, me lord, you're amazing.
Where's your took us?
Yeah.
I mean, we've known for some time everyone's replaceable,
yes.
But that nursing home thing.
That was
a little hard, right?
That was a low blow.
That was a little low.
I know. But I want to get him a good one. I want to get it. I want to make sure it's a good.
Took care of it for myself. I'm not gonna. I didn't want to rely on my children to take care of me. I figured there would be a.
I've been looking
payback kind of thing. You know what I mean?
Yeah, I've been looking.
I took care of it for myself. I'm all good.
Looking for one of those ones like like the.
You can stop looking.
No, I've been looking for like the innovative ones. Like
the innovative ones.
Yeah, like Hooters closed down. In the last year.
I see where this is going.
There's got to be a place that hired that staff. Like I feel like that could be a good one for you,
Ryan.
That sort of
right
thing.
this ship.
Like one that could brings you back to Club Med, like a Club Med, where
Club Med back in the day was pretty good.
I know. Well, that's what I'm saying. It's I want one that's bring your parents back in the day, that sort of thing.
Somebody's making money off Bitcoin. 79,200 on the futures. The cash traded over 79,000.
Did we get 80?
No, we did not. We did not get 80. I'm going to zoom in a little bit here so you can see the magnitude of this move here. Over April has been a wonderful month, starting in the low mid 60s, working its way up, flirting with 80. What gives? What's going on? Speak to me.
XRP too moving.
Mm-hmm.
Everything's moving, baby.
Yeah.
I mean, we talked about the price action that you want to see that would be a bit more encouraging, and I think this is clearly it. Starting to see some signs. That said, I always want to caution people around getting too excited, given you have some short-term volatility, and that's to both the upside and the downside, because a lot of that is driven by liquidations in the perp market. So in the last 24 hours across crypto, we've seen about 200 million in liquidations, which is sizable. Bitcoin alone has been about 100 million. It's nothing massive, but it's relevant. Put it that way.
Sure.
And so we'll see. Do you get flows into ETFs that support this? Is real buying going to show up? But I think, look, as long as the equity market and everything else continues to move higher here, and if we are entering into a more, bullish macro backdrop, and there's less of this concern over stagflation, then I would expect that you see much higher crypto prices along with everything else, because it is ripping. And it's not just the S&P, but you look under the surface and you have some of these things that in other environments just absolutely blow up. I'll use profitless or pre-revenue nuclear stocks as an example of that. Everything is moving higher for now. And some of that, of course, is just short covering. But if that's the environment that we're in, then this has probably got some legs above 80 to 85. We'll see. That would be the range that I would look for in terms of what's being priced in. But let's jump into the slides. Got a couple things to run you guys through. Cool. Take a look at this here. So absolutely looking better. 1 month performance is in the green. Where we go back a week or so, this looked pretty bad. We haven't seen that price momentum, those moving averages flip on the weekly basis. If you like to look at that stuff, I do. But just looking at price performance, starting to trend in the right direction. So that's step one, volatility coming in as well. This isn't whipping people around in the same way that it was a couple of months ago. So I think that's a positive. If we move to the next slide, we've got some relative performance here. And so this, again, has been ETH over everything. Short term, you got a little bit of noise here. Of course, the higher vol, lower market cap stuff is going to catch a bid. Talked about liquidations across the board. But pay attention to the 1 month, the 3 month performance here. It's still Bitcoin. Bitcoin's going to lead, right? If we're looking for altcoin season, and if you want to find that kind of FOMO opportunity in the market, you need to see Bitcoin move a lot higher first. Yeah. ETH will follow.
Now, hold on a second, because you just said something a minute ago. You said pricing around 85,000 on Bitcoin. It's just under 80,000 right now. It's come from 65,000. I'm just doing quick math. 65 to 85. That's about a 30% move.
Yes.
From the lows, yeah.
From the lows, and you're thinking 5,000 more is all it has at this point?
I would think. No, I mean,
in a relatively short period of time, I could see it taking a breather. But what did you mean by that? I'm so sorry.
Just in terms of the next level that I would kind of look.
Triple digits. I want triple digits.
Oh, I
don't need. I want.
I do too, and I think you get that over time. If I look at this, and we'll talk about the one standard deviation moves in a second. Okay. That's kind of where I'm anchoring.
Yeah.
Where are we right now in terms of price? That can change, of course. And then what is volatility implying? Well, that implies over the next week, you could probably get to 85 if this continues to run. At least we're seeing, that range move higher, even though as volatility is coming down. But yeah, absolutely. When you have an asset that can go down 60% in the matter of a couple months, you're in it to win it, and you want to see this go up 100% over the next year if that's the trade. But here's the thing, guys, as we've talked about, we're still in a bear market. We're still deep in negative territory on a 3 month basis. So until we really see those signs change, I'm not getting excited that we're out of the bear market or that there's 250,000 Bitcoin on the horizon or anything like that. But from a short-term trading perspective, absolutely looking a little bit better. Maybe you can buy a dip in here, and I would look for maybe 85 or so, 90 if you want to look for it to extend on the upside.
I think because my dad was kind of talking about this is a good move in Bitcoin, but it's not that great, even though it's...
No, I think it's a great move.
No, I know. But
I've been long Bitcoin on the way down, more in the 70-something handle. We're 79 right now, so I'm up a couple dollars, but it was sucked on the way down.
I think we have this kind of deja vu / memory of prior times when markets were going nuts to the upside and Bitcoin was moving $10,000, $15,000 in a session. It was just these incredible moves.
Yes, they were incredible moves.
They were just, it was $1,000 in a clip.
Sure.
Real fast. And now it's kind of more of a mature market where it's performed and is probably outperforming the market. It's up 20-ish% at this point, 25%. So it has outperformed the market as a whole. It's just not the same, it's not that FOMO, illiquidity. Everybody kind of has access.
But that should make it better.
Yeah, I think it's a better thing for the long duration of this asset. But I think that's just you kind of get that memory of like, oh my God, you remember when Bitcoin was going like $20,000 in a week?
Yeah.
I don't know if that's like in the cards anymore. Is it? Do you think it is?
Yeah, I think so. It's just not within this environment. I mean, Bitcoin is still down about 10% year to date, where the S&P has been on a rip. So if you measure this off of the lows, absolutely. If you were able to pick that bottom in February and you've held both of those throughout the same period of time, this has outperformed. But that's off of a 60+% drawdown.
Sure.
And you've only gotten a little bit back. We were consolidating in range bound for months, and maybe we're breaking out of that range. And so I do think that you will see that. It's just that tends to be an environment where interest rates are zero, money is basically free, there's so much liquidity, it doesn't know where else to go, and the Fed is open.
That's all scary. That's all. That counters that.
That's happening now besides the interest rates, which are like not that high.
Yeah, but the last time, we had the catalyst to set off that rally was back to your point earlier about dropping the money out of the helicopters over the U.S. Just a little bit of a different environment here. Now, yes, the S&P is at an all-time high, but I think when you look at Bitcoin and you look at this on the margin, I do believe you get back to that environment. You're just still not in that environment. That's an environment where you go back to what happens on kind of the fringe. Fartcoin is making millionaires out of people. And that's just not where we are right now. So it's better price action. Don't get me wrong.
Do you think that time will return again?
Yes.
Think so?
Yes. And it will be in something different.
Yeah.
And, look at what we're seeing right here, right? You could go back and you could say, oh, that was the craziest thing I've ever seen with GME and the short squeeze. Do you think that'll ever happen again? Yes. It will continue to always happen. Maybe not in the same names, maybe not to the same magnitude, but I think that these things repeat. It rhymes, at least.
I don't know. I tend to think that some of the the Fartcoin stuff, I don't know if we get back to that world again.
It won't necessarily be in those things.
It'll be something.
But I can guarantee you there will be a hype cycle in something. It's just human nature and irrational behavior.
Yeah.
And you also have to remember, while we talk about this all the time, people don't own this, not in size. No. I'm over here saying, hey, look, the numbers show that you should probably hold 1 to 5%.
I think, we were aggressive saying 3%. I mean, on the show.
Many years ago.
Before, what's that?
Many years ago.
Many years ago. I think
discussion.
that was a decent call.
And I can guarantee there's still people in the chat, and this is no shade on anybody, but there's still people that are saying this is going to zero.
Yeah.
And so as long as that's the whole internet is going to zero theme, then I absolutely think that you have the potential for larger upside moves. And you still have downside volatility in this as well. You have a different investor base, a larger base of institutional investors. That money is sticky, tends to be. So I think there's an argument that your drawdowns aren't going to be as deep. But I think there's also an argument that you don't go up 1,000% per year.
Yeah.
But could Bitcoin as a, let's call it $100,000 asset go up 50%? The volatility implies it. The options imply that. And so I do think that, you'll get those moves. You'll have the 20% up week.
I'm gonna have to go open my Coinbase app, get some Fartcoin in my portfolio.
Just because he mentioned it?
Yeah. Is that the Trump ones too, like where it's like Drump? Or like
all of them. You need them all.
Trump.
Yeah.
Like
diversify.
Sprinkle the infield?
Yeah, sprinkle the infield on some of those ones too.
Stop yourself.
Some World Liberty token.
Well, for now, in this market, I think you probably want to just be long Bitcoin and maybe some ETH here. The other stuff will catch a bid. Yeah. But in terms of where, I think you might have some legs to run higher, I still think it's in Bitcoin until you get a different signal in the market. Bitcoin market cap dominance is still about 2/3 of the market. If we jump to the next slide, what do we got here? Correlation. So we showed this previously, still at kind of relative extremes here. Strong inverse correlation with the dollar. I think that's probably the most important here. And again, if there's any short-term pullback in equities ever again, I would expect that Bitcoin off of these short-term euphoric levels, it pulls back a bit.
President Pump will not.
President Pump?
President Pump. You will not 7,000. That's it. That's all that's your dip. That's it.
We will see. Yeah, I mean, who knows? But this is how it has been trading. Doesn't mean that it will continue to trade like this, but I think it's important to be aware that this is all the same thing. It is not specific to crypto. It's just that crypto has a higher beta. To the next and last slide I think we've got here are the expected moves. So to my point earlier, Tony, this is why I think you can get to 85 just because the option market is pricing that in. So Bitcoin price has gone up, volatility has come in, range has tightened a little bit, expected move is about the same as it was 2 days ago. But we're looking for 83 or so, 80, 85, whatever you want to call it on the upside, 73.8 on the downside. You could pull back into, that's at least the one standard deviation move that's being priced in. ETH, $200 move, also great to see 2,600 on the upside there. Solana, that's been stuck in this range here, not doing much. Uniswap trading a little bit better. XRP vol has come in a little bit, but that's also moving in lockstep with everything else. But again, back to my first point, sometimes when you see these big moves, intraday here, a lot of that's just auto liquidations. Mm-hmm. And so it's short covering, but it's happening programmatically. And that can extend, on both the upside and the downside, at least in the short term. It's not so much structural buying, from a longer term perspective. But yeah, those are the ranges. That's where we're at, guys. It's trading a lot better. And again, I think if you're looking at an environment where equities are going to trend higher here, not just necessarily go up every day, but it should be an environment in which Bitcoin plays along.
Quick question for you before we go. Oil at 92.22, up $2.60, kind of the high of the session. Volatility only down 25. We're at 2070. Is oil starting to interest you?
Yeah. Absolutely. It's probably at the top of my list of things that I'm active in right now. Have been short vol in there. You had a big move in volatility yesterday. So if you were in there and you're selling some options, I think you have to delta hedge that. But you had an opportunity to lay some out there and maybe take in a little bit of profit here today as that OVX has come in quite a bit day over day. Still elevated, right? And that's the thing that we can't lose sight of. 80, 70, 60%, whatever it is, 50% vol in oil is pretty high.
You think we saw the high in oil?
Tough to say. I mean, like I've talked about before, in my opinion, it depends on what happens with the physical market, what happens with inventories in the U.S. Are we going to escalate to de-escalate? I have no idea.
Blockade to blockade.
I have no idea. So I can't say that you've seen the high in oil, but I think you have a setup where if you're selling vol here, you could have, and it's going to be within a large range, could have relatively neutral price action in that. How much downside is there in oil from a fundamental perspective? I mean, I don't know how much risk premium there is to the upside, but I think you have to question how much downside is there.
Yeah.
And that makes for an interesting kind of range-bound market that volatility should stay elevated within, and you could maybe sell some premium there.
Since you mentioned oil, it seems like it's making a little bit of a bid here. It's flirting with its highs of 92.46. It's 92.13 right now. Even the S&Ps hold on to their gains of 58. Volatility is holding on.
Red on the day.
To its gains.
We end red on the day. 7,100. We go one tick red.
That's your dip.
That's your dip.
We'll be back in 90 seconds. We've got Liz and Jenny next. Peace.
It's always electric when the ladies are live. We'll see you later. Peace.
This is Chicago. We invented the skyscraper, the Italian beef, and the standardized options market. SIBO is not only the birthplace of options, it's also where Liz and Jenny got their start. In an industry first, two female former floor traders broadcast live from the floor. Hear the sounds of live market action and feel the electricity as they present real-time trade ideas and research-backed market studies live from the SIBO's SPX pit. Watch Liz and Jenny live from the SIBO, only on Tasty Live.
In the world of investing, a beast lurks between the numbers. Some watch from the safety of the sidelines, but others saddle up and ride that 1-ton rowdy ribeye for all he's got. If that's you, join us on Tasty Trade, named best online broker for options trading. Genius loves company.
And welcome to the Wednesday edition of the Liz and Jenny Show. My name is Liz Deerking. The beautiful brunette to the left of me is Jenny Andrews, and what a Wednesday live from the SIBO's SPX pit.
It is a crazy Wednesday. We have the market up quite a bit. SPOs are up 55, and yesterday, if you kept watching after the bell rang, we probably had a lot of angry people.
Yesterday angered me. So because the last 5 minutes of the show, the market tanked. The bell rang and we were on last call.
Right back up. So end of the day, our SPX, Broken Wing Butterfly, full loss. It just in a snap, the market dropped, full loss. 5 minutes later, bell rings, market bounces right back up. That thing would have never happened. Would have been a full winner.
Yeah.
So I really was in shock when I watched the market move right after the bell.
I mean, we were on last call yesterday watching it live. Is that gonna stop you from? It's not the amount of times you fall down, it's the amount of times you get back up, Jenny Andrews.
Get back up. I'm not going to stop doing that trade just after one loss.
Absolutely.
It's kind of like Jacob Studies, where we talk about an unlucky string of events.
Ooh, that is an unlucky string of events.
Well, that was one. If we put it on today and lost, and tomorrow and lost, and the next day and lost.
Jacob Studies is unlucky. But I do, in the beginning of the show, I got to give a big shout out to one of my dad's best friends growing up, Farmer Bob. Hi, Farmer Bob. I hear you're a new viewer.
Hello, Farmer Bob. Welcome to the show.
You can call me at any time. Your daughter informed me of this, so I love it.
I've got to give a shout out to this guy right behind us. He doesn't know he's on camera, but
there's
there they
Matthew.
There's our and
there's
Hokey. Our amazing team who've been tirelessly working on this beautiful new set that SIBO put together.
So they're typically camera shy, but you know what? We caught them. They're like a leprechaun trap.
We caught them. All right, here's what we're going to do. We are going to jump into the platform and take a look at yesterday's earnings trades along with anything we have to manage in the account.
Yes, absolutely. We are going to take a look at that, yesterday's earnings trades. Stay tuned because we have, I hesitate to say this, but I said it to Jenny on the train, so I'll say it out loud. My favorite SPX study to date.
She called me and she said, she asked, did you look at Jacob's study yet?
And the answer is always no for Jenny.
Not in the morning. I look at it on the train. And she was so wound up. I didn't know if it was good or bad. I didn't know if you were going to say, this is the worst study he's ever done, or it's the best.
So my husband says that same thing. My level of enthusiasm means we either won the lottery or our house is on fire. One of the two things.
Her level of enthusiasm. So we have the same painter. He did many projects in your house, and then came to my house. He told me when he listens to Liz, his body just goes into this position.
That's true.
Because he doesn't know.
It's things move pretty. What is it? Is that Walt Disney? No, it's Ferris Bueller. Things move pretty fast around here. You gotta keep up.
Yeah. So it is so funny because when I talk to the painter, he just stands there and listens to me. But he said when Liz talks to him, he braces himself.
I'm walking and talking. I don't think I've ever stood there and talked to him. I'm always like, follow me. Come with me. Come on, this way. Another thing here.
He can't keep up. He can't keep up with
Not a lot of people can.
Not a
lot of people.
That's why she's in the perfect place for herself. The trading floor is the perfect place for you.
When I walked down here, I really thought I knew I found my people. Fast, loud, use your hands. I'm also extraordinarily tall, which is helpful. I'm 5'10" flat foot, so you put me in a pair of heels, I'm taller than almost all of them.
Right, exactly. All right, so let's pop in the platform and take a look at what earnings trades we did, what we have to manage.
I'm going to sort by days open, and you're going to do the same thing. We're going to sort by days open. We're going to take a look at everything that we put on yesterday, which I think is the easiest way to do it. So let's start.
What's that song about telephone?
I'll wait.
I don't know. It's something about the telephone. Everybody get that telephone.
No!
I don't know. I think there is a song.
Are you thinking boom boom akalaka boom 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 akalaka boom boom that song?
I'm gonna have to look into this. I'm gonna have to look into this.
This is wonderful.
Everybody
do that dinosaur.
I just changed dinosaur to telephone.
I know, that's what I'm saying.
There is a song with telephone.
Paint fumes. Paint fumes.
Okay. Telephone, I bought a call, taking a chance, and I run up and telephone. Didn't work. I'm going to manage this like I manage losing diagonals.
Yeah, we're going to get out of this. I'm going to sell it out right now, even though it's in the money.
Still worth 37 cents. We're going to sell this long call. And what are we out? We're at $95. Sell the long call, go to May.
And sell 26 put.
I think you're fine with selling that 25 and a half.
Well, I don't mind the 26. Either way.
Wait,
I'm in June. I went to June. I got out of the way and went to the 25.
Or what
You're
if we get $50 in May and $50 in June, and we just sell the 25 put for 55 cents now, and then we sell the June put.
That's totally from Popeye. If you give me a hamburger today, I will gladly pay you on Tuesday.
Let's get $50 in May, and then we'll get another $50 in June, and then bada bing, bada boom, we've made our money back on that long call and telephone.
There you go, filled, done, and dusted. Okay, what's
everybody
up next?
do the dinosaur.
Then it goes boom, boom, akalaka boom, doesn't it? Okay, so then next up is Boeing. So Boeing, we did the 217 calendar, small win. So we paid a small price, we got a small win out of it. It's about $22.
Oh, this was a downside calendar, and Boeing's up $7. So honestly, we put on a bearish-ish trade.
It was slightly neutral. That's why I think we're still up money, because it was just out of the money.
Yeah, somebody told me that only old people do this. I said bearish-ish trade, and somebody said only old people do this.
We're old. We are.
Obviously, if we're singing dinosaur.
Well, and especially, we still call it a hashtag.
Yeah.
Hashtag.
Yeah.
Oh, no, we call it a pound sign.
Pound sign.
We don't call it a hashtag. I still call it pound.
Anyway, all right, so we're going to close this Boeing calendar because I'm not expecting Boeing to turn around and drop down to 217.
We made 22%. Not that it's a big win, but it's a win. And a calendar, what are you expecting to make?
Sure. NVIDIA. What did we do in NVIDIA? That's a durational trade. NVIDIA is a durational trade. The only earnings trades we were filled on yesterday were Boeing and Telephone. We did not get filled in U-All. I did. Our trades are not trade recommendations, but anybody out there who did the U-All trade, I just closed my diagonal, went to May, and sold a put, just like we did in Telephone.
Right.
Closed the losing diagonal for whatever credit it was still worth, went out to May, and sold a put.
Yeah, and I don't mind that as a management technique. It's pretty interesting when we do that. You don't have to either. There's nothing wrong with taking the loss and walk away.
Yeah.
If it's a product you don't want on your sheets.
Now we could.
And another thing old people say, sheets. We
don't
have
old
any
traders.
sheets.
Another thing, my sheets used to be stacked into my pocket. I don't even have a pocket on this jacket.
I'm teaching my kids to call this the sheets.
I want this off. Well, if I called the trade desk and I want to get a position off that's gone and I can't do anything with, like what?
Like RSX?
Yeah, like RSX. I'll say, can you get that off my sheets, please?
They would know what you're talking about.
Okay, let's go to U-All and take a look. They had earnings. They're down. I wouldn't mind selling a put in U-All, whether we go to May or June. You could pick.
U-All is down 6%. It still has a 54 rank. I'm going to take a look at the chart real quick. So U-All is down. It's had a string of bad luck right here.
String of bad luck for U-All. Honestly, looking at this chart, I don't mind selling a put. I don't mind doing a downside ratio spread. I don't mind doing a Jid Lizard. I think that chart, when people say, what are you looking for on the chart? I'm looking at the chart to decide which strategy I want to do.
Fun fact, this sets up very nicely in a Jade Lizard in May because what I'm looking for is 70 to 80 cents on a put, and you can take a look at the 75 put. Yeah. You're getting, on the 75 put in May with 23 days left, you're getting 77 cents, okay?
Perfect.
And if you're going to add a call spread on the top, it's a good candidate because it's got dollar-wide strikes as well. Yeah. So I'm going to go to the 100-101, and we'll see if we can get over
$1. Oh my gosh, look at the market on that 101 call.
It took away capital from
us. because the market on that one, I mean, U-All, what the heck is going on? We've got 6 million shares trading. Why are these markets so wide? Where are the U-All market makers?
I have never seen that in my life. So I moved it to the 102, 103. I was like, what is that?
I mean, what? Are the U-All market makers asleep?
Yeah. Wake them up!
Wake them up! Show your face, U-All market makers. We want some tighter markets.
Yeah, that is crazy.
All right.
But I went. Wait, hold on.
You can't do the 101.
I'm going to go 99 100. Let's see what that is. 99 100.
Those call markets are all wide.
Those call markets are all wide. I'm still going with this. You know what? Actually, in honor of these being wide markets,
just sell a put.
I'm pulling the put up by one strike. I'm going to go up to the 80, 85, 143, 146.
Yeah, forget those calls. We're not going to deal with dollar wide markets. Just sell that put. We're fine. If we were fine with the naked put of the Jade Lizard, just take that call spread off and just sell a naked put.
And it was a decent return on capital. I don't know if you noticed that. We got about $1. I can pop up the side and see what we got. We used $800 to do it. We got 146 using $800 in 23 days. I'm going to put an order in to close that for 50%.
So let's talk about that. Why did we sold the 80 put in you all. 80 put. Notional value, $8,000. It only used $800 in buying power, so it only used 10% of the notional value. Why do some puts use 20% and some puts only use 10%?
Well, if you use, I have no idea. I thought you guys said 50% or 10%.
No, like this only used, notional value of the 80 put is $8,000. We use $800 in buying power to sell that put. Why do some puts use 10% and some use 20%?
I mean, I don't know that this is the real answer, but as you get closer to the at-the-monies, they use more. So this is pretty far away. It's got what is the delta on this? The delta on this is a 17. I think if I sold, I'm going to sell the 90. We're going to do that. So the 90 uses 1,700 instead of. It's the farther out of the money as they use less.
If you're at the money, you're at the money. But if we know if we bought 100 shares of you all at $90, that's $9,000 in notional value, and that should use half, $4,500.
And it does.
Which it does. So puts give you this amazing ability to take a position and use a fraction of the buying power.
Yes, I mean 100% is a fraction of the buying power, and I'll never forget when you started when you had your neighbors over, and very similar setup. I'm going to use this. So you're like, okay, if you like United Airlines, most people are like, it's $91, it's down, great buy right now. Yeah. But I'm going to sell the 80 put, meaning it can go all the way down to 80 before I take the stock, and I'm going to collect $150. So one of your neighbors was like, great. How much do I have to pay for that?
Right.
Yes.
Yeah. Like, sign me up. How do I do that? Sometimes it looks this was years ago. It had to be at least.
I'm pretty sure it was your painter's dad.
It was. He is related to the painter. So I want to say this was 13, 14 years ago.
Yes.
And I took a 14-person dining room table, took my TV, my big screen TV from my family room, put it at one end of it, and everyone sat down, and I used that as my monitor, taught my whole neighborhood how to trade.
Oh, that's awesome.
And Tesla was the first iron condor, and we had 100 points between the short strikes, the short put and the short call. We had 100-point wide iron condor and Tesla, and that was 10, 12 years ago, and it went through one of the sides.
Call side is my guess. Probably. If I had to guess.
Probably.
Speaking of Tesla does have earnings today. We are going to be taking a look at that. We are not on last call, so we will for sure be looking at earnings today.
Oh, yeah. We are looking at earnings. We are taking live tweets. Send us a tweet. Include the hashtag LAZJaneY. Do you want to slide on over into Twitter?
I do. So here, Jenny graciously tagged this for me.
We're missing Bob on Fire. So Bob on Fire, he must be on vacation. He usually posts our earnings. So I put this up today. We also had questions on, there's the ladies of Tasty Trade, women of Tasty Trade on Facebook. And I saw last night on the Women of Tasty Trade Facebook page, someone asked us to go over the Bob on Fire trade.
Oh. We have a YouTube clip you can send to them.
Yeah, but we could also go over it if they're watching the show.
No, we could, but not on today's show. We have too much stuff to do. Like we can table that for tomorrow.
Sorry, Annie.
That's what I'm saying. We could table that because we have too much kind of, unless we get it to it at the end.
Yeah.
But if it's Annie, I'll send you the link to the YouTube clip.
I think it was Annie who asked for, just wondering more about that Bob on Fire trade.
I do like the Bob on Fire trade, and we can go over some of those. But like I said, in today's show, we do have earnings. We've got that We've got the study that's going to be in like 2 minutes because I think they're already finished behind us.
Okay. So today I was looking at a position that the stock had run up, and I thought, I have a couple choices here. I could, if I want to protect the stock. It was in Logan's account.
Oh, okay.
You could either buy a put spread and buy a wide put spread and sell a call to pay for that put spread and protect your stock that way, or you could close the whole thing and put on the Bob on Fire trade.
Yeah,
and that is I think that's the winning choice.
Well, we'll go through all of those, but right now let's do earnings, just because I do kind of agree with you, because you could do the combo or that. Do you know what I mean? So what earnings trades do you want to, only because I want to make sure we get to this, and we're going to do the...
Okay. What earnings trades? Looking at that list.
We have a Tesla trade on right now.
What do we have in Tesla?
We did the diagonal already. We did a pre-earnings Tesla diagonal.
Okay.
And so right now it's up $100 today, but it's down $18 overall.
It's like we put this on. Tesla was trading $391, and now we're trading $390. So it's exactly where it was when we put this trade on. We could put the same trade on today. If we were doing this trade today, we'd probably put the same trade on today.
And if this were profitable at all, would you have taken it off? Probably.
Maybe, but it never really was too profitable. So I say we just leave that as our Tesla earnings trade. And if Tesla falls, what we'll have to do is, eat that loss on that diagonal, sell whatever is left in it, and then sell a put spread. We can't afford to sell a naked put in Tesla, but we could sell a put spread.
We can't afford a put spread. Okay, let's pick something in this earnings that you can do a Bob on Fire in.
Okay, that we don't have.
IBM we don't have?
IBM we don't have.
Love we don't have.
No, we don't have Love.
Love will be cheaper.
So
American Airlines Thursday morning. American Airlines, American Express, Blackstone, Comcast, Dow. So Honeywell. If we were going to look at this, I think we should go Southwest.
I don't know if there's enough premium in Southwest. You need enough premium to do a Bob on Fire, but let's just start at the top. We've got Tesla. Move to IBM. Let's jump into IBM and see.
So the only reason, let's see how big IBM is, because I want to be able to push it through.
$250.
So if we're going to be selling 2 puts of a $250 product,
that's going to be pricey.
Let's just price it out in Love and see if that's okay. Do you mind? So
yeah,
go
ahead.
to Love, and I'm going to go to January 27th. That's the Bob on Fire trade. And from there, you're going to be buying a wide call spread.
All right,
so I'm buying the 40-50.
So buying the 40-50 call spread is a $1,000 wide call spread. You're paying about $318 for it. We just want to cover that $318 with 2 puts.
We can sell 2 27.5 puts. This is actually perfect.
Yeah. Okay. So let's talk about the mechanics of this trade. We have 2 short puts. They're at the 15 delta, so pretty far out of the money. Our risk would be getting long 200 shares of Love at 27.5.
Absolutely, and it's a lower price product. So if you can see the buying power effect. Now this is a durational trade that we're putting on for earnings. So it's holding up $869, which I'm comfortable with. I don't know that I would have with IBM. It's a long-term trade for IBM.
No, this is a long-term trade. Love goes down, we buy 200 shares at 27.5. If Love goes up, we're not going to make money 1 for 1. We have that 40-50 call spread way out in January. We're not going to make money 1 for 1, but we'll make about half. So if Love's up $2, we'll make $100. If Love's up $5, we'll make $250.
Yeah.
So until we get to January, if we held this all the way to January and Love were above 50, that's when we can make $1,000 on this trade.
And I'm going to show you the chart. So Love is trading, right around $39. It's $39. So our put is the 27.5 put, which would bring our break even to about here because we don't have any credit for it.
I mean, that's what I like about this Bob on Fire. Your risk is that put strike. Now, if Love goes down tomorrow, this trade is going to be
a loss.
It's going to be worth, we're going to be in a. We could have put it on in a better situation if Love were a lower price, but it's okay. We don't get long it until 27.5. If we could afford to hold this trade until next January, we just keep it on.
So the other thing that I wanted to say about this too is when you're looking at this, I like the Bob on Fire trades. I really truly do. They're great. They're a great trade. I just want to put a little bit of an asterisk on it. It can't be the end all be all. I like doing it for earnings. I like having a couple of them in because when this trade gets hurt, and I think you talked about this with Tony from Mexico, and this is true, is if you get a market correction of epic proportion because the vol will spike. And if you've got a lot of these in there, that's when it's going to get hurt. Is if you've got layered in there. Now we're playing this for a binary event in Love, not as a market. Like I'm going to put these in all
And we're
things.
doing this. Typically we don't do the Bob on Fire for earnings.
I like them for earnings.
But I don't mind them for earnings. And if Love falls on earnings, we're not going to worry about it. We're going to say, okay, we're in this for a while.
I agree. And this is it's a low cost way to put it on. Low cost meaning low buying power way to put this on. So I'm going to ship this. 20-cent credit for this. We are selling 2 27.5 puts. We are buying 140 call, selling 150 call. This has a profit potential of $1,020 by putting up $869.
Yeah, perfect. So ship it. I don't mind this trade at all. I'm going to put this in my account when this show is over.
I'm going to, if you look down here, it's a little bit of wide markets. Now I know we've got a credit for it. I'm not going to chase it too much, but I'm going to take it down by 10 cents. So we have a credit on for it.
Yeah, we want to take a credit. We want to make sure we take a credit.
Yes, those markets are a little on the wide side, especially because it's so far out in time. But that really did fit the bill. So, Annie, hopefully you're watching.
And now I want you to look at American Airlines. If you go to,
we have an American Airlines.
So we have American Airlines. If you go to the chart. This American Airlines, we have a long call on American Airlines, and I think that stemmed from an unusual activity. So there was a huge volume, tons of calls traded.
Well, it's most active, not unusual activity, because those are two separate reports. But yes.
Oh, most active.
Most
active,
active,
where there was a huge print in some out-of-the-money calls in American Airlines. So we kept this call, and it hasn't worked. Maybe the huge volume was someone selling the calls, because American Airlines has gone straight down ever since.
Let me move this. Well, you know what's interesting, though, Jenny? When you're looking at the huge volume, it's something that you and I would not have looked at. Let me go to volume. So the open interest is still there. There's still almost 20,000 in open interest and only 400 in volume. That's today. When you have 19,000 of them, which they didn't get out of yet, you only need a small baby move, right? So what we wouldn't have looked at if we bought this small one, they might have.
They might have, just making $10 on that option. If you have 20,000 of them, that's gonna be worth closing.
For sure.
All right, I would say we just leave that. That's a 23-day trade. But in the 2-day.
Do you know what I did with mine today? Oh, because they have earnings,
too. They have earnings. That's why I'm bringing it up. Yeah, they have earnings. So that's what I'm not sure.
I flipped the cards over today because I didn't like having the long. I wanted the short.
So sure, go ahead and flip
but let's let this roll. You got the dice on you? Let it ride, baby.
That's why I said I brought it up, because they have earnings. I would just leave that. If there was something else we could do.
Maybe somebody knows something in the SIBO's most active.
If there was something else we could do in American Airlines,
can I add the put as well? Because I just didn't like the extrinsic value.
Yeah, just add the put.
So I'm literally just going to add the 11.5.
Yeah, so we've got that 12 call left over. That was from our option volume trade.
Yes.
And we're going to add on that 11.5 put. So we're selling that put. We're not buying it. We're selling that put. That's going to help cover the extrinsic value in that call.
Because as an options premium seller, it really bothered me to have 50 cents extrinsic value for an out-of-the-money option.
I know.
But they do have earnings.
They do have earnings. They do. So that's our adjustment to American Airlines. It's 10:23. I would say with the time
that we have left
in the show, let's take a short break from earnings trades, and let's do our study of the day.
My favorite study ever.
We're going to do an SPX study that was created by Jacob, our mastermind at Tasty Trade.
And it's springboarding off things. Keep in mind, he's been doing these. We love them. We love having these come to us each week, and they are buildable. This is he's building on top of things that he's done before.
Yes, so this is another SPX study, and couldn't imagine a better place to put this study on rather than in front of the SPX pit, which is actually, it was just getting pretty loud. There was a big order that just came through.
And Vanetta was saying, she was watching the show yesterday, so hi Vanetta if you're watching, and she was saying that during our segments you could just hear the roars behind us. Yesterday was ebb and flow of roars. We've been here before where it's a slow and steady. This is more of an ebb and flow as well.
Yeah, there were some big orders coming through yesterday. I haven't heard the volume level today get as high as it got yesterday.
Right.
But we've got SPOO's up 61, and it's a busy day in the market. So let's jump into this study. I'm very excited to go through it because it's another
humdinger.
It's another good one.
This is awesome. So managing out of the money. So remember, our last week was at the expected move. Out of the money, 0 DTEs. Beyond puts.
Beyond puts. So we're branching out. We're going beyond puts.
We are branching out. And this was, like I said, my favorite. So now here we go. Here is the study. The 0 DTE options have never been more liquid or accessible, making them an increasingly popular venue for active premium sellers.
Selling out-of-the-money spreads is one of the strongest inroads for retail traders to get involved, combining a high win rate and limited downside at the cost of a smaller initial credit.
So selecting strategies and strikes is only the first step. Once a trade is on, management mechanics take up an active trader's day.
We've already examined how different management mechanics affect 0 DTE short put verticals at the expected move. Today, we extend the investigation to call spreads and iron condors for those who want to mix up the directional bias.
So he's got, and I like this, thank you Jacob for doing this, he's got put spreads on there, call spreads on there separate, and then you put them together and you got the iron condor.
Iron condors.
All at the expected moves.
And we know a lot of people who do both sides. They're doing the iron condors. We've been doing just the put spreads, but we know lots of people who do both sides, so we're going to do a deep dive into all three.
We do. Okay. The study is using 3 years of data in 0DTE SPX options collected every 10 minutes.
Considered selling $10 wide 0DTE spreads, puts, calls, or iron condors at 9 a.m. Chicago time, give or take 5 minutes, every day with short strikes at the expected move. So remember that, short strikes at the expected move.
And that's been vetted. So that's why it's buildable. The 9 o'clock is just where he kind of seemed to land, give or take 9 o'clock Chicago time. Okay. Trades were monitored every 10 minutes to see if they have surpassed profit targets set at a percentage of the initial credit.
And trades that did not reach their profit targets were either left on through the close or exited at noon. Yes. Now, we saw a study a week or two ago that showed exiting at noon didn't really make sense anymore.
We did. And it's in here. You will see a lot of these. You will see these in conjunction with. You can go back to last week's and look at it too. He's building, and this is a buildable process.
All right, and all trades were assumed to.
Oh, sorry.
That's all right. All trades were assumed to exercise at mid-price. All times are Chicago.
I mean, I like that they say Chicago time 3 times in there because we're going to get 4 emails today that say what time.
What time zone? What time zone are you talking?
What time zone in? We're in Chicago, so Central Standard Time, CST.
Yep.
Got it? Okay.
All right, so here we go. Managing out of the money 0DTs beyond the put. So this is just looking at put verticals with your short put at the expected move, managing at 25% mixed profit, 50%, or just letting it go.
Hold on, but the key point is in the corner. This is exited at noon.
Oh, exit at noon.
Yeah, so this is the key point of the study. So they're doing time frames with it. So you've got 25%, 50%, 25%, 50%, or exiting at noon.
Yeah, time management only is at noon.
Exiting at noon.
So
yes.
They're all winners, but none of them look great. I'm not looking at this slide thinking, I got to go do this. I have to exit at noon no matter what. And we saw this last week. Exiting at noon it's not going to reap the best results.
Correct. But wait, this is my favorite slide of the lot. Here we go. Put verticals held through the close. So that's the time management column. So you're either taking it off at 25%, 50%, or no management.
Now, I know the best case scenario here is no management. But I couldn't help myself. This morning, I sold this put spread with my short put at the expected move, and as soon as it filled, I put in a GTC for 50%. I couldn't help myself.
I let it ride. I got
You
my dice
did?
out. Yeah. I don't have a closing order in. I'm getting crazy.
She's going to get full profit at the end of the day.
So I'm a huge fan of looking at stuff like this, and this is why this is my favorite. And then we will go forward because I want to go through everything. What I love about this, because I do keep in mind, your smaller accounts, the ones that can't close things, right? So right and June 4th, we broke the news yesterday. They will be able to close it.
There's going to be a celebration of epic proportions on June 4th when the pattern day trading rule is changed.
It's going to be lifted. It's going to like a phoenix from the ashes. All these retail traders are going to come out of the woodwork.
All these new young people with smaller accounts, they're going to be, I can't imagine what the volume is going to be like.
I know, I can't either. I can't. So, that's why I kind of like this. With the win percentage, you got an 87% win rate, but what my favorite part about it was, I do like the P&L, so that was kind of enticing. The drawdown, max drawdown was less.
Right, because you're getting more. If you're selling, so around 9 o'clock, when you sell a $10 wide put spread with your short put at the expected move, you're getting about $1.80.
It's about $1.80.
That's what it was today, $1.80. So if you're having no management, it's full win. So you're making it $1.80, $1.80, $1.80, and then you have a loss. Your drawdown's less versus when I put it on for $1.80 and I take it off for 50%, that's only $90.
Yep.
So I get it. I just, after yesterday, because yesterday, if I didn't get out of my trade, it would have been a full loss.
Yes, but I do believe yesterday is one of those. Like if you look at this, yesterday would have been one of those 13%. So, and when they're saying no management, if you're getting about $1.90 for a $10 wide, $1.60, $1.80, whatever it was, your risk is about $820. So to your point, you're getting more. That's why the drawdown is less for these.
Right. So I do like that. But coming off of yesterday, I couldn't help myself but to put in the 50%.
But you also didn't have the expected move. You had the at the monies.
Right. But even if you want to close at 50%, because lots of our viewers do, it's still a good average P&L.
A great
It's a good average P&L.
This Jacob gets a gold star. This is my favorite slide.
And
Now we're going to keep moving forward. Go ahead.
I also want to say we have 3 years of data now with these zero DTEs. So these results, we've done studies like this. We've done studies in the past where the results are slightly different than they are now. We've done studies before which showed maybe noon management was better, but we're getting more and more data as these are around a bit longer. So these results are the last 3 years of data. If we have some kind of wild, crazy year, it could change.
It could change. And you're right. The column of 50%, no harm, no foul. I think it's a great column.
Yeah.
I'm not throwing shade on the 50%.
She's throwing shade. How do you throw shade?
I don't know. I'm not throwing shade on the 50%. But here, watch this. This is where it got real interesting. So this is what changed here is the call verticals exited at noon. Negatives. I didn't even look at anything else. You got huge max drawdowns and negatives everywhere.
So when you pair the short call spread with the puts, it's just going to draw down your average P&L because you could see the short call verticals, all losers. If you're exiting at noon. What's the next slide if you let them ride? Whoa, you don't want to let those short call spreads ride.
Look at the max drawdowns.
Liz is in shock.
This is where I was like, you got to be kidding me. This is your unlucky time. You've tapped out. Yes.
Next drawdown.
That's what I. That's
142,000.
No management. Every time you sold a $10 wide call spread,
you lose every
and
time.
every day you lose.
Every day you're a loser. I don't want to be a loser every day. That's why I don't sell the short call spreads. I want to win more than I lose. I want an 87% win rate. I want that 89% win rate. I don't want to lose every day.
I know. So what I find flabbergasting about this now we will get to the takeaways, and everybody's going to say it's an up market. Everybody's going to say it's an up market. Okay, so now I'm going to go call verticals held through the close. Everything's a loser.
You know what? This year, it includes last week, last month, this past quarter. This includes for Q1 of 2025. Like we've had down moves in this market. It's all included in this data. So you can't just say, oh, we're in a bull market.
No. Well, it's interesting because the no management, you can say we're in a bull market. When you exit at 50%, I've gotten out at 50% on a horrible day, similar to you.
I mean, look at those call spreads. You see the loss on those call spreads?
I know. Yeah. So then here's the iron condors. And to Jenny's point, this is the merging of the calls and the puts together. So exited at noon.
Doesn't make sense.
It's not bad. It's better than just the
call.
What
do you mean it's not bad?
No. I'm just using Jacob's takeaways.
Oh, it's not bad. You can make a little bit of money.
You're not negative. How about that?
Okay.
You're not
negative.
Now
onto the iron condors, letting them go. If you have no management at all, it's a negative average P&L. If you close at 50%, which a lot of our viewers sell iron condors and they manage early, your average P&L is a winner.
But now the drawdowns on, when you add the call spreads on, the drawdowns jump up by tenfold.
But many of our viewers, they're not selling their call, and many of our viewers to do the iron condors, they're not selling the call and put at the expected move. They're going further. They're not doing a 25 delta or a 20 delta. They might be selling a 16 delta or a 10 delta. Some are going much further.
And this is a choose your own adventure. These 0DTE SPX trades are a choose your own adventure. There's nothing wrong with doing both sides. There's nothing wrong with anything you're doing. If it's working, keep going.
Look at the max drawdown on the no management iron condors versus go back to the max drawdown of just the short put spreads.
I almost fell off my chair this morning. This is the no management.
No, but of the iron condors. The no management of the iron condors was
this is exited at noon. Time management only.
Yeah, the next slide. I was just asking you to compare this max drawdown of $16,000 for an iron condor with no management, and if you go back and look at just the short put spreads of no management.
This is the calls. Oh, this is the puts.
That's okay. The no management of the just short put spreads, the drawdown was only $1,900. That's
my favorite
$1,900.
I know. That's why I was like, I'm not doing it today. I let it ride.
She's letting it ride, folks. She's letting it ride. I still couldn't help it put in my 50%. I like the. I want the extra 2% win rate.
There's nothing wrong with that.
For now,
okay.
It's about. For me, it depends on what the market's giving me. Now, if the market's wild, I'm getting out and taking my profits. If the market's just sitting here in like dead days of summer, I'm going to let it ride.
But I will say, you got to keep this in mind. And yesterday was a very good example of this. Anything can happen. So that's why it does make me feel better taking my profits instead of waiting until 3 o'clock to see what happens.
That broken butterfly last night, that was stressful.
It was stressful, and I was actually rooting for our broken wing butterfly.
I
one on the show
know.
instead of it.
All right, so takeaways. The study period was broadly bullish, so it comes as little surprise that short put spreads performed well, especially with a light approach to management.
Yes, I was surprised by that. More notably, directionally neutral iron condors also held up well. This is from Jacob, provided traders were quick to lock in their winners, but willing to stay patient with a losing position rather than cutting them early. So the closing at noon for an iron condor, no bueno.
No good. In a persistently rising market, however, repeated short call exposure meant repeated losses. During extended run-ups, the max drawdowns, the largest peak to trough loss over the study period, got well out of hand.
It did?
Yeah, especially for traders who braved the close.
Yeah, that got out of hand. I would have been tapped out. Okay, the appeal of short like when you're at $100,000 loss, you're like, one more time.
What am I gonna?
Today's the day.
What am I gonna tap out?
The appeal of short out of the money premium is that you don't need to be right, simply not too wrong, right? You don't have to be too wrong. The cushion is what allows directionally agnostic structure like iron condors to succeed, provided we identify the right management mechanics.
Now, I do want to say this study is great, and these results are, I think, really good results for that put spread. But you have to have market awareness. So if we start down every day, losing on the put spread, maybe you want to take a break. Maybe you want to say, hey, maybe market conditions are changing. Maybe I'll wait till things shake out.
Well, and you got to remember that these are done. It's over at the end of the day, right? So everybody's got a personal response. No one is a computer. So what Jacob's doing when he does the studies is he is a computer. Right. He does it every day without fail or sets in his parameters. Yeah. It's very tricky when you've got 10 losses or your max drawdown. You're like, I'm back again. So I do believe you need some level of market awareness, and you just can't blindly put these on. You can't blindly put them on. I agree.
Well, then the study shows you can, but I'd like to have a little bit of market awareness, and I might change my trade depending on what the market's giving me.
Right. But what I did like about these is this was 0 DTE, not the overnight. You have no overnight risk in these, no matter what.
Yeah.
But
all right. So
letting them go to the end was kind of tricky, though.
Another amazing study from Jacob, our genius. Now, what do you think? Into Twitter or back to earnings trades?
Let me go to...
Who's are not moving. They're up 58. This is where they were when our show started, 37 minutes ago.
I think that didn't they get as high as 60? There's some activity out there now.
Yeah, like $1.25 higher, but we're not really moving.
No, let's take a look at Twos. You let me know if I should go back into Twitter, but I'm going to go to...
it's on the... You could go to whatever you want because we're on the full screen.
So I'm going to go to SPX. We are in the SPX bet. We like to take it. So I'm going to show what we're talking about. Can't stop, won't stop with this market. Now, that bar is very little. We opened today at 71.02, and right now we're at 71.30. So it's been a $27 range.
Yeah.
I thought it felt bigger than that, didn't it?
Well, I can't remember when we put our trade on, when we did the put spread this morning, I don't remember. We were up 40. Up 40. Okay, we do have a lot of tweets, so let's go to Twitter.
While we're in here, let me look at the VIX, and then I'll go straight to Twitter. Sorry.
I'm going to say VIX. I was going to guess 1935. Are you surprised it's still in the 19 handle?
Yes.
I am too. So
yes, it's still kind of an anything goes market right now with everything.
Yeah, like we're up 60. Don't be surprised if we're down 60. Val's keeping his wings up.
Val is keeping his wings up.
Okay, let's go to Twitter and then we will get to earnings. Just go tap down. We've got a lot of tweets coming in.
Tap down.
Okay. Brad, living on the edge with no GTC today. I'm excited to see what you fill at today.
Yep, we did it.
Okay, so, and I don't know if he's just doing the SPX put spread or if he did the downside broken wing butterfly.
Yes,
but maybe it's the put spread.
So I put the downside broken wing butterfly in again yesterday.
So yesterday for today?
For today.
So Liz has been doing a day out.
Yes, a day out, and that's where I've been residing with those. They're pretty good. So I think he might be talking about me.
He might just be talking about the put spread.
Yeah, I think he might be saying like,
living on the edge with no GTC.
I'm living on the edge of glory is what I'm living on.
Do you want to put tomorrow's broken wing butterfly in?
We can. Now, once again, we kind of talked about this. We got burned yesterday. We entered in Jacobs at an unlucky time.
Didn't you just say you can't let one loss stop you from the next?
No, you can't let one loss, but you also have to keep your account size in check. Like, you want to live to trade.
One thing so what I would be mindful of is I have these iron condors and SPX I'm putting on weekly. Iron condor every week, putting them on. Those are durational. Then I'm also doing the daily put spreads. Then if I'm putting on other trades or these downside broken wing butterflies, if we have one swift move down, I don't want to have too many. I don't want to have too many short-term trades, or I want to be aware of my risk. I could lose this much on the broken wing butterfly, this much on the put spread.
And they will all lose in a violent down move.
If we get a violent down move. So we don't want to load up, but we're not loaded up. We don't really have anything.
So here, I'm going to assess the 0 day versus this is what we did yesterday, the 0 day broken wing butterfly at the expected move. So I sold 2 shorts at the 7100, bought one 7150, and then I'm going to buy one more of the 7090. And in the 0 day, this keeps popping out, in the 0 day it's 40 cents.
Okay.
If you go to the 1 day, keep these strikes in mind, okay? Here we're at the 7100 because that's the expected move. If you go to the 1 day,
It's actually exciting.
your expected move is the 70.75.
So you're getting a lot further.
You're getting farther.
a lot further.
I'm buying one 70.80, selling 2 70.75s, and buying one 70.65, right?
And we're collecting 70 cents.
And you're collecting 75 cents.
75 cents, 80 cents. Sure. Go ahead, ship it. I know.
If I had a certified badass option trading card on me, I'd give it to you.
If I had my other trading jacket, I'd have some cards in these pockets that I'd hand to you, Liz.
So we're going to let that come to us. It might not, because if we continue to go up, that won't get filled.
Okay, back to Twitter, because I feel somewhat redeemed. There is a telephone song.
Can you sing it? I don't know any Beyonce songs.
It's by Beyonce and Lady Gaga. Something, I don't know, something about telephone.
I was going to ask, I know something about telephone.
Something about telephone.
I'd love to hear a couple bars.
Okay, moving on. Thank you very much, Rich. I feel redeemed.
JNYMOUSE. Perfect time for the study.
I was going through old market measures and noticed a study like this. I was going to ask if there was a new study comparing neutral to directional. So great timing. Jacob read your mind.
I know, we love it. Well, we asked. And the Jade Lizard is in deck, in the deck, in the queue. Yeah, I think it's in about 3 weeks where we're going to do a 7-day Jade Lizard.
It's coming up soon. Okay, then we have a Jeet coming in with an AMD, short strangling AMD. So AMD, can't stop, won't stop. Do you want to pop into AMD?
I do want to pop into AMD. Thank you for asking. We're filled in SPX.
Excellent. Okay. I will get all the trades pushed out on the follow page after the show.
After the show.
Yeah, after the show.
Okay, so a Jeet, playing with fire, he's got a short strangle through earnings. Let's take a look.
Look at AMD. If you go to AMD's chart,
a lot of things look like this, though.
I know. Right. There are other stocks that look like this. Not all, but AMD.
No, not all. The ones that we sell puts in usually go straight down.
So AMD, can't stop, won't stop. This was the one where my son said, sell all my Intel stock and buy AMD instead.
And you didn't?
I did, but I sold it probably at $255 or something like that. And again, he has a small account. I didn't buy that much.
No, he made some money. I bought some with Logan.
Yeah.
Logan, the sage. But Ajit sounds right, because I want to see what cycle he's in. So he is in.
Ajit, if I had more certified badass cards in my pocket, you'd be getting one.
We gave him one.
Right through your.
Ajit, didn't we give you one when you came to the Tasty Studios? I believe Ajit's got one.
Hold that out of your pocket and look at it, Ajit.
He's holding it up right now.
This AMD strangle, it requires.
So what are the strikes?
Strong will and toughness. I'm too afraid of it.
We're not going to put it in, but I'm going to pull it up for Ajit. So if I'm going to pull up our own strangle, we'll make it.
Well, we only have 10 minutes, so we're not going to do this. This is too scary for us. But Ajit's in it. We have other stuff to get to. Punished Pixels wants us to put on a short ES.
And that comes down here. It was an hour ago.
Yeah.
Morning, ladies. With markets reaching all-time highs, how about a downside hedge for a credit using a put-back ratio? You keep those up.
All right, I'll read you the strikes. You go into the platform, and I'm going to read you the strikes. So I would say...
What cycle am I in?
ES or MES?
Let's try ES first.
Okay, so June, July expiration.
June, July.
Oh, and he's selling 5 6,700 puts and buying 7 6,500. So we're going to have to go MES because...
So this is... Punished Pixels usually does shorter term. June, July is really far out.
He's going June, July.
Then we're going MES.
So Yeah, we have to. Yes, if we're doing a 7/5 ratio.
Okay.
So
and even then, it's going to be a lot of capital.
June, July, sell 5 puts around 6,700.
Well, wait, in June?
In June.
5 puts around 6,700.
Yes.
Okay. 5?
Yeah.
Okay.
And buy 7 lots in July at 6,500.
Okay. Regular July expiration, 6,500.
6,500. Mm-hmm. By 7, 6,500.
Oh shoot! Hold on, I gotta close the other one because I still have it highlighted.
First day with a
no. The highlighting. If it's a ratio, you gotta make sure it's not highlighted.
So you're doing 5 by 7. You're selling 5 June 6,700 puts, and buying 7 July 6,500 puts.
Okay, so I've got 4 by 7. I'm gonna increase that one in there. So that highlight is off. We're almost there.
Come on.
We need one more of these.
One more short. Sell 5, buy 7, and this should be. He's saying this should be a credit.
It is a $171 debit.
$171 total? What's the total?
$171 debit. Because it's ratioed. Remember when you ratio it, that is the total.
Hit review and send.
Well, let's see. Yeah.
What is it saying your debit is? $867.
No, your debit is $170.50.
That's not bad. That's not bad.
It's not
but he's
bad.
saying it should go on for a credit.
Well, I mean, you've got wide markets in all of these. So,
and he sent this 1 hour ago. Maybe suppose we're up 40 or something. Maybe
correct.
we need to adjust the strikes a little bit. He's saying it should go in for a credit. The buying power is not bad. You're long 7, short 5, but we're long a much lower strike in July, short a higher strike in June.
I don't mind it.
Punished pixels is like 5 for 5.
So, and I don't mind it. So the buying power effect, because it's a calendarized spread and you're long farther out, you're long more that are farther out in time, which we do love. It's not bad. Your buying power is $917. But I don't mind paying for it.
But I think before anyone would ever push the button on a trade like this, because again, these our trades are not trade recommendations. Before anyone would ever push the button on a trade like this, you've got to think about your risk. So we've got a spread. We're short the 6,700s and we're long the 6,500s. So that's a 200-point wide short spread that we've got.
Yes.
Which tells me this could carry a lot of risk. What's the delta on this?
The delta is a negative
almost nothing.
Point. Yes,
nothing.
It's almost nothing.
But I always like to know when the analysis isn't going to tell you when you're calendarizing something. It's not going to tell you your max loss. But we've got 5 short spreads, 200 points wide.
Yeah, but it's a tenth of it.
So it's like 5 would be like 1 ES spread.
Yes.
200 points wide.
Yes, which is big.
Yeah, 20 grand, half of that, 10 grand.
Yeah.
10 grand. I just like to, in my mind, have an idea of what could I risk. Then you've got, if we have a big fall, we've got the 2 extra puts.
Well, and it gives you a good margining. So with this, if you're going to pull this up in SPY, let's pull it up in SPY because it'll look totally different. Because you're getting span margining with this. That's why it's so low in buying power.
It's going to be. Yeah,
give me the strikes. We're just going to do it real quick because this is fun.
I just don't know if we're going to push this through.
No, and if you pushed it through, the ratio wouldn't go through. Okay, so I'm in June. I'm buying which ones am I buying?
But I mean, even ES is.
I'm selling the 655 of them.
Selling the 650 puts. 5 of them.
And then I'm going
in
to July.
June, and then go to July and buy wait, you're selling the 6,700 in June.
Oh, sorry, I'm backwards.
See, even we're a little confused by this. Punished Pixels comes up with some.
I love it though.
Some clever trades.
So June, I'm selling the 6,700.
Selling the 675 times
5.
Okay. And then go to July and buy
the 650.
657 of them.
So this is very clear because you're not looking at span margin. This buying power effect is 11,885. That's what it.
And what did I say? 10,000.
10,000. Yes. Yeah. So that is the math. But the span margining affords you a different level of buying power.
Right.
I just want to put a warning label on that. So I'm glad we pulled it up in SPY to kind of take a look at it because that's how much buying power to look.
Because you have that wide spread of 5 times. So you've got 2 extra longs and you've got more duration. So you've got a little more vega because your longs are July instead of June, but you've got that wide spread. 5 times.
I like it, Punish Pixels. I like the creativity. You, once again, get a certified badass options trading card.
Do I think this will lose 10,000? No, because you've got your longs are in July, and the Vega, they'll get a bigger Vega boost, and then you've got the 2 extra longs. But you have to
But there is real risk. I don't think you're going to lose 11,880, but there is real risk.
There is real risk.
Yes.
So just be cautious, mindful.
But he's got this as a hedge, right? So Punish Pixels is big by big.
A hedge of what? This isn't. I don't know if this is a hedge of what.
That's what it said. Hold on. He says, how about a downside hedge?
How much do you think this is going to make in a big down move?
I think it could make a little bit. I think it's going to make money in a down move.
I don't know. The delta is nothing.
20.
Let's see. Let's go back to the delta. The delta is negative 20.
Yeah, it's a 20 delta. So Punish Pixels is smart. He's
shift everything. Keep shifting everything up. Shift everything up as if we were. Yeah. Keep moving it. Keep moving it up as if we went down and see what this is worth. See, if we were, imagine we move down and these puts are all higher.
$11 debit. You're not really losing much.
Versus what were we paying?
Versus 20. You're losing about half.
Yeah, so you lost about $1,000.
Yeah.
You lost about $1,000. Like in a big down. That's why I'm not sure how much of a winner this would be in a down move.
I think it would be a little bit of a winner in a down move because of your extra longs.
Because of your extra longs, and if you get an explosion in vol. If you get a vol explosion.
Yes.
But again,
it's down far enough where you would get a vol explosion if we were down there.
But that's why a way to see is shift all the strikes as if they're all these puts are now in the money and see what that spread is worth.
Yeah, I just shifted the at the monies just in case, but that was
okay.
Same concept.
We're down to the wire. We have 4 minutes to go. Any final earnings trades that you want to do?
Let me go back to the earnings trades and we'll take a look.
American Airlines we have. And Dow Chemicals, Southwest we put on a trade. Tesla we have. I don't know. I don't know that we need any other earnings trades on.
I don't know that we do either, especially because we're going to load, I'm kidding when I say this, load the Flotola in Intel tomorrow.
I really, my Intel is all Bob on fire.
Oh, I've got Zebra. I'm Zebra City, USA.
It took a lot for me to sell all my stock, but I did.
Yeah, I've got Zebras in there. Okay, so
Dow Chemical. If you want to, no, I don't know.
Freeport McMoran, FCX is in there. You just have it covered. You have it covered by Dow Chemicals. Let's take a look.
Oh, okay, yeah.
FCX.
And that is high, right? It's copper.
Yeah. FCX. We were very excited about FCX because we went by the Freeport McMoran building.
Is it more than copper?
Yeah, I'm sure there's other things in there.
So I think we're good. I think we're good with our Tesla, American Airlines, and Southwest. We're still working Southwest. Why don't you adjust that? Then we'll have 3 earnings trades on.
Here's what we got filled on today, and then I'll adjust that. We closed our telephone and sold. We actually sold a put in telephone, right? Closed.
We
closed the call.
That was yesterday's. That was yesterday's.
Yeah. Boeing we closed. We sold a put. American Airlines, we sold a put with the call that we have for earnings tonight. And SPX were filled in that butterfly. So then I'm going to go into our positions.
That's it for the day.
Our working orders. It's working for 4-cent credit. I'm not going to pay a debit for this, but I don't mind doing it for just a little bit of a credit.
One thing we didn't get to, which I really wanted to, and we have 2 minutes, I want to take off our Jade Lizard and IBIT, and I guess we don't need to ratchet the Zebra, but I would take off that Jade Lizard because I think it's at 50%.
So we've got
we didn't have a GTC in for this, but our little weekly Jade Lizard has already hit 50%.
So I'm going to take it and just show this. So watch this. We didn't have it in there for it. So here we've got the 43 put, the 46-47 call spread in conjunction with it. I'm going to hit the 50% just so we can show.
Sure.
It's right there.
And Bitcoin is almost at 80,000. Did you think you would see the day?
I'm thanking God I saw the day because we were levering in the entire way.
I know, and honestly, our IBIT position, we're still down on the year in IBIT because back in January.
No, because Bitcoin is still down on the year.
Well, I know, but I'm just happy that it's at least back to 80,000. In January, IBIT was trading around 50. Now we're trading around 45, but at least we're creeping back up.
So take a look at this. What she's saying is, here's your Here's this day right here was January. Yes, we're about 50% of we're 50% of our down move.
At least crypto is getting a little wind beneath its wings,
in the words of Bette Midler. And that makes us old too. If you said Bette Midler to a youngin',
the wind beneath my wings. That was any family wedding. That was my mom's #1 request.
Oh yes, absolutely. That's
All right, everyone. Have a wonderful day. Remember to trade small, trade often.
Laugh with us, learn with us, and watch Liz and Jenny show. We'll see you tomorrow, everybody. Good luck with your earnings trades.
Tasty Trade's active trader interface makes futures markets your arena. Built for the bold, not the bored. Trade CME futures with a single click. From micro contracts to major ideas. And go even further with futures options. Tasty Trade lays out multiple ladders and charts for total visibility. Plus, hundreds of built-in indicators for traders who want a broader view. Tasty Trade, pro-level tools, intuitive design, total control.
First thing about Tasty Trade is how easy it is. It's a very quick, light platform. It's all on one page.
And with 1 or 2 clicks, you can be anywhere on the platform.
Being able to see graphically where your profit and loss zones are.
Whether it's a pool, a puddle, or a sea, you can navigate your way out of it with the Tasty platform. So I love that. You guys have the most unbelievable customer service in the business.
Email support, call support, get through right away.
They actively listen to the customers to make changes to the platform to make it better.
In fact, I've never seen anything like it in any corporation in the United States.
We built Tasty Trade's web platform for today's traders. See it, click it, trade it. Drill into data, find opportunity, and track the action with hundreds of indicators. Track your options profit and loss history over time per symbol. Note your progress and plan your tactics with a trading journal. Fund your account and start trading right in the app. The tools, the data, the knowledge. See it, click it, trade it. Join the club. Tasty Trade.
Grow a strong community with Tasty Trade's referral program. When your friend joins Tasty Trade, you'll both receive $100. As your community grows, you get more bonuses. Only at Tasty Trade.
We built Tasty Trade's web platform for today's traders. Drill into data, find opportunity, and track the action with hundreds of indicators. Fund your account and start trading right in the app. Join the club. Tasty Trade.
Think you know where ball's gonna go? Test your theories with backtesting. Pick from hundreds of symbols, any strategy you want, and all the data to trade smarter. Tweak the delta, dial the DTE, stack the legs, see what survives. Trade what you want, when you want with Tasty Trade.
all our moves. Get out the glitter ball and play some dope grooves. I wanna play the game, I wanna roll the dice. I got an easy hand that's gonna make the night. You wanna dance off? Let's get our shoes on. I'm done with all your fussing, this body totally bussin'.
What's up, JC Nation? Welcome back to the show. This is Options Trading Concepts Live. My name is Mike. I'm here with Jamal, and it is Glenn's day. Therefore, Glenn Freiberg is here. How you doing?
Fantastic. It is Glenn's day, but
soak in the applause. Soak it in. Hold the applause. Hold the applause.
My hubris does no bounds. Above Glenn's day, it is Earth Day. So shout out to our Earth Day.
Do you celebrate that?
I use twice the amount of paper towels I normally use. So take that, Earth.
What did I watch?
Wow.
I'm printing stuff that I don't need to print.
So you're trying to destroy the world, one paper at a time.
Exactly.
Yeah.
No, I'm a conservationalist.
The Shopping Conspiracy 2024, that Netflix documentary. We just watched it this weekend. I don't know if you guys seen that. Crazy. So good. You got to check it out.
What is it?
This is talking about this lady who used to work at Amazon. It really starts with her. But speaking of Earth Day, she was, they asked her this question in the very beginning. When you were working at Amazon, this thing was, you were there from I think she started in 2004. Did you ever consider or think about where things would end up at boxes, whatever stuff people use? Did you ever think where things would end up? No, I never once considered that. And they just talk about the amount of waste that accumulates in places like, clothes, whatever, that people get rid of, that eventually the fast fashion, H&M and Shein and the amount of clothes that they're creating. I mean, it does make you think, look, I got maybe 6 or 7 Jordans in a closet. I only have 2 pair of feet. A lot of times, do we really need all the stuff that we accumulate? But we accumulate a lot of stuff.
You have 1 pair of feet.
Well, whatever.
I was just going to let him.
Nobody asked you, James.
You should see him walking on all 4s at home.
Yeah.
Anyway, it's just a trip. The amount of stuff that you accumulate, it's wild. And what happens to it, right? Where does it go? It's a really good documentary. By now, The Shopping Conspiracy. I recommend everybody watch that on Earth Day.
All right. I will. And inspired to do some spring cleaning.
Yeah.
Get rid of some of those clothes that, hey, let's be honest, they don't fit me anymore. They don't.
Well, that's the other thing about the documentary.
Those jeans are a little too tight.
That's the other thing about the documentary.
Squat rack
right?
a little too much, you know what I'm saying?
Let's go with that.
A lot of times they make you feel like you're recycling. You feel so good about it, but that recycling, it's like they show you the different ways that it happens, and it all just ends up in a ditch anyway and it lights on fire, or you can, there's like recycling where you do it yourself, right? Or there's recycling where I've ever noticed this, but you can actually take it to a place, like the place where you bought it from, and they'll recycle it for you, but it all ends up in the same place, and it's just like in the ground or at a landfill. Like it doesn't really get recycled.
It's a very low tolerance for mistakes, this whole recycling thing. If you have like one item in there, they'll just throw the whole thing in the garbage, to your point.
Exactly. Yeah.
So
Amsterdam, slightly better. They do some cool stuff around glass as well, like where you can just return the glass bottles to the grocery store and have a very strict kind of vending machine where you can get a little coupon back for doing so.
And then it ends up in a landfill or it ends up in the water. And then it ends up in the water and it's on its way to Africa. Dude, they showed this area in Ghana where they get clothes that wash up on the shore. The amount of clothes that wash up on the shore is insane. I mean, I'm just telling you, everything that we think gets recycled doesn't really get recycled the way you think it does. I'm telling you right now, according to that documentary, it's wild. Check it out.
Well, in a day full of optimism, thank you.
We don't want to break you, so just believe whatever you want to believe on this fantastic Earth Day.
Thank you, Mike.
You're welcome. What about this market? E-minis and NASDAQ up huge. NASDAQ up over 1.3%. E-minis up 0.8%. Dow and the Russell up. Bitcoin surging. Ryan Grace is very happy, up 4,500.
Yeah.
But at the same time, crude oil is up 4%. Is this another situation of we ignore what happens in crude because we just look at the market ripping to new highs, or is it the opposite? Do we fade the market ripping to highs because crude is up 4%? What say you?
It's another situation where it's confusing as hell. Doesn't make any sense. I will say though, I mean, VIX was slightly positive, right? A little while ago, actually, before we came to the show, the RSP index, equal weight, was slightly down earlier, but it's popped back up.
What is that again? RSP?
RSP, the equal weight index of, it kind of, strips out, strips out like the bigger names.
Yeah. I was thinking of there was another ticker that you had that was like the top 50. It was a long ticker. It was like top 50 movers.
That's the hashtag SPX A50R. Did I say hashtag? Sorry, $sign SPX.
Like that's a new trick. I've never tried that before. Unlock.
It is. I know. I got two sets of feet. I'm everything. It is the amount of S&P 500 names above the 50-day moving average. Yeah, this thing has still hung around 50%. In times when things are good, like usually at all-time highs, as you can see, we're usually like above 70%. So looking at this in RSP, similar deal. It's confusing as hell. I don't know what to say, man. This market is kind of confusing. It's even more confusing if you read the news.
I try and stay far away from the news.
Seriously.
Because it's not... it just does not give any clarity at all. In fact, I think it adds fuel to the fire, like you said.
Adding context, adding any sort of historic levels, has not benefited any analysis for 1 day, 2 day, week-long moves. I was surprised. Every open has been very interesting because when news like whatever ceasefire extended right after close, you get everyone else except the U.S. market interpreting the news. Pre-market, it was S&P up, 0.7%, give or take. And you're just curious if that's a fair assessment or not. Not far off, settling in at around 0.8% for the S&P and NASDAQ. I think rose a little bit more. But it's been most interesting to watch because everything I try and do gets burned quickly.
And that's full circle.
I mean, sometimes it's nice to find out right away if you're wrong on something.
Yeah.
Oh, that's what it is.
If you have the discipline to do something about it.
Yeah.
You can also know that you're wrong and sit and stare for a longer time. And that's not as happy.
I like to blend all of those. Sometimes I like to sit and stare. Sometimes I like to exit early. Depends on the situation. If Depends on the situation.
But yeah, it's confusing. I mean, I don't know what to think. Because like you said, at the end of the yesterday, we were worried about a ceasefire, and obviously the market was dropping lower heading into the end of the day. VIX went up a little bit. Oil was rising higher. And then, like you said, last night after the close, they come out and say they're going to extend it. And then the markets end up being up, and we come in the day up. But like you mentioned, Mike, oil is up today. So what does that really mean? I don't know.
Yeah. And the sell-off yesterday was just immediately reversed. Like right after the close, actually. It was pretty much erased. And then this morning, up 50. But we haven't really moved higher than this. Like, it's been a really narrow range. If you look at the 8:30 a.m. to now, we've just been kind of just sitting here. Yeah. So we've had, this looks choppy, but this is a 20-point range. Right here.
I mean, in a vacuum, you would say the last 4 days are just consolidation around 71.50, where we basically are, and it's looking for the next move, big move, either higher or lower. We just don't know. But
yeah, is 71.50 the new ceiling that we just bounced from?
Feels like
could be. But Tasty FX.
Yeah, add one more wrinkle into it. Dollar up today. Does that make sense?
It shouldn't.
I didn't even notice that.
But it does. Look at that. 421 up $20.
I didn't even notice that.
Bingo.
Smash. We need this thing to keep rallying. A couple more days like this, we'll be out of the woods.
Yep. And just a small note on position management there. You're looking at, go back to your positions. All four of your your tranches. All four of your very adequately sized tranches
are the same size.
Same size. So if you wanted to get a little bit more flexible around closing that winner early, or getting rid of one of those losses, whatever you want to do, making them unique position sizes would allow that flexibility for opening and closing in whatever order you want.
Yeah.
For spot FX, but at all four of the same sized increments, those are beholden to the first in, first out FIFO rules.
FIFO.
Yeah. I appreciate your concern.
No, but you're not concerned.
No, I'm not concerned at all.
It will.
You know me.
It will be green.
This will be held until this number is green.
Okay, what about your USD CAD there? How much green is enough green for you there?
How much green?
I mean, I closed the dollar shekel for like $20. So I feel like that's a pretty, like $20 in a couple days or a day.
Sure.
I feel like that's fair for a 5 micro lot position. But as you can also see, I'll be holding these for a while. But I am very intrigued. But you did say, so I've had this position on November 5th, this dollar franc position, and it's been a positive carry. Mm. So I've been positive carrying this thing for, how many months is that? 5 months?
Yeah.
So
since November.
When we close this for a small win, Glenn is going to do, I'll say solid. He's going to do some.
I'm in the mainframe.
Yeah.
Past the firewall.
Did you watch the movie Hackers recently?
Yeah, I was about to say, did you watch that?
You got to watch it. It's incredible.
Yeah.
Is it going to scare me?
No, it's an all-time classic.
No, not at all. You're going to laugh, actually.
It's actually...
It's not even a comedy.
The technology is... What used to be like very high-tech, like this is what a computer looks like on the inside, is insane.
Yeah.
But it's
amazing. Yeah, and what you just said sounded like you watched it already.
Yeah.
That's funny.
But yes, Glenn is going to calculate how much revenue I've received from the positive carry in the dollar franc position.
That's cool.
So over the 5-month period of holding 15 microlots, I just added this one recently.
Let's be honest. By the time I do it, it might be 8 months.
I don't think so.
Just kidding. 5 months and 1 day, I believe.
I think this position will be closable in the next couple months.
Yeah, you've got some across the popular U.S. dollar pairs, U.S. dollar Swiss franc. This market, the highest mover today on a percentage basis, and building a pretty strong base after trying to get below that 78 level there. So I'm looking for that 78.5 level to kind of get out of this congestion period. Like you said, Jamal, across assets, I feel like we're in a pretty whippy, tight range. US dollar being one of them, consolidating here this week. But of course, the fun part of looking at global FX markets is you get some of the other news items. Like today we had UK inflation data stronger than expected. So if you're looking at comparing, that euro dollar to the pound dollar move, we've got pound dollar pretty much unched on the day, whereas euro dollar falling a little bit here. You can look at that dynamic directly by looking at the euro pound cross currency pair. That one a bigger mover in a historically above, less volatile pair. So some bets coming in on more rate hikes from the BOE in coming months than the ECB or even the FOMC, which is slated to stay put for the time being. So that's fun. Good to know. Another thing across my board is kind of the growing popularity for shorting the Canadian dollar or going long. If the pair you're looking at, you already have that position on. Just reading a couple more takes here as we get a kind of slowdown in this market as well, stabilization. A fall from over 2% from April highs to start the month, and getting back into, lower territory from the past, 2 years plus. And this coming on the heels of a couple things, Canadian dollar historically more correlated to oil markets. That correlation's really dwindled in the past few years now, really, as there's less, foreign investment for the oil sands in Canada. It's less of a percentage of its economy's GDP. So we really haven't seen that correlation play out. And then you start to think of what else is going for the Canadian dollar. Not too much. And so you're starting to see institutional clients, hedge funds, banks, start to take short positions in this Canadian dollar. We'll see if that's, of course, if that gets to my newsfeed. They've already told their institutional clients that, and probably priced in from a position level. But it's important for retail traders to know, just what trends you might be fighting if you're calling for mean reversion in something. A popular instrument is actually this Australian dollar, Canadian dollar, because in months past, this Australian dollar's been pretty propped up on some similar speculative longs, where you see institutional investors really supportive of the economic growth in Australia, and regardless from the back and forth in risk sentiment, has kept this Australian dollar pretty propped up through 2026. And so combining both of those theses?
I like thesi.
Combining those thesi.
Yeah, I like thesi.
You can get into this market directly. Some calls for parity here. On this chart, you'd say, well, that's never been done before. But if you go back a few years, I think 2018 is the last time this market was did hit parity. So it's pretty interesting. Like, this is still a traded market, fairly liquid, with two very popular currencies. And so this one, if you were looking in a vacuum and saying, this has been on a huge run, perhaps this is time to call for mean reversion, just worth knowing that you might be fighting some increased liquidity from some of those bigger players. So that's interesting to me.
Parity is 1.0.
Parity is 1.0. Yep. So not that far.
Interesting.
Would be farther in this US dollar, Canadian dollar, much farther. And the last time we got there was on some of those big foreign investments in Canadian oil that we haven't seen especially since the
Wait, I think I
US
should answer this.
shale.
It's from Afghanistan. It really said Afghanistan. Hello? No.
Short?
Is the war over? Okay. It really did say Afghanistan. I swear to God. I'm like, wait, what?
That's a new spam.
I don't know. I don't know.
It's new.
I'm sorry, guys. This just in.
We've reached new spam levels.
Afghanistan.
Yes,
Oh
I
my-
will broker
Afghanistan? Like what? Let me answer that real quick. Let me just see. You know, you might give us some
We're
insight.
looking for tips anywhere we
I'm
can get 'em.
saying, dude.
Ear to the
I said I was confused.
That's pretty good.
Sorry, Glenn.
No, that's what I'm looking at today. We've got some more. If we're looking at this dollar yen market, that's back near highs. U.S. dollar putting the pressure to Japan. Overnight, tonight or tomorrow night, imminent, is some Japan inflation data. Japanese, sorry. So that's kind of the rest of what's on my board for economic data this week. Could see a surprise to the upside there that buoys this currency a little bit. It certainly needs some help, but this one trading in a pretty tight range compared to some other free-flowing currencies as of late. But overall, weird day, including dollar markets. Dollar up, stocks up, oil up, metals up.
They are.
Yep.
Yeah. I mean, that one almost kind of makes sense.
What's
but
down?
It gives
Does anything need to be
It gives
down?
me some comfort that you're seeing some weird stuff on that side too, honestly, with the FX, because it's definitely a little bit strange day in the market.
And you're not seeing any move in bonds, really?
Not really. I mean, it's just a very weird day. It's just one of those days where correlation literally means nothing. Which happens sometimes.
I'm less concerned about that and more about, I don't know what would change. I don't know what the narrative is, and I don't know what's coming that would change it.
Yeah.
Is this a market that is more conducive to, like, not technical analysis, but like resistance levels, or, is it just a matter of hitting our previous high and seeing if that is enough to introduce sellers or speed right through it, or how are you guys thinking about ranges here?
I actually did an options math check yesterday on the YouTube channel, and I looked at 500 points below and 500 points above the market, and I think it's kind of interesting if you look at June versus the end of the year. If you just look, let's go to 6,600 and 7,600 for June. As you can see, we've got way higher probability and pricing on the 500 points below the market, 5,700 relative to 1,800. And the probabilities reflect that too. You have a higher probability of the 6,600 versus 7,600 by June. But if you look at the end of the year, that flips. Now, the end of the year does price in some interest rate premium into the upside. But when you look at 7,600 versus 6,600 here, you can see higher premium on the upside, 36% in the money, and lower premium on the downside, lower percentage in the money. So the market's kind of pricing in kind of what we're seeing, where we're still expected to have volatility in the near term through the next couple months, but the market is pricing in an upside move through the end of the year. So kind of interesting.
Very neat.
And I would be leaning into that upside if that's what you're playing for, because just from a cost parity perspective, if you're trying to lean long through June, like, these options are significantly cheaper compared to trying to play for a downside reversal, unless you're doing like a butterfly or something like that. And what you'll see is if we do get that upside move, those calls will multiply 4x, 5x easily. The puts aren't going to multiply as easily because first of all, they're more costly upfront. And as you can see, for a $5,000 option to get to a $15,000 option, it's got to be completely at the money or go in the money. So there you have it.
Who knew?
Who knew?
You did.
One last spicy pair. Anything? Maybe there's no spice today.
Oh, spice.
What we've seen, I know we're talking about correlations breaking down, but what we've seen over the past 2 months in terms of popular US dollar pairs, the highest beta pair has been New Zealand dollar, US dollar, in terms of correlation to the stock market, if that's what you're looking for out of Spot FX. And then if you want to get an even larger correlation to the stock market amongst all dollar pairs, dollar peso, highest correlation there. So that's interesting. We're seeing we had some big news in the land of the Hungarian forint on their recent election and their new regime favoring an eventual migration to the euro. That one's been supported a ton since the start of April. I think we are, from April, we're down 6%, but we're down as much as 8%. So a big uptick.
Which one is that?
HUF.
So in that case, if they migrate to the euro, I wasn't paying attention back in the day when these things happened, but like, does that mean their currency goes to zero or what?
I believe, the exchange rate would cease to exist, and the path over multi-years to get onto the euro involves a step in which it's a banded, it's not free float, an exchange rate, but loosely tied to the euro, so that if it gets out of a 2.5% range or something, then the powers that be will attempt to rein it in. And you exist under that environment for however long those economists deem appropriate to then peg it and migrate.
I like it. Well, I'm long the dollar peso because it's spicy. So we'll see if it destroys me. But either way, thank you for your contribution to this wonderful world of Tasty.
Thank you.
Bid you adieu.
Thank
Good
you.
to see you
And
on
have
Wednesday.
a happy Earth Day further.
Thank you. Likewise. Glenn Freiberger, everyone. Follow him on the Twitters. Also give TastyFX a follow as well.
Yeah.
E-minis and NASDAQ still just chopping around, up 50. NASDAQ up 350 and Bitcoin up 4,000. Have you done anything today?
Just one thing.
Okay.
I don't know, when I think about this day, first of all, you remember I was talking about de-risking stuff. I sold AVGO yesterday. That stock's up 4% today. At the call spread. I had the 420 call spread. Anyway, I sold UAL. I sold a strangle in there. Vol is still high. Stock is up. It's getting smoked a little bit today after earnings, which I thought were pretty decent. I mean, I thought they said some decent stuff. But vol is still high, so I'm looking to take advantage of that. Cool. Unfortunately, the GE strangle that I sold yesterday, I think is likely down on UAL. God, this sucks. I'm getting beat up in this, but it's cool. We're out in June. Short the 273.30, just looking for a bounce back at some point. But
For GE?
Yeah, for GE, which again, I think I'm mentioning because I think it's related to UAL.
Yeah.
But yeah, sold the UAL strangle. That's all I've done.
Cool. Yeah, I said yesterday, and we were talking about this too, like maybe we wait for the earnings and see what happens. We both were saying maybe we see downside movement because of the elevated prices in crude, especially down further on the time frame for the different contracts that are picking up a bid. So yeah, I think I'm gonna get in on this, go to June. Yeah, go to June and sell the 80 strike put for 320. $700 in buying power. I like it. Let's let it work for a little bit.
I'm up $15 from when I sold it, like, what, hour and a half ago, 2 hours ago.
I like it.
Yeah.
Love it, love it. Couple things here. I closed the JPM calendar spread. We had the 320 strike long June, short May. Closed a 70-cent winner. It was a small trade. But just getting out of that as we approach the strike here at 320. At any point in the time frame of your calendar spread, the max profit is when the stock is at your strike. So it was right there, just taking some risk off into this rally. And then Natty Gas I saw 3 digits, $110, and I was like, this is weird for me because it's Natty Gas and it's a $100 winner. So I had to take it off. So I took it off.
There you go.
And just booked it because Natty Gas has historically had my number. Not
alone in that.
Yeah. Just got filled in on the UAL position. 320 was the fill for the 80 strike in June. Apple, an offensive roll here. So we've talked about this before, but Apple, I can pull out the order chains here. I had the 270, 285 diagonal spread, long May, short April, that I put on in March before the market sell-off. Rolled the call down to the 270. I had the calendar. Then I moved it from 270 to 275 for a small debit. And today I moved the 275 7-day up and out to the 280 9-day, which is when the earnings announcement is. So you get that earnings boost, collected a 65-cent credit. So I now have a 10-point wide diagonal on for a $5 debit. So just creating more offense here and giving myself the ability to take out a $200, $300 winner if Apple continues to climb up to 280. And it's up 60 cents right now overall, but just wanted to widen it out and make sure that pre-earnings, if we continue to see market strength, I have the ability to just close it out, and then I'll restructure something long June or July and then short the weekly cycle and take the risk off and just restructure it a little bit.
Nice.
Yeah, felt good. And then IBIT. So this comment is long, as you can see here. But basically, long story short, IBIT was our year-long trade last year. Ended up getting assigned on the 65 strike. So I have 100 shares at 65. However, I've collected $3,408 in total over all the positions, including taking the shares, taking a covered call on and off, rolling the covered call, et cetera, et cetera. So this is my last stand here. I was already in July at the 45 strike, and IBIT's at 45 right now. So I was like, I don't want this to go in the money and just kill this position, especially since this is the best strength we've seen in Bitcoin in a long time. I want to lean into that. So I rolled the 45 call. I bought it back in July, and I rolled it out to December, 240 days out, and I moved it up 10 points. So I went from the 45 short call to the 55 short call in December, paid a small debit of 35 cents, but I now have 100 shares, stock's at 44. I've got the 55 short call. Short call's trading for like $300 or $400, but I've collected $3,400 in this position. So we're golden in terms of being profitable right now. And if we do get a rally up to 55, I will have added $1,000 of share profit potential, plus the extrinsic value that remains. But if this reverses, that December call that's 55 at the 55 strike is still going to move. Like, it's, even though it's a longer term option, it's still going to be sensitive to delta. You can see this here. Like, the 55 is trading at 350, the 65 is trading at $1.50. So if we get a 10-point sell-off from here and go back to 35, this will still lose value, and I can buy it back and then re-enter into a more near-term position. But just wanted to give myself as much possible profit potential if we do get that rally up there.
Yeah, my shares are at 55. I'm still short. I rolled the other day, I think, but I'm short the 48 call. Another move, and maybe I do a similar type deal and go further out closer to the 55 strike. I was just looking at the option chain as you were talking. It's interesting. We got to ask Ryan about this. Look at the implied vols. Like, they move around a good bit, and for something that doesn't necessarily have earnings or anything per se, right? Like, it's I mean, like, the IVX for May is 48, and it's for June it's 50, for July it's 50, but then for August it's like 53, then it jumps up to like 57 in October, then it goes down in November. Like, what's up with that? Is there like some halving thing coming up or something? Or
yeah,
you know what I mean, we got to ask Ryan about that. It's interesting.
Yeah, it is interesting to see kind of deviations here, because if you look at any other stock, like UAL is probably a good one now. UAL post earnings, you have this kind of flatlined implied volatility. They're all the same, 56, 54, 53, but you have a lot more volatility within these ones here. To Jamal's point, 50 to 53 to 58 to 50 to 55. So, yeah, I don't know.
Speaking of that and expected moves, look at CAR. We did a signal versus noise today, which is a pretty good thing that Chris and I have been doing on the regular. Look at Yeah, it looks like it might actually be doing down. But look at October. I just noticed this today where we were doing signal versus noise. Look at the October move. It was like $666 earlier, 542 now. I mean, wow, crazy. For those who are figuring out options or looking at expected moves, like this is telling you in either direction, that's the expected move between now and October. And you can look at similar names like URI is in the same bucket. I mean, it's also a rental company. It's not a car rental company per se, but it's a rental company, similar price point, $800. Look at the expected move for September. I mean, $150 for December, $200. So totally different. And it's just tells you how much volatility is in these. This thing's crazy, bro. This thing's crazy.
Yeah. And really, I mean, it seems counterintuitive, but if you have 100% IV, 100% IV extrapolated out to 365 days is the stock doubling or going to zero. So like when you look at these and you see, oh, the stock's at 615, and to your point, like October, November, December, the further out you go, it's equivalent to or greater than the expected move, or the actual stock price, I should say. But that's because you have an IV over 100% with a days to expiration less than 365. So all that to say, got to be careful out there.
Yeah.
And
I mean, this is doing crazy things, and you're seeing some of these other names pop up once again. Beyond Meat, Poet, GME. I feel like has been back in there. These names are popping up again.
It's fun.
might be the short term end of the rally.
That'd be fun if we got a nice GME pop, sizable GME pop.
Yeah.
Oh, what a day! What a day for Carr. Yeah, I'm interested to see what Nick's position is trading for, because I know he did a pretty big position here. I assume it was in this one.
It was.
There we go. Yeah, the 500, 400.
15 versus the 8.
Yeah, so he's up $500 if he kept it, which I assume he did.
Oh yeah, I assume he did.
So yeah, bought it for $53.80. Now this is trading for $5,800, and that is largely because the short option premium is getting decimated relative to the long, at least for now, into this little sell-off here. But yeah, nice trade. Expensive though. Expensive.
Very.
Cool. Looks like the market's selling off a tiny bit here, but it is time to pop over to the YouTube chat. If you want to join us on the Tasty Live channel, we're streaming live there. You can throw in your trade ideas, questions along the right-hand side chat. We'll get to them right now. Let's see. What do we got here? I saw some questions about Microsoft. Okay, here we go. Put on a 425, 440 call spread in Microsoft. Big winner. Oh, yeah. Long call spread.
Big winner.
Inspired by Jamal. Look at that.
Every blue moon, you get one,
Yeah, I mean, this thing is in the money now, and I'm not sure what expiration you're in, 425, 440. Oh, it might have been the one we got into, the Super Bowl, because this is the same 425, 440. So, yeah, trading for $700 right now. Looking good, feeling good. I have this 500 strike calendar working out nicely, and then I've got the same kind of trade, the 380, 370 put spread with the 425, 435 call spread, but the 435 short calls 2 days out. So I'm just keeping my eye on this. I'm not going to roll it just yet. It's trading for, I guess it did come in a little bit. It's trading for $270 for 2 days. So I've got 4 points of wiggle room, but just like the IBIT position that I rolled up and out, if I need to, I can just buy this back, roll it out a week. As you can see, I can move it up a little bit for small credit if I move it just 2 days out, 3 days out. But if I move it into the earnings cycle, which is being priced into this May 1st expiration, 53% IV, you can see there's a big jump here. I'll be able to move this way higher. Yeah. So if I really needed to or wanted to, I can move this to a 465 short call for a credit, almost $1 credit. So that is the power of an earnings announcement pricing up these options across the board. So lots of flexibility, but I would love to have this kind of just flutter around 435 over the next 2 days. I can take all this value and then just uncap it or maybe then move into the earnings cycle. We'll see. What else we got?
Well, I'm really glad I moved my straddle in the MNQ. We're basically
Yeah.
at 27K now.
Isn't it funny? Like
It's true.
when I moved the E-mini one to 7,400, I was like, it'll take us a couple months to get here. Wrong.
Golly.
At this rate, we could be there by Friday.
I know.
It's literally insane. You moved it to, it was still a strangle though, right?
It was a straddle. It was a 27K straddle. Now it's a strangle. 27,750, 27,800. Which is not that far. That could be 2 days.
Yeah, but I mean, you're positioned perfectly for it.
Yeah.
And yeah, it's crazy how fast these markets are moving. If I'm selling poor man's covered calls against my leaps and the covered call is almost in the money, how do I exercise my leap? Can you explain that process of the platform? Do I have to call? Yeah, you'd have to call if you want to exercise it, but
you really want to exercise?
Why would you want to exercise it, I think is the question. If you want the shares, that's totally fine. But you're going to use a lot more buying power if you convert your long call into shares. And if you're worried about your short call going in the money, your long call offsets all of the risk there because your long call represents 100 long deltas equivalent to 100 shares. So you have no issue there. And if you wanted to, you could do something like we did in iBit or Apple where like if you're at the money with a short call, you can buy it back and then move it out to June or July, and then move it up a few strikes. So like buying back May, the 45 strike for $1.90, selling the July 50 strike for $1.97, you pick up a small credit, you give your shares or your long call another 500 points of, or $500 of profit potential. That's an offensive roll though, so I don't know what your prerogative is, but there's no need to take those shares if your short call goes in the money. You're protected with that long call.
Yeah, you keep the trade going, or it sounds like you want to keep the trade going since you're talking about exercising shares. So yeah, just buy that one short call back and roll it up further.
Yeah. Gus was telling me yesterday that the chat, we were talking and the chat was like giving us a combo name, like Mermal or Jermike. So now I see it here, Mike or Mall. Hashtag Mike or Mall.
Wow, that's funny. That's funny.
How to handle poor man? How to handle a poor man's covered call? I would like to get out of the short leg. Thoughts? Buying back the short leg just adds risk to your position. It does free up your upside profit potential, but I would rather roll it up and out. Like buy it back, move it out to a further dated cycle, do it for credit. That way you keep your hedge on, but you still give yourself more upside room. But if you give us the exact position, we can take a look at it. What do we think of GEV?
Dude, I just noticed that stock is like $1,000. I didn't even know this. Holy cow. Earnings, right? I think this was earnings. What a move.
It's like it, yeah.
What do we think? I think I'm upset that GE's not doing the same move. Oh my God.
Truly.
This is amazing. I didn't know. I mean, they just spun this off not that long ago, right? Like in the last 2 years or something?
Yeah.
Amazing.
Yeah, I mean, I think if you look at the 900, 1400 strangle for $3,700, putting up 11 grand in buying power, $3,700 though is 30%, almost 40% return on capital on buying power requirements. So I like that, but it's still a large trade here. And the markets aren't that great. You got $33 credit to $41.50 bid ask. So I would be really careful with your pricing in and out. I would not do market pricing or market orders. I would do just kind of work this. I would start higher. So like start at $39. You have nothing to lose if you get filled higher and you have everything to gain. But yeah, I would start higher and then work my way down 5 cents or 10 cents until you get filled. I wouldn't start at the mid price with a bid ask spread like this. And that's for everything. Anytime you're trading a wide bid ask spread, make your price better for you and then work it down if you're trying to get the best fill.
Yeah.
Your mic sounds better. That does have a ring to it.
I mean, all these names in this industry trade like this. When you look at it, GEV, ETN, PHCM, they're all like very high dollar names. Some of these, I've been trading some of these in years. Rockwell Automation. Yeah.
Here's a question for you. How can market makers actually hedge with stocks when there aren't any to borrow? Like a hard to borrow stock.
So you can, so this is actually something I used to do all the time. We used to create a long stock position by buying puts and selling calls against it, right? Kind of deep in the money.
Yeah.
And that way we would be able to trade it. Yeah. We used to do that all the time.
Yeah. You can just create synthetics, to Jamal's point. Like if you can't, like in car, if you're trying to hedge, I'm sure a lot of this was happening already. You can do a synthetic position here where you've got long call, short put, gives you the risk profile of 100 shares. So you can create a long stock synthetic or a short stock synthetic with a long put, short call, if you wanted to or needed to. So that's the beauty of options. You can literally you can create any other risk profile that you want. Like a covered call in car, buying 100 shares, selling a call at 650, the risk profile looks like this. It's exactly the same if you just sold the 650 put. Same risk profile.
So yeah, you just do what's called a conversion by selling that stock selling the call, buying the put and buying stock, which is expensive. But I mean, for people who have the money, it's not that big of a deal. And they create a conversion and then they're able to, like, as the stock moves up, you're able to sell stock against that if you need to.
Beautiful.
It's expensive. I mean, this is the type of stuff that market makers can do, though.
Yeah. With infinite capital, or at least perceived infinite capital. I put on a Microsoft calendar diagonal, sold the May 410 call and bought the June 370. It's working well, but how do I figure out the max win? Well, June 370, May 410. So, oh God, so many items here. So your max profit, the traditional like textbook definition, or how I would look at it, is your max profit is the distance between the spread, which is intrinsic value, 370 to 410, so that's $4,000, less your credit receipt or your debit paid, sorry. So let's say you bought it for $3,000, you have a $4,000 max profit on the spread, which is $1,000 net difference. Now the tricky part is your actual max profit is not possible to give you, because your short call is going to expire in 23 days and your long call is going to have another month left. So your perceived max profit is if you get all the extrinsic value out of your short option, and then you have some extrinsic value left in your long option. So your short call 23 days out, even though it's in the money, it still has hundreds of dollars of extrinsic value associated with it. So you have about $900 left to gain on the position on your short call if it remains in the money. Your long call has $500 as it stands, but this is not going to go away as fast because you have another month left. So let's just say Microsoft stays right here. This option over the next 20 some odd days will probably lose $200-300, but you'll gain $900 in this short option. So your net difference, if you held this all the way to expiration, is going to be about, $600, we'll call it, from here. So depending on how much you bought it for, what it's trading for now, add $600, and that's kind of your perceived max profit. So you can use the analysis tab, go to the Theo, and just adjust the position here. So if we push this all the way out to May expiration, you can see this is, kind of what we just talked about. Your P&L Theo is about $600 if we stay at this level from what it's trading for now. That's that.
Yeah.
That is that. AMD.
On the rise.
On the rise.
Again.
Taking some heat in May. AMD call spread. I'm thinking to close the long with a profit and leave the contract with a short put as collateral.
2 weeks.
Yeah. So, I mean, you can do something like this, but you currently have a 245, 255 short call spread with $1.50 of max loss remaining. This trade probably had like a couple $100 left. If you sell out of this 255 long call, you would pick up $4,500 of credit. And then if you sold a put, let's say you're doing this like a straddle here at 245, you pick up another $3. So you'd have this undefined risk position on with like $5,000 in credit, which would bring your break even to the current stock price. However, if AMD keeps climbing, you're losing way more money than if you had just kept the spread on. So you're completely changing the position, but yeah, you can do something like that if that's what you want to do. Or because you have so much credit, if you're doing something like this, you could sell this 280 put or something like that, go inverted. But you're completely changing the dynamic of the trade. So just be mindful of your order chains here. It'll keep track of all the adjustments you make, which is nice, but just beware of doing something like that because you go from a defined risk small trade to a $6,000 trade with undefined risk. Tesla.
Earnings.
Let's talk about Tesla. 389.
Ce soir.
Tesla. $20 expected move. That's really low.
Talk about earnings, baby.
Let's talk about all the electric cars. Yeah, I don't know. This one's weird. $20 implied move feels really low for a $400 stock. That is Tesla.
Only I feel like it hasn't moved big though the last couple of earnings. I played it and I really feel like it hasn't. I mean, certainly.
Yeah, I remember distinctly saying, "There's no way this doesn't move," and then it just opens like flat.
yeah.
But yeah, I mean, I have a really hard time with this one because I guess I'm a Tesla bear.
You are. Just own it. Just own it.
I feel like if I'm playing this, it's going to be to the downside. But it's a $400 stock. I can't really go crazy anyways because these options are too expensive. So I might just do like a short-term diagonal, like buying April 29th or maybe buying Monday, April 27th, and then selling the 2-day to the downside. Just a small little diagonal spread, maybe the 370. What does that trade for? 65 cents. Instantly purchase. Yeah, I think something like this makes a lot of sense. Just for a small little trade. And as you can see, I'm just going out on the plane here and just looking at these options that are trading for a couple $100. Yeah, I'm going to do this. I'm going to go long the 9-day, short the 2-day for $250. Just a small little calendar.
Expected move.
Yep, expected move at the 2-day. And then if it chops around here or goes higher, I can roll this 2-day into the 5-day or the 7-day and just keep this little small trade going. I have to play it to the downside. Instantly filled. It's going to moon. Are you in this already, or are you?
I am. Yeah, you know me. This has been part of my my Mag 7 play. I had some earlier, and basically, I'm just playing with proceeds at this point. I got a couple. I got the 425, 450, and the 450 calendars. So, it's really not even about earnings for me.
Just the vol.
Yeah.
Yeah, I like it. Yeah, I think the vol is really high here. Like regardless of whether you're bullish, bearish, neutral, selling something against anything you're buying back here, like you're getting tons of value for these weekly cycles. I like to sell the 2-day just because you get that pure implied volatility from earnings, as you can see with this huge IV boost here, and it's almost the same expected move, 19.5 relative to 21, relative to 23.
Well, sorry, it's not just about the vol for me. I mean, I'm further out, so I'm not even playing earnings. Mine are like I'm short the May 1 cycle and long regular May. So yeah, further out.
But you'll still get that crush here.
Yeah,
for sure. Last question here. McDonald's. 2 different McDonald's trades.
D's.
McDonald's diagonal at short May 320, long June 310. Suggestions for management.
Stock's down, kind of down, huh? Makes sense though, I guess,
Yeah. I mean, it's trading for $4. You're probably not out that much, I would imagine. May, you're in the May monthly, trading for $1.50. I mean, it depends on your debit paid, but if you wanted to hedge just a little bit, maybe you could roll the 320 down to 315, or you could bring it into the earnings cycle, which is going to be the 16-day. So you could bring the 320 down to the 315 here and, pick up a little bit of premium or go to a calendar spread at 310, but then you have no intrinsic value potential. So, I mean, that's pretty much it. Your short option's still trading for something, and this is gonna move based on earnings. So it's basically an earnings trade that you have now, hoping that you get it bailed out to the upside here. But that's basically it. If you're gonna manage this position, you're just gonna manipulate the short option. That's pretty much it.
When is earnings? Oh, the 7th. Okay.
Yeah. Yep. But that's it. We're out of time. Thanks for tuning in. If you have any further questions, you can find us on Twitter. I'm at Trader Mikey B. Jamal's at Jamal Chandler. We got plenty more content coming your way on the YouTube channel as well as tastylive.com. So stay tuned. And we'll see you same time, same place, 11 a.m. Central tomorrow from the SIBO.
Not tomorrow.
Not the SIBO floor.
Yeah.
Oh, yeah, I forgot.
We still have a show. Yep.
Yeah,
I got a thing tomorrow for my kids'
Yeah.
potential high school. So I'm not going to make it to the SIBO, but we still have a show.
There is a strong possibility that I take the train to SIBO. And then what are you doing here?
Yeah.
Don't
do it. Don't do
Bye. All right. Thanks for tuning in. Stay tuned. We'll be back in about 90 seconds with some more content for you. Peace.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from Tasty Trade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. Tasty Trade. Download today.
I'm just going to wait for the stock to dip, then I'm a buyer. Buying into weakness is a phrase used to describe the action of getting long a stock into a down move. It's a contrarian trade. Most people want to buy what's hot, the stuff making huge upside moves, the chart line moving up and to the right. Nobody wants the stock at lows. But it's hard to buy high and sell higher, rather than buy low and sell high. There is a phrase for this. When the time comes to buy, you won't want to.
This is Chicago. We invented the skyscraper, the Italian beef, and the standardized options market. SIBO is not only the birthplace of options, it's also where Liz and Jenny got their start. In an industry first, 2 female former floor traders broadcast live from the floor. Hear the sounds of live market action and feel the electricity as they present real-time trade ideas and research-backed market studies live from the SIBO's SPX pit. Watch Liz and Jenny live from the SIBO, only on Tasty Live.
Grow a strong community with Tasty Trade's referral program. When your friend joins Tasty Trade, you'll both receive $100. As your community grows, you get more bonuses. Only at Tasty Trade.
There's a beast in the financial world, and it's not the bull. If that's you, join us on Tasty Trade. Genius loves company.
Step into the futures arena with Tasty Trade's active trader. Multiple ladders, hundreds of indicators, precision control. From micro gold to NASDAQ, all CME one click.
Pay for backtesting? Nah. Trade that capital instead. Pick from hundreds of symbols, any strategy you want, and all the data to trade smarter. Tweak the delta, dial the DTE, stack the legs, see what survives. Check out Tasty Trade.
What is going on, everybody, and welcome back to Risk and Reward. Errol and I have our matching black shirts on, but it is not a Black Wednesday. It's a Green Wednesday. We're moving up. We talked yesterday at length about the, shall we say, bipedal, what's the word I'm looking for? Two-sided headline risk that we're in, and we got some headlines yesterday. Right after close, the ceasefire was extended, at least on our side. Sort of confusing situation there, but the market is pleased with it, trending back towards all-time highs. I'm joined as always by my wonderful co-host, Errol. Errol, how are you feeling?
What's going on? Blue skies, all-time highs. Today's another really warm day in Chicago, so all-time highs right around the good weather season coming back around, so can't complain. Sahil's always like, really, Errol, the weather? You're going to talk about the weather? But I'm being very genuine when I bring up the weather. Like, I'm pretty hyped about it, and it is something I quite frankly think about very often. So nonetheless, a little bit more headline risk. We had gapped up, and then we're ripping to the upside right now too. So I know yesterday we were leaning pretty short, and before market closed, we had de-risked quite about 80 to 90% of the positions without even knowing this headline risk was coming. But good Lord, what a difficult market to trade, what a difficult market to find positioning in. And we'll see what happens over the next 48 hours in this whole deal with the headlines and ceasefire, maybe not. I don't know. How we doing though, brother?
I'm doing good. Yeah, anytime it's a green day, I'm doing good these days, and crypto ripping as well, which is panning out for me. Rivian making higher highs, so you know I'm a happy camper when all those things are going my direction. Yeah, it's going to be an interesting next 48 hours. Especially in this environment, I'm very interested to see what happens on Friday as we head into the weekend. We're in this headline-driven market, and obviously the weekends just present a lot more surface area for headlines while the market is closed. So will we see people, start to go a little bit more risk off as we head into Friday, or are we going to get a pump into the weekend, expecting more positive headlines? That seems to be the way things are trending right now.
It is kind of wild. It feels like the weekends are starting to be mini events.
Yeah, it's true. It's true. And sometimes nothing happens, which can also be an event in itself in this environment that we're in. So. Yeah, lots of movers, but we can jump into the Tasty platform here, and I'll do a little
off the bat
2-day portfolio.
Yeah, absolutely. Off the bat, anything sticking out like a sore thumb right now? I know you were talking about Rivian, those EV companies, but is there anything that's just the standout child for the day?
Yeah, I mean, crypto is really the first thing that I would go to in that regard, which isn't something we usually talk about this early in the show, but just continues to take the stairs up here. Don't look now, but we're approaching 80K. It looks like we're going to test this 80K level. As we already have one time before, but it looks like we're gonna retest this 80K and maybe move through to make some higher highs. This is the first sustained positive momentum that Bitcoin has had in some time, really. I mean, what's this? Back late last year, this is 87 back up to 96. So now we're talking about 66 up to 78. So yeah, this is a bigger move than that. So I mean, really, since this drawdown began, first time we've seen just succinct $12,000 continuation to the upside on Bitcoin. So it seems like the bottom might be in there. I'm feeling good about that. Rivian also moving like a company a little bit, which you don't really expect. I mean, it's
a compliment.
Yeah, obviously driving towards the upside a little bit, but if we go on to a slightly smaller time frame here, this just looks like good growth on the 1 hour.
Oh wow, I was about to say this is the same company. You just switched the time frame right there.
Yeah.
Okay. Yeah, no, I mean, a lot more steady action over there. On the larger time frame, it looks like such a volatile company. I guess that's a little bit of the personality that these EV companies have in which they trade, so.
Yeah, absolutely. But yeah, moving on today on good news that they have started production on the R2 SUV line.
R2?
Yes.
R2D2.
Yeah, R2D2. That's a good point. But yes, production has started. They are expecting to incur some upfront costs initially, but they do expect them to pay off, obviously, or they wouldn't be doing it. But they're set to release these sometime before the end of the year. So that was a part of my thesis with getting involved in Rivian in the long term, and I'm happy to hear that we are on the correct timeline there. Hopefully we can actually hold on to some of these gains. Rivian so loves to work up and then just work right back down to the previous levels. But maybe we can hold some of this. If we wind up holding over 16 once this all shakes out, I would be pretty pleased. That would be an actual sustained dollar move to the upside. So those are the two biggest winners in my portfolio. Other than that, Salesforce continues to go well. UNH logging another good day. This has been some crazy growth.
Those gaps are pretty vicious.
Yeah, it's incredible. And if we zoom out even further to maybe some weekly candles, get a longer time frame going here. Can't even see the top, but yeah, obviously we had last year CEO assassination followed by DOJ probe coming all the way down to these levels. Zooming back into the 1 day here. I got involved I don't know, somewhere down here. I don't know if it was right here or over here, but I bought at this bottom. 268.85 is my average on my shares, and I entered my options around the same time, which the options have a freaking long way to go, as you can see. 57 DTE, 500 leaps. That's not looking so hot, but they're up 100% since yesterday. So that's something. If we just, it's the whole. Would you rather have $1 million right now or a penny that doubles every day for a month question?
Right.
Let's just
give me the penny.
Just double the price of these options every day for the next month, and then I'm up and we're good. Way up. But
no, risk reward is really solid on that one.
Yeah, but I'm in a position now where my time horizon might have been too tight on these 500 calls, which they've been open for 343 days. I couldn't have been too much looser. My time horizon might have not been right on those, but I'm in a position where having these 4 shares at 268.85, it just shows the value in buying shares sometimes if you have a leap sort of thesis, because even if my time is off a little bit on these, this contract was something like $1,150 notional, $1,150 notional. I'm in a position where if we ever return to 500 and I continue holding these shares, I'd be up $250 a share, and I'm able to actually cover the loss on those options. So not exactly what we usually mean when we talk about covered calls, but I would be able to cover that call. So that's looking good. I like where I'm at on that. Aside from that, ETHA continuing to move up. I also have some leveraged UNH in the form of UNHG. I just went shares here, so I will hopefully be pleased with that. Decided to take the time horizon out of the equation. Netflix tested my 90, but has begun to work up again, so happy about that. MicroStrategy moving up along with Bitcoin. That's pretty much the excitement for me over here. No management yet today. I am beginning to look more closely at my USO situation here. I'm thinking I'm gonna maybe take these 75 puts at 86 DTE off by the end of the week. I don't know. I'm between taking them off by the end of the week or letting it run until they're 60 DTE and then deciding what I want to do at that time. They're down so much that it's like, it's right on the verge of where it's like these are down 75%. That's like right on the verge of where I'd be like, okay, well, this is still worth it to cut the loss. There's a little bit left here versus something is down 85, 90%. It's like, okay, might as well just keep holding this. Yeah. It's basically worthless anyway.
Yeah.
So we're right in that decision zone. I'm going to see what happens. I feel like I know that time is my friend as far as oil prices coming back down, but is 86 days really a realistic time horizon to see USO take a dive? And I don't expect it to take the dive all the way to 75, but could it dive to 100 in the next 80 days?
I'm pretty shocked oil is actually still sitting up at those prices, especially with the markets at all-time highs. Can't believe oil is not at least half of that move.
It's strange because, and as we've alluded to before, it's like oil seems to be properly pricing in the uncertainty that we're facing right now, while the broader market is just like, we're done. This is good.
What a great way to put it, because I was expecting oil to be a little bit more irrational, or at least be moving a little bit more inverse to the indices as it was just a week ago. So oil definitely a little bit surprising on the board.
Yeah. What's going on, everybody in chat? Media.
What's going on, guys?
Big deal. Jared, Baker. Nice boy. Good to see all of you.
Yeah, I see there's some songs.
We're singing some Green Day.
Yeah, there's some songs going on in the chat that I have absolutely no idea what you guys are talking about. I don't know, maybe Gus is a little bit more cultured on this one, but when it comes down to some of those music, I don't know, that sounds 70s, 80s.
No, Green Day? Green Day is like 2000s or early 2010s.
Oh, it's like good vibes?
Green Day is like they're kind of like a emo band. I don't want to offend anybody with comparisons, but they're like Green Day kind of falls into like a Panic at the Disco, Fall Out Boy category. I think that would be fair to say. Perhaps that will offend.
I think I do live under a rock sometimes.
Is grunge a better way to categorize them? Somebody can let me know. But I like some Green Day.
Yeah, I think I definitely live under. You could categorize me as living under a rock a little bit. So yeah, I'll take it.
Listen to Green Day Brain Stew the next time you're in the gym.
I got it right here. So once I hop off, I'll give it a listen.
Give it a whirl.
I'll give it a whirl. Listen.
But pop punk rock. Yeah.
See what I'm saying? I was waiting for it. This guy doesn't know who Green Day is. I had absolutely. So I got it right here. I see the emo kind of vibes that you're talking about. I bet it's a banger. I mean, just by looking at the cover, I bet it's great. And I bet once I turn this on, I'm gonna be like, I know exactly what that song is. So
pop punk. Yeah. Okay. So I suppose my broad strokes generalization with Panic at the Disco was more acute than my attempt to put them in a genre. But hey, leave Errol alone. He's colorblind. That's true. That's true. The man can't see green.
I love using that for the scapegoat of everything. We'll be talking about math or writing, or I'm like, guys, I'm colorblind. Give me a break.
Errol calls Green Day day.
Give me a break. Yeah, absolutely. You know what I'm saying? I know I got short the market, but green candles look red. Yeah. Red candles look green.
Brownish, reddish day is what we're talking about here. But yeah, that's pretty much all the action on my end. Nothing new going on with the strange nebulous headlines breaking yesterday. It only increases my uncertainty about what happens next. We have consolidation going on in the broader market. VIX maybe pricing in a little bit, but we continue to hold under 20 on VIX. We have come off the sub 17 level that we tested last week. So just sort of at a decision point here with the broader market. And I don't exactly know how I want to be biased. I've done a pretty good job of bringing myself down towards neutral delta. I still have a slight long bias, but I'm going to start, I'll trim some profits on some of these soon, or a lot of these are just so far gone that I'm just letting them eat to max profit at this point. So not a whole lot more management to be done. USO definitely concerning me the most.
Yeah, with this market, I don't know. It was really fun with a lot of feeling like the pin is about to drop and things could really break loose at any moment. But I'm not having that much fun anymore. This is actually, I feel like I'm on the edge of my seat every single day, and my cortisol levels are just at a higher rate than they should be. That median has definitely grown a little bit, but no, all jokes aside, this headline risk is real, but at the same time, it's always interesting to see how the other asset classes are kind of performing relative, sitting at an all-time high. So
for sure. Yeah, Poet catching a major bid here. I saw this mentioned earlier.
Yeah.
And cannabis stocks are moving up.
What's up with our guy Carr right now? What's Carr up to right now?
Carr seems like it might be finding the top.
Oh no?
Yeah, we're getting back here.
That looks like a top.
Yeah, we were at it got all the way up to 850 before. Yeah, that was just this morning before beginning to turn over and start to work back down. But looks like Carr could be coming back down to earth. It's hard to have a bearish engulfing candle after following a day where you did $100 move to the upside, but Carr is finding a way to make it happen.
Nothing to see here, folks. Nothing to see here.
What color do you use for your candlesticks? Blue and black, right?
Yeah. Right now they're just all black. Sometimes having that hollow candle and then the solid one, I think is probably the most efficient. But right now I actually have it on dark mode. Usually I have it on like that blue and white, but have been going to more neutral colors lately, like a gray, a nude, an off-white. I've kind of been liking that pattern.
Carr ran out of gas. Well put, Jared.
Yeah.
And then cannabis stocks are moving, I'm told. I don't know. Tilray comes to mind first. Yeah, catching a little bit of a bid there. I don't know why this always comes to mind first. It's not what's the there's one that starts with an A. I don't know. I know the ETFs. MJ up 21%.
Yeah.
Weed is also one, right?
Wow, yeah, those cannabis stocks that's the most volatility I've seen in a while.
This is quite the move. I don't know what the news is here. Usually when something like this happens, it means either a new state got legalized or somebody said something about legalization at the federal level. Those are like kind of the two things that have caused these kind of moves.
ACB. Big deal throws out there, yeah.
Yes, that's what Aurora.
ABC.
Or I was gonna say Aurora, but I talked myself out of it. But yeah, catching a nice little bid here as well.
Yeah.
But if anybody knows what happened to make the cannabis stocks move, I'd be interested to hear it.
I was waiting for that. Music was so much better back then, and it's like, you know what? I would agree. I think every generation says that. I think this is pretty unique because I forget what the percentage was, the data that just came out, but there was X amount of percentage of AI songs on a lot of these streaming platforms, and I didn't even think about it, right? Like with AI, we get more AI slop, which is the quality of the product is going to go down in every industry, literally, if you can use AI. So anyways, with that being said, not to get too far off topic.
I signed a bill for microdosing. Is that real? It was 420. They're not just moving because it was 420. I mean, they did move up on 420, but it's 422 now. The microdosing thing, is that real? Is that did Snoop Dogg say something? I think Snoop Dogg is fully priced in at this point. You'd need somebody. You need somebody who's not in the space to say something to take that kind of move. You need Sabrina Carpenter to say something. Bipartisan bill to allow states to make their own rules regarding hemp versus imminent nationwide ban. Okay, makes sense. Cannabis stocks are high today. Jared's on it with the wordplay. It's for psychoactive drugs, not cannabis, but I can see the connection. Interesting. I was going to say, microdosing isn't usually a term that you throw around with cannabis. That's all the input I'd like to give on the concept of psychoactive drugs. No, it's not real. Oh, we're going back and forth. I see the bipartisan bill to allow states to make their own rules. That sounds more real. But Trump signing the microdosing thing, I could also see that as being a likely possibility. Lots of different information coming in right now. You know, in regards to the things used to be so much better back then, I've come to the conclusion that everybody just thinks things were the best when they were like 16 to 25 years old. Just whatever was popping at that point in your life is what you will think is the coolest. It extends to cars. It extends to music. It extends to sports. Ask anybody, they'll say the best generation of the NBA was when they were 16 to 25 years old. I think it's just kind of how the cookie crumbles is we have, there's nostalgia bias happening. Nothing changed, nothing happened at all. Sorry for all caps. The preemptive warning for all caps on the headline. Huh. Except it's all hot air. That could be true as well. I'll let you guys fight it out. But that's everything I got on my end. What's happening on your end?
Yeah, no, we can go ahead and jump to the Tasty platform over here, check out, see what's been going on. Yesterday we ended up closing our positions a little bit early with those puts, so we kind of got off like a bandit with that. Did not realize that headline risk would come through and we'd rip to the upside, but with this Trump market that we've been in, it made a little bit of sense not to head into the afternoon with so much delta on. But as we pop to all-time highs here, we have a couple put contracts on, so these expire in a couple days. They're down about $26 right now, so we'll have to see what the market wants to do after that. But with that being said, that's all that we have in the market or in the portfolio that's new. Micron just put in a big one to the upside, right? These stocks have been so resilient and have really been acting like the indices. So check out SanDisk too.
SanDisk right alongside it. I just pulled that up. New all-time highs for SanDisk, which is incredible that we have to say this once a week, but new all-time highs for SanDisk.
Yeah.
Table stakes. What else is happening once a week? Ceasefire got extended. I don't know. Oil is up. Thinking of things we just say once a week these days.
Yeah, so no, we'll see what we get from there. We'll keep an eye on NASDAQ. We'll keep an eye on those markets. I think right now, you got to trade the market to one of two sides. I think you either got to get long, maybe smaller position because it kind of feels like you're chasing a runaway train, maybe risking some higher time frame swing lows if that's what you want to do. Or if you're leaning short, I think you just got to stay patient. And then if you have no idea what's going on right now, you don't want to even take part, just stay sidelined until the market shows its hand a little bit more and you gain a little bit more clarity. But those are some of the things that's been going through my mind as we poke through to another all-time high.
Yeah, SanDisk has earnings April 30th, and I must say I'm quite inclined to get short into those earnings. This is just, it's one of those situations that I get at all the time, and I got at last time Micron had earnings a month and a half ago of, what could you possibly say? What could possibly happen to make this better? Up this much in the last year at all-time highs. It's like your earnings, you don't just need to beat and raise. You need to 100% beat and double your forward projections to really be able to move this thing because the future is aggressively priced in at this point. So definitely thinking about something surrounding that. Obviously, very expensive premiums. I don't know exactly the way that I would choose to attack this, but I don't know. It's like if I did like a short call vertical around like 900. That's way out of the money now. What's that look like? Yeah, insane. This thing looks like car. This looks like Avis. This looks as untradeable as Avis right now. I'm in disbelief.
Sold some call spreads for May at all-time highs. Been selling some put spreads against it every day. Has been most of my activity the last couple weeks. Yeah, it's a difficult one. It kind of feels like this might be a bad comparison, but it kind of feels like you're trying to ride a bull, like a little bit. You know what I'm saying? You got to manage your risk. You got to know when to get aggressive. You got to know when to be a little bit more loose. And I think whenever the new headline comes out, you got to think about, do I want to trim some of that short delta? Because you can trim some of the short delta while still maintaining the bear bias. Because once again, you're not going to be able to pick the top off perfectly, but you can kind of try and frame that trade up so when the move does come, you can kind of capitalize on it. But it's about not taking too many paper cuts before the move actually does come. So it's a very tricky, patient, intensive, game to be playing at the same time at all-time highs. Or you could just be, just a handful of long delta long at the highs, and you could have your cortisol levels, stay a little bit more at some calm levels, and you could just ride the wave.
Well, until somebody drops a bomb.
Until somebody drops a bomb, you know what I'm saying? So just blindly longing the all-time highs has seemed to work out pretty well over the last decade. So until proven otherwise,
sure,
right? I guess we could use that as a rule of thumb.
That's as good a strategy as any. Yeah, I see ASTS also up, being mentioned in the chat.
ASTS.
I'm not really surprised to see this up. I alluded to this the other day when they were down big. Or I talked about it here. They lost a satellite They gave a satellite to Blue Origin to put into space, and Blue Origin put it in the wrong orbit. They took like an 8% hit on that news. That's that local low point you can see on Monday. But immediately started to fill that gap, and now we've just pretty much have filled that gap all the way back up to where it was before the dip, before the lost satellite. And the satellite was covered by insurance, so they didn't really lose any money. I mean, it puts them behind on their goals for the year, but I don't know that it was necessary. I don't know that the 8% hit was necessarily justified. I don't know that 0 hit is necessarily justified either. Now that we've completely closed this gap, but perhaps somewhere in the middle there would have been more fair. But it seems that the market has quickly disregarded putting a satellite in the wrong orbit.
Most definitely. See, we're coming to a close here now. We'll see what the market does in the next 24, 48 hours. It kind of sounds like a broken record machine right now, but that's quite literally what it is. We get so many updates in such a short time span. I mean, the market could be up another 300, down 300, so we'll see what we get. But that's going to be it for me.
Yeah, I see Big Deal mention defense stocks down also. That would be my closing remark for the day, as I'm really kicking myself for not getting short these defense stocks because I'm an idiot, really. Because why would I get short oil when I could have gotten short defense stocks? It makes no sense. I'm getting short oil with a war is ending sort of sentiment, but oil is way stickier, both physically in real life and in the market. Why would I choose to do that? It doesn't make any sense. I could be short Raytheon right now and laugh into the bank, but you gotta pick your products. Gotta be calculated with your trades. Just take that on the chin and roll into the next one. But yeah, that's gonna do it for us today. That's all the time we have. Thanks so much, everybody, for watching. We really appreciate you taking the time out of your day. We never take it for granted. Ariel and I'll be right back here, same time, same place tomorrow at 12 o'clock noon Central Standard Time. Be sure to come hang out with us and stay tuned for Futures Power Hour coming up next. See you guys next time.
In the money. It seems pretty easy to understand. If I'm in the money, I must be profitable, right? Not quite. In the money is in reference to the option's strike price relative to the current price of the stock. An in the money option is an option which has intrinsic value. For a call option, that represents an option with a strike lower than the current stock price. For a put option, that represents an option with a strike higher than the current stock price. Being in the money is a good thing for long options. It's not so good for short options. Look who's back testing. tastytrade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at tastytrade.
We wanted to call in because recently some traders may have known there was some crazy activity in the SPX, and for some reason they were stopped out 200 or 300%. And what happened, unbeknownst to us, is the trade desk just emailed us and said these trades have been busted and you're not going to have to pay it. It saved us about $10,000. And then Marty calls us this morning and says, I just want to explain to you guys what a trade bust is. When you really get down into the nitty-gritty and you're in the foxhole and things are going bad, when you can reach out to the trade desk and you talk to someone that you've spoken with before who understands your account and the way you trade, that is a feature of tastytrade, which I think you guys need to emphasize more, because it certainly has meant a lot to us. It saved us a lot of money, and it's taught us how to trade a lot better, and that's really helped a lot.
Well, thank you.
This was not a paid, you're not getting paid for this advertisement.
Step into the futures arena with tastytrade's active trader. Multiple ladders, hundreds of indicators, precision control. From micro gold to NASDAQ, all CME one click.
Grow a strong community with tastytrade's referral program. When your friend joins tastytrade, you'll both receive $100. As your community grows, you get more bonuses. Only at tastytrade.
Pay for back testing? No. Pick from hundreds of symbols, any strategy you want, and all the data to trade smarter. Tweak the delta, dial in the DTE, and stack the legs. See what survives.
Check out Tasty Trade today.
We're back. It's still Wednesday, April 22nd, 2026. This is Futures Power Hour, sponsored by CME Group. I'm your host, Chris Vecchio. He's your co-host, Thomas Westwater. Thomas, it's a really low volume day out there in the market today.
It is, yeah. Stocks up, oil up, potentially a new deadline for ceasefire.
No way. What are the odds?
Yeah. Never would have thought
well, bonds are not going anywhere fast. But yeah, interesting. Oil up, stocks up, gold up today. Dollar's a little bit of a mixed bag. Generally speaking, incredibly light volume. Last time I checked, less than 800,000 contracts traded in ESM 6. That's low. We usually get to 1.1 on a normal day here around this time of the session, Thomas. So we're looking at a market that is very quiet after yesterday's indefinite ceasefire announcement, or maybe it's 3 to 5 days, as Trump clarified this morning. In any event, a new headline just hit the tape a few minutes ago. Trump's expecting to have a deal signed with Iran by Sunday, according to the Israeli Times. So this is quite the little quiet can kick that we have pulling together here in the market right now, with stocks pressing their highs and oil continuing to just do whatever it wants to do.
Yeah, and I mean, we do got some earnings after the bell today. I mean, Tesla's obviously the big one. IBM, Texas Instruments, Southwest. So, you know, a few names here coming up. And then tomorrow we got Intel next week. Definitely more tech names. But yeah, low volume. Not sure why that is.
Tesla coming up after hours, Thomas. Really interesting story for many reasons, not just the share prices themselves or whether or not the market can look past operational hijinks by Elon Musk. But it's a good story for consumer demand, EVs, battery storage demand. Obviously, Tesla and SpaceX looks like they're going to be closely tied together through AI moving forward. Either way, though, Thomas, guys, we can go to the slides here and get moving on this. I wanted to spend a good amount of time today talking about gas and oil with you because you know more about commodities than basically anyone else I know. I see two things here when we talk about inflation tracking, Thomas. This is the thing that most people think of when they experience inflation. You're driving down the road, there is a sign there that is looking at you in the middle of the street that tells you where prices are going, right? And over the recent weeks, we've seen that gas prices, just regular grade, have shot up considerably. They're almost $1 higher nationally than where they were a year ago. But that's just one component of inflation, right? When we take a look at where inflation's tracking right now, I'm looking at core CPI for the month of April and at 0.21%. That's a little bit warmer than where we'd like it for it to be to get to a 2% annualized run rate. It's really like 0.18%. But either way, a 0.21% core inflation rate doesn't exactly scream that the Fed needs to hike rates in this environment, nor does it exactly scream that the economy is going to suffer under the burden of, an energy shock, so to speak. I'm curious, when you're taking a look at how gas prices, if it's actually gas futures, RB, or if it's natural gas, NG, we can throw crude in there and Brent. When you're looking at these host of energy products on the platform, what stands out to you most about some of the price action? Is it what you're seeing in oil and Brent? Is it something elsewhere, heating oil, gas? Obviously, it looks like inflation's coming, but maybe not enough to knock things off course.
Yeah, I mean, the one theory is that, the Strait opens, flows normalize rather quickly. Storage, isn't it's there's still going to be withdrawals from the SPR that eventually need to be refilled. The other is that, the energy chain gets clogged up a lot more and that it's more lasting. And I think the market is going with the more optimistic path right now. And you see that with equities up and oil up today. A couple of weeks ago, if oil was up, you'd almost always have stocks down. So we've kind of crossed a line, it seems, in the way we think about the market, or the way the market's thinking about what's happening. Right now it's optimistic. So there's a point where, if oil keeps going up, gets back over 100, maybe it comes back into, really suppress the economic outlook more, and then stocks start feeling more pain. We did have the EIA weekly inventory report come out today. So commercial inventories, excluding SPR, increased by 1.9 million barrels from last week. But if you look at gasoline, distillates, and everything, it was actually a modest draw overall. Exports, they could still go up. They probably will in the coming weeks. And then you'll see these inventories probably start to decline more and more. This was the first week that some analysts were really expecting a big draw in inventories. Doesn't seem like, we saw that this week, but, that's likely coming in the next few weeks. It's expected, right? So maybe it won't have a very bullish impact on prices there. But overall, it looks like we think the economy can last through, temporarily higher gas prices. It's just, the longer this goes on, I think the optimistic viewpoint will eventually start to degrade.
Is the question of degradation a significant issue? Maybe we say this for the oil discussion here, but I've now seen a number of comments pop up from various analysts. It's something that one of our producers flagged as well, that the ships that are currently stuck in the Gulf, the quality of that oil is starting to erode. Is that something that we should even be thinking about in the grand scheme of things in terms of general oil supplies, or is that maybe a question for the crack spread and a play through refiners?
I don't think degradation happens that quick. There's like oxidation, thermal breakdown, all that's technical, oil engineering stuff. That's one reason why the longer this goes on, the more impact it could have. You see, like in natural gas, if a tanker's sitting very long, those ships are designed to contain, that, but you still get a little bit of loss, in those products when they're on tankers. So I don't really have a good read on oil degradation. I'm not going to pretend to be an expert on that, but the longer it goes on, I think it's more and more of an issue.
We take a look at stocks today, Thomas. It's still very much in the range that we've seen carved out since the start of the week. Low of 70.85 on Sunday night, which was matched yesterday. We have the high this week touching right around 71.83, which is just off the high that we put on Friday at 71.85. So, Thomas, to me, this looks like a pretty clean 105, we'll call it, point range to round. It could be a bull flag because we are sitting atop what had been the former yearly highs. And so we broke out. We're now consolidating here above those highs. Where did we find support yesterday? Not just at the former all-time high, but also the 1 week moving average. So we're continuing to hold the thrust of the recent trend. Part of the momentum profile has been that since March 31st, the S&P has closed every session above its 1 week moving average. And yesterday's test sees that moving average held. So possible bull flag, just 71, we'll call it 85, adding 105 points. You start to look into a 72.90, maybe a bit more than there, 7,300 target on this little swing. But there's also the other side of this here, which, I'm not going to, in a market where volatility has come in a little bit and volumes are low, that's not necessarily one where you want to stand in front of it. I do see other people saying this is a head and shoulders pattern coming here, Thomas, coming together here. And while that may be true, again, the way that you would typically play this is for a break of the neckline. So if that were the case, you really wouldn't want to get bared up aggressively until you're below 70.85 to show that the consolidation has ended. So one or the other, if you're in this market and you're looking for the next directional move at 71.60, this is kind of a no man's land over the course of the past 3 days, but through 71.85 or below 70.80, and then, maybe you got a stew cooking.
Yeah, I like trading the bull flag more because you're betting on a resumption of the trend. So you're staying with the trend, whereas proceeding uptrend into a head and shoulders, you're trading against the trend, and you do have to, at least I do, wait for that neckline to break before you actually, try to call a top there.
Feel the same way. Bottom left to top right. What's the momentum? The trend is higher. If this thing starts to go to new highs, we're talking about, just under 30 points here, then the next leg perhaps kicks in. The volatility coming in today, Thomas, I think is just a small piece of it, but the absolute lack of volume, 809,000 contracts traded here. Does that surprise you as much as it's surprising me? Or is this one of those little telltale signs that the market itself has moved past the Iran war? I mean, this is not the volume that we were seeing in March by any stretch of the imagination.
Yeah, I'm surprised. I think one day, it's interesting, but if it continues, lower volumes, then it becomes more telling that maybe people are stepping away a bit more from trading. If volatility keeps coming down, seeing those lower volumes, that makes sense.
The NASDAQ here is the clear front runner right now, up 1.53%, Thomas. I'm taking a look at what's going on here in that daily chart, very much like what we saw in the S&P 500 yesterday. Break through a former significant swing high, trade back to your 1-week moving average and hold that former swing high, and then cycle up into the next leg. So if we're looking at the NASDAQ as a potential clue here for what could happen in the S&P, we see that similar price action where, unlike the S&P not having broken out yet, the NASDAQ already has, and this bull leg has begun. So to that point here, if you're trading the NASDAQ and this move has just begun, 26,526, 26,878 or so, you can add another 300 points to there. So maybe 27,200. Maybe there's another 0.5% higher here left in this particular thrust. But taking a step back, the inverse head and shoulders pattern that we've been watching, that begins to come closer into focus than your 27,500 here on the upside. And that perhaps becomes the next place where if bulls continue to take the reins, maybe that's a natural stopping point in the short term. Although we've tried to draw that before here. And the reason why I add this caveat is if we had done that as we had done previously off of the initial lows, we have blown through any sort of upside target. So a momentum market, I'm not going to stick to any measured moves on these things, Thomas. A momentum market can keep running. It can keep running. It doesn't need to observe one person's or a collection of people's subjective interpretation of the charts. I think until, it's innocent until proven guilty right now. And unfortunately, if you're a bear, while you have these setups here, you're fighting the tides again right now. So it's best to be selective and patient. And if there are breakouts happening, that's not really the time that you want to step in front of it.
Yeah, I mean, equity markets are trading pretty much like the war is over, right? Especially, tech strength, you got SMH into new highs, being very strong. We're on the cusp of earnings here, where I think if you get some positive earnings on net, that really we continue to shake off war fears. And, it seems like the White House is getting more and more, I don't know if the best word is like bored of this war or, just wanting.
Board's a fair.
Wanting to.
I think board's exceptionally fair.
Yeah. Wanting to get out. And I think that's why the market is, the equity market is pricing in like we're out of war. Although the oil market, the effects are a lot more acute. It's harder to shake off physical disruptions. There's some reports that the IRGC is remining some parts of the strait.
Did you see those satellite photos today?
I did. Speedboats. I mean, you can't, from what I know, you can't ascertain if they're actually mining from satellite footage alone. It could be something like a show of force, saying, hey, we're here. Here's all our boats. They're not at the bottom of the sea. But if they're dropping mines, that's another problem for energy markets, other markets too, anything that passes through the strait. But will that derail an equity market rally? And if energy prices stay high, can equities continue to rally as long as the economy can absorb it, as long as consumers can absorb a little bit of pain for, half a year? I think it makes sense that equities continue to go higher. They're very forward looking. So, I mean, they're playing like, the war's already over.
It's so interesting that you bring up the speedboat thing, because the reports this morning about the speedboats, the first time I saw the reports was when I first woke up. So I'm up at like 6:15 this morning, and I see that these things are being passed around. Obviously, they've gotten more coverage on social media and Twitter, but I'm imagining that's what helped push oil prices higher this morning in the early hours here. So you mentioned this. I just think this is fascinating. The fact that we can see this kind of stuff in real time, all these speedboats that were leaving the Strait of Hormuz, going back to the Iranian shores, it does produce that bounce in oil. Trump's comments over the past half an hour about potentially finding an agreement by the end of this weekend are maybe keeping a lid on things here. I'm of the mind right now that as long as oil doesn't cross above 100 and stay up there, then the stock market can more or less ignore oil prices. It's going to be uncomfortable. It's going to hurt margins, but like $90 a barrel is something that we can absolutely digest as consumers and as a broader economy, Thomas. How do you see us coming out on the other side of this year? Is this a buy the rumor, sell the news event when we ultimately get a peace deal? Or is removing the risk premium of a nuclear armed Iran for the next 5, 10, 15 years significant enough to overcome those typical buy the rumor, sell the news type of impulses the market sees from time to time?
Are you talking about sell the news on equities? So war totally over, it's done.
We've lost a catalyst. Yeah, there's no reason for Donald Pump to be out there doing the stock market stuff. He's got to find a new object of fascination to yo-yo everyone's emotions with on a day-to-day basis.
I mean, yeah, I have no idea if it's going to be a sell the news event. If it is, I think, you get some retracement, but ultimately, I think you continue to run higher. Unless we're looking at some kind of recession that's induced by these higher oil prices. And undoubtedly it's causing some economic pain, especially in Asia. America, we're a little more insulated just by the fact that we're pumping 13.6 million barrels a day or something like that. So the American economy more insulated than other countries, but still undoubtedly you're seeing things like crack spreads, which is fuel prices. They're going a lot higher. That's a cost the consumer is going to have to eat. So maybe there's some pullback in discretionary spending, but I don't think we're really seeing those impacts just yet.
Retail sales came out yesterday, Thomas. Retail sales in the headline were 1.7% versus 1.4% expected. I know that includes purchases at gas stations. So even accounting for that, ex autos and gas, retail sales were still up by 0.6% month over month, which is a very healthy rate of growth for retail sales. The only thing I see there is people are not changing their habits. And I mean, personally, maybe people are kind of approaching this the way I am. This is what, $30 extra and filling up my car per month. Is that really going to derail most of my spending plans otherwise? Does that mean I'm not going to go grocery shopping this weekend or go to Target to get some stuff get more diapers? No. So Americans are kind of just pushing through it right now. If it costs extra at the gas station, so what? We're not reallocating our spending from elsewhere yet. Perhaps maybe that's what the administration's shooting for here, Thomas. Not that I can pretend to know what type of 4 or 5D chess they're playing, but if they can get the war over before consumers change their spending habits, then the economy probably doesn't tip into recession.
Yeah, I agree. And it's hard to get inside the heads of what political actions are going to be taken. Changes day to day. The best we could go off is headlines, reading into it a little bit. But I mean, I think it's pretty clear that there is appetite on both sides to try to end it in some way. Of course, each side is going to try to do it in the way that's, most favorable, especially projecting that to the public that they can. But until then, it's kind of a waiting game.
Until then, it may be a waiting game. All right, so we have our levels in the S&P. We have our breakout in the NASDAQ. The Russell here is lagging a little bit more today, perhaps thanks to those higher energy costs and knowing the state of the balance sheets for these Russell companies. But very much like the other setups, you have that former high established in January. You have your 1 week moving average rising up into it. So you're not seeing any sort of rolling over in momentum. It's perfectly acceptable for a market to rally to a point and then take a breather and you shake off some of your overbought readings and then you continue higher. So until this changes, Thomas, until we see something like the S&P, the NASDAQ, the Russell close below their 1 week average, the thrust higher since March 31st remains in place. And if we get it on a headline, US and Iran agree to ending nuclear enrichment and a permanent peace deal and blah, 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 right? Let's see where that does with the levels, because if this market pulls back to 2770 or the S&P 500 pulls back to 7085 and doesn't drop a lick below there, the bears just will not have the trading opportunity that they're looking for still, and they'll need to be patient and maybe wait for even higher prices to sell out.
Yeah, I'm staying in my MES long call spread.
Sure.
Other than that, it's just single names I'm playing. So a little bit of exposure to the upside here. Not really, leveraging up that much. I'm still staying small.
Yeah, shorter term, in March when we were near 6,600, I was like, what are the odds that we get to 7,200 here in this next typical 45 and 21 out cycle? Apparently very high, because we are now looking at a potential move where the short strikes and the top side of the short iron condor trade at 37 days could be tested. If that happens, if we start to go through 71.85, I'm out. I don't need to see 7,200 tested if this thing is breaking out and has a measured move that would carry me through even my long strike at 72.50. No, thank you. But in turn, Thomas, one thing that we put out a few weeks ago, which hard to believe, this was considered just like right about the one standard deviation move at the time. And now the one standard deviation move goes up to 8,500 for the end of the year. But I like this long 8,000 short 8,200 call spread still. It's not a position that needs to be adjusted right now. It is a longer view. But the idea there is, after the breadth thrusts that we have seen over the course of the past several weeks, that momentum that's gathered off the lows, in the short term, if we do see a little bit of a setback, I don't want to lose sight of the bigger picture, which is the market structure and the way that the market's behaved. If history is any sort of guide, probabilistically, the odds are that this thing is going to be going up and still has some strength left in it, some meaningful strength left into it. So, and not going to time that out here. Before we get off of stocks, though, seasonality here. We're getting ready for the month of May. Everyone says sell in May and go away. I'm a buy through July kind of guy. I'm looking at the seasonality here, and if we follow the path, then it should mean higher prices for the rest of April, May, June, and into the end of July. Do you look at measures of seasonality during periods like these, or do you find it better just to ignore those type of views on the market?
I mean, for equities, not so much. If it's commodities that are driven more on cycles, where, say for corn, you have supply hitting the market in fall, a little more there. But I mean, I'm not purely trading on seasonality alone.
Thomas, let's make our way over to the boring bond market. Bonds going nowhere fast, which maybe this is going to be a short trip over into the corner of the bond market here. Notes down by half a tick, pinned right near the former yearly lows, right at its 1 month moving average. Can't crack through the 50. Thomas, ZB, unchanged on the day, pinned below its 50-day moving average, trapped at the 1 month. These charts have not really evolved meaningfully now, it feels like, in almost 3 weeks, 2 weeks here. I know that bonds aren't Jamal's forte, for example, right now. Him and I were discussing this yesterday. But how do you view the bond market here? Are these springs coiling, or is this like an EKG that's flatlining?
Yeah, I'm still not trading bonds. You would expect rates to go up a little bit when oil's up this much. If it was a few weeks ago, that's what we're seeing. So the negative correlation between them is kind of faded right now. If we were continuing on that correlation, maybe I would trade it if I wasn't trying to, if I was trying to play oil in another way, the inflation outlook. But right now, I think it's giving no really clear read. At least I'm not getting a clear read on what they're doing. So I'm just not trading these right now.
It feels like a spring that's coiling, but the volatility usually increases through turns, Thomas, right? Volatility rises when you're at the top, volatility rises when you're coming out of a bottom. And then during the trend itself, because things are trending, it's stable, volatility tends to come in. Okay. I don't see any significant rise in vol here. If anything, vol's been falling off as prices have stabilized. When you take a look at notes as well, just a different perspective, volatility has been falling off as this thing has stabilized. It's not like we're seeing a market staying pinned and vol creeping up. I mean, that's the spring coiling type of outcome, right? It's like a pressure's building beneath the surface and a swing will ultimately come out of it. Which way, we don't know. I don't really see much to do about anything here. I mean, unless recession comes, which seems unlikely given what we know about the economy today, Asia, Europe, different stories. But for the U.S. economy, 1.2% growth for Q1, given the Atlanta Fed GDP Now growth tracker. It's not great. It's not terrible. Men's. I don't know what that does for the bond market here, though. So low vol, flatlining volatility. There's no momentum. I think we could just move on. A 20 IVR is nothing in the grand scheme of things. It's one of the lowest IVR products in the futures market right now.
Yeah, it's boring.
In terms of those auctions, could we get a little bit more excitement here? Next week, we're going to get, or 2 weeks, I should say, we're going to get the 3s, the 10s, and the 30s. Today, we had the 20-year bond auction. I didn't see anyone talking about it. It was an okay auction. B minus. I don't think it's even worth covering. The market just does not care right now today about what's happening at the long end of the curve. Maybe it's because they're still focused on oil. Oil keeps pushing up, which today up another 3% here, Thomas. So we covered and we tracked into that oil degradation conversation a bit earlier here. We don't necessarily need to revisit it because neither of us are chemical engineers and can speak to that issue specifically well enough that I personally would feel comfortable saying that I can take a stance in it. What I could say, though, is that in the short term here, the market still doesn't want to break down. There are no ships going through the Strait of Hormuz. Iran announced that they interdicted 2 vessels yesterday, which were Indian flag ships carrying goods from Iran to India. I don't know what's happening out there, Thomas, but the market's clearly getting in mind that the supply picture is going to be tight for the short term. CLM6 is up 3.4%, just going out along the curve to say the Z6. You'll see it's up 1.57%. So not as much of a gain there. Again, short term supply issues. So backwardation here is coming in a little bit more today. We're starting to see that backwardation expand again. When I look to the back of the curve, though, Thomas, and I'm looking at these front-end supply problems and an economy that probably doesn't tip into recession, that seems like a place where oil can just stay elevated. And this chart here, CLZ6, I don't know, the consolidation that's been taking place since mid-March, looking like a flag a little bit, maybe breaking that downtrend here after bouncing off of your 50-day. Not exactly screaming we should be looking short here. So I personally still like the long deltas. I've been doing it more through the short puts than the long calls. I haven't been playing long calls in oil. If anything, when oil bounces, I'm going to take the volatility and you want to let me sell 130, 140, 150 strikes, I'm happy to do so, given the information we have at hand right now. But I'm also not thinking this thing's going back to 65 or 66, any of the pre-war levels anytime soon. And so provided the opportunity to get puts sold down there, I think we should be taking them left and right.
Yeah, that's what I'm doing too. I'm selling puts. I have short put spreads in the 22 and 55 days out. Also have a short call spread in the 22 days out. I think it's around 110. I'll keep that on. So 2 sets of short put spreads in the 22 days. And then the 55 day. Thinking about adding some short put spreads in the 85. I'd like to get a little closer before I do that. I don't know. I really like playing the view that there is some type of floor in crude oil that's probably a little higher than pre-war levels. There's still good volatility in the product, so it's not hard to do the trade where you give yourself some breathing room. And if the situation changes dramatically, which even if it does, it takes time to fix all the offline oil, the damage from all these drone strikes and everything. Tankers take time to transit, load cargoes. So even the tanker flow alone, it takes weeks, probably months to normalize. So undoubtedly, or not undoubtedly, saying with pretty high conviction in my view, there's some type of floor under here. So going to continue selling the short put spreads. Probably add another one in the 55 day. If we go higher, keep on climbing, maybe I'll just add a short call spread somewhere up around 115, around there. If we drop back down over the next coming days, that's when I'll add more short put spreads.
Yeah, I mean, chasing this to the upside right now, especially if we have a headline that could potentially be arising around the next, it's Wednesday, so we have tomorrow, Friday, And then the weekend, Trump saying that he wants to have a deal in place by Sunday, so willing to extend the ceasefire until then. Somewhat coincidental timing, another U.S. carrier strike group is supposed to arrive in the theater of war in the next 3 to 5 days. So the ceasefire will end right as another carrier strike group arrives. That's convenient. But if they come to a ceasefire, Thomas, you're probably going to get another one of those days where oil has that big pullback. We've seen it several times now throughout the war. March 23rd, we had the big pullback on April 8th. We had the one on April 17th. And if you get another elevator down, that's, to me, I was hoping we got a little bit more weakness. And then I could look to sell some put spreads under like 60, 65. Instead, not transpiring. So the current exposure that I have is what I'm going to war with, so to speak. You know, you got to go to war with the army you've got. So the current exposure is going to have to do for now. But if there is another, like oil is back down to $80, Trump and the US are signing a deal, sure. Okay. Thanks for the pullback in price. I'm going to take the bet against oil reaching the pre-war lows anytime in the short term. Because once the deal's signed, Thomas, what happens to all these ships, as you just mentioned? If you're an insurer, you can get oil from, the Gulf of Mexico, or you can get it from the Persian Gulf. You're probably going to stay in the northern hemisphere, in the western hemisphere, I should say, for a little while longer until you have tangible proof that there are no mines out there, that there's no rogue elements of the IRGC shooting at ships, that the Houthis are done. I mean, all that jazz. So in the short term, oil probably has a floor.
Yeah, and in the oil market we have now, you can overanalyze it all day. There's 1,000 things happening. The blockade is kind of designed to shut in Iranian production, and from what I've read, they have anywhere from like 23 to 29 days of storage to where they could where they would have to start doing shut-ins. Then you inflict more economic pain. Is that going to work as leverage in negotiations? I mean, it's definitely something for them to consider, but ultimately, does it make them concede? I'm not sure. We'll have to get farther on the timeline to tell that. But oil, I think you don't overthink it, even though you can all day here. So I'm just going to continue doing what I've done that's been working since this war's gone on, and take advantage of the volatility and sell it.
92.84 here. It is in the midpoint of the recent trading range. The way that Jamal's been playing this, in fact, I wonder if he's still doing it. But for those out there thinking along similar time horizons, he's just looking for the recent range that we've been in to hold, that we're not really going to get down below 78. We're not going to go up through 100 or so. If we wanted to do that ourselves, I mean, I currently have 77, 75, so that could be one leg of it below 78, and then going above 100, we'll call it 101, 103. There's a reason why you're getting compensated better 1-to-1, because the market's of the mind that odds are we will test one of those ends at some point soon. And in fairness, Thomas, I don't think that's unreasonable. If we wanted to go equidistant away, though, which 77 from a current price of 93, we'll call it $16. $16 brings you all the way up to what, 109. We can go equidistant in either direction, just in terms of pure dollars away from the current market. And that is still close to a 1-to-1, just under the other side, Thomas. I think if we get a little bit more oil strength up here, we have to take advantage of the skew that's in the market, and just first blush, we can go out in time and sell some of these strikes that are being offered up at what? 125, 130, 140. That's a way to do it too. So I think we can have the best of both worlds here. When oil prices rise, if they rise too much, if the missiles aren't flying, then we got to fade it. And if the missiles aren't flying and oil prices are coming down, odds are that we have to fade that too. So stickiness is probably the name of the game here. Oil likes to trend sideways. And we've seen this happen in recent years, where it just gets, after last June, what happened to oil for months? Just basically plotted around 63. Maybe oil's just going to plot around 90 for the foreseeable future.
Yeah, I would not be surprised to see that happening. We'll see. I think there's a lot more that's going to happen here. It's definitely an interesting market to trade right now. Probably the best market to trade since the wars began. It's going to keep giving us volatility.
If we wanted to do something fairly tasty, typical here, Thomas, there is always the option we could do the Iron Condor 120, 122, 70, 72. It's right inside of a 3-to-1 risk to reward. The probability of profit 66%. Oil's up a little bit the last few days. I'm going to take. I don't think we're going back to war. I think you said it so well earlier. Trump's bored. He wants to be done with this so badly. He wants to go focus on Cuba next. He's done with Iran.
Cuba. Yeah, we'll see. I mean, wouldn't be surprised at this point.
No, me neither. So I asked you earlier, what's surprising you most about this market today? I saw that gasoline futures, those are cycling up to their highs after the war. Is this a canary in the coal mine, or just look past it?
I mean, if we're looking at the exports out of the U.S. right now, a lot of it is fuels, gasoline, diesel, and that is, refined product.
Fun? We're drawing down our refined products domestically to sell them elsewhere in the world, which is constraining domestic supplies, in turn helping elevate our gas prices. Love that.
Yeah, I mean, I think a few weeks ago there was some headlines of the White House was thinking about an export ban. Those usually aren't the greatest policy tools, but it's a free market if these exporters are getting paid, premium for these products. They're going to export them. So that's where we're seeing the draws in inventories right now, distillates, gasoline, and that's what's needed, especially in Asia. Lots of pain on fuel prices in Asia right now. A lot of developing countries. I know that doesn't affect the world economy too much. It doesn't affect U.S. equity prices too much, but it is a pain point for them going forward. I know some countries have reduced the amount of days that people have to work just to save fuel.
Some countries.
Yeah, but I mean, the crack spreads, if you look at it, which is pretty much the premium of fuel prices versus oil prices, 3-2-1 crack spread, it's almost back to the highs that we were trading on March 23rd. And we've really, the crack spread has rallied about 25% off the lows that we were trading in early April. So
I have crack, the ETF up on the screen here. The oil refiners ETF is just bouncing off of its 50-day moving average the past two sessions.
Yeah. A good one to play on the crack too is Valero Energy. Mm-hmm. If you're looking to get some options that are kind of liquid, crack, I don't think is very tradable in its options.
No. I mean, it's 32,000. I mean, we'll just go to the near term. What's the open interest on some of these? Oh gosh, 20 can't be right. Only 26 contracts at the 47 strike. Maybe that is right, Thomas.
Yeah.
It's just not. Yeah. So VLL, right? There are ways to do this. So the refiners, I think this is perhaps the next part. We talk about second order and third order effects here of what's happening. Oil prices can stay stuck, and depending upon where you are in the production stream of this all, in the refining stream, you still may be able to make money hand over fist. And I think that supply tightness here, we have to recognize that maybe the energy trade isn't simply in CL if you want to be a directional guy. Maybe it's going to have to be in some of these refiners. You mentioned Valero. I think crack's interesting if you're simply buying and holding, not necessarily from an options perspective. But there are ways to express this view, is my point. Talk to me about natural gas a little bit here. I know that we've really done nothing with it, but I can't recall many instances where I've seen a single digit IVR in natural gas. And so while this isn't necessarily a vol selling product, natural gas, when it moves, it can move. And at like a 9.7 IVR, it feels like maybe we should be looking for something far out of the money in either direction to take advantage of this.
Yeah, I mean, it can move. You're right about that. The volatility is so low right now. I have a short put spread that has been absolutely dead for weeks, so I've just kept it on near 100% loss. It's coming back a little bit the past few days. If we get a little more upside past 2.8, could actually close this trade for a scratch, which would be really nice. But I have not put on many natural gas trades at all because the IV is just so low here that it just hasn't been that interesting, right? And you've seen a lot of crazy stuff happen in the benchmarks, the JKM, the Asia ones, the TTF, Dutch futures that are pretty much the benchmark for Europe. You've seen crazy stuff happen there, but U.S. prices have really had to contend with very mild weather in almost the entire United States, especially the eastern part. And it's giving us inventory builds. It's keeping prices down. Even though there is a big disruption in natural gas in the world for other parts of the world. But for the U.S., yeah, it's just... It's like, can you play a floor here? We are at pretty low levels. I'm just not really taking a shot just yet.
Can we say 290 perhaps as an area to watch over the next few days? I see this low that we have in January here, Thomas. January 15th low. And then we have the lows from early April. And now we have our 1 month moving average there. We could see the improvement in momentum, just very microstructure. We're starting to hold closes above the 1 week moving average. The market's clearly trying to find some footing here. The rejection of the 1 month today is fascinating. So I'm just going to look for 290. If we get a move above 290 and we can sit with low, high single digit, low teens IVR there, maybe looking at 64 days and playing for a little bit of vol expansion, right? Yeah, maybe oil, maybe natural gas goes up. Maybe what really happens is because it's breaking its downtrend, volatility starts to come into the equation. Doing technical analysis on natural gas is a very difficult endeavor, but I would add a third thing in there. The highs that we had in 2026 and then the ones during the start of the war, Thomas, we're at that trend line today too. So get above 290. Bulls may have something to take a flyer on. I'll be looking at like the 3.2, 3.3, 3.4, somewhere in that neighborhood. Maybe you can get a vol expansion, but I'm happy to lay out one to make 2.5 and see maybe we can squeeze a few $100 here. But it's almost there. I think there's a point. It's on the watch list. It's been ignored. Haven't traded it in a while. I'm of the mindset that we should just put it in our pocket until we see 290 plus.
Yeah, I agree. It's going to become interesting again at some point. Just right now, I'm just watching it and hoping we get a little bit more upside to bail me out of this position that's been bogged down for quite a while for me.
I swear I've been moving these arrows around. I don't know why they're going where they're going on that page. Gold here, uptrend off the lows, October, November, and then February, still not able to crack through it. Yesterday, we got that bearish engulfing bar, new high relative to Monday, and then closed below Monday's low. We also got to move below the 1 week, the 1 month, the 50-day. Today, Thomas, trying to rally here, rejected by the 1 week and the 1 month so far on that little nice upper wick. So the momentum just doesn't look great there for the metals. We can head over to silver, which trying to fight back into its uptrend from those lows that we had during the war and not there just yet. So Thomas, the metals themselves, they have been frustrating at best for those that have been trying to look for long opportunities. I know Jamal's been sitting short. He's been looking at vol contraction through SLV, and that's worked out like a charm thus far in 2026. But for the next big directional move, unless this thing starts to find footing again back above 80 or so, the chart looks damaged, just like the gold chart looks damaged here. And I suppose the only good news we could say out of this, I haven't put on a new trade in weeks or months in gold, and I'm glad I resisted last week, because this would be really crappy feeling if we were already $150 down in a position when it was trying to make a move above $4,900 an ounce. So more patience. We need better technical structure. The vol coming in has not been a contemporaneous indicator for higher prices. It's been one that indicates lower prices. There's just nothing that I like right now about this chart for the upside.
Yeah, I don't like gold either being rejected off its EMAs today. Kind of a rounded top here. I mean, if I had to pick a direction, I'd probably get short here. But I'm just not getting in right now.
Not getting in right now. You mentioned getting, look at that. Starting to roll over. Get these bumps up into 48, 49, and we get rejected every time. Can't do it. And now squeezing to the downside. Oil prices up over the course of the session, Thomas. And what's happening to gold? Gold and silver are getting dragged down. Copper prices today, those are up, however, which is not so terrible, particularly because I joined you in the fray a few days ago and got into the 57558 short put spread here. To that point, one of the rationales was this was a market where if we take a look at the structure, it has been moving up in recent sessions. Like we had seen with some of the other charts here, those 1 week moving averages are not being breached for the products that are moving to the upside coming out of the March 31st lows. And so here we are now back at the top side of this range right now. What if we go beyond 615, okay? That feels like, but for the brief little craziness at January, we can treat like 615 to 620 as the range resistance that we've been in for the better part of the last 5 or 6 months now. Do you treat this as resistance to sell into, or are you still taking your approach where you're rolling up the short put spreads as momentum builds to the upside?
Yeah, I'm still rolling the put spreads. I'm still in the 40 or the 34 day short put spread 55756. I do want to roll because this position is almost near. It's like 70% of max profit. So I'll roll. Chinese demand is looking strong. We are going into the demand season for China. And there's a sulfuric acid shortage. You need that to mine copper. It's looking pretty good. I think Goldman Sachs just reiterated or even up their copper price target. It might be another bank that I'm thinking about. But yeah, I mean, this still looks good. There's a bull flag here that's kind of breaking out of maintaining above the EMAs. You know, it's in a trend. I like it. I'm going to keep rolling up these short put spreads. I think this is the third time I've done it. Yeah, I mean, not much else to say on it. The long term, the medium term even outlook is still good for copper. That's going to gently guide up prices. You'll have variations along the way, but it looks like this is a market where copper can rally when gold and silver is not.
That may be the case. I'm with you in copper right now. May want to add more. We start going through 615. All of a sudden, this thing doesn't look range bound. It looks like it has that momentum in its pocket. Short put spread is nice. May want to add some long out of the money call exposure here. This thing's going to move. Let's get some action. Thomas, let's finish these arrows. They're killing me 2 days in a row. Dollar losses are continuing here over the course of the session, and that's actually less so as we make our way through the day. Interesting how that changes over the course of an hour, Thomas. We do see that the euro is falling back a bit here today. The Canadian dollar is falling back a little bit here today. Aussie up marginally. British pound up marginally right now. The fact that the dollar is coming back in the second half of the session alongside this move higher in oil prices, sustained move higher in oil prices over the course of the day, it does make me think that maybe in the short-term stocks, they have their ranges here. S&P has its range. Maybe it doesn't join the NASDAQ in breaking out just yet. Is there anything that the dollar's telling you, though? Do you have any strong feelings on the dollar? I see a lot of elevated volatility readings in the space, 63.2 for the Aussie, over 70 for the British pound, 60s for the Canadian dollar, the euro, and even 50 for the yen in the short term.
I mean, I like the British pound. Trying to get a little long. I haven't played in currencies much since the war started. And I think dollar weakness, you're still going to see it for a while, especially as the war kind of seems to be moving towards a negotiation endpoint. You know, big question mark over that. But yeah, I think there's high IVs here, and you usually don't get that very often with currencies. So, I mean, I've actually waited too long, I think, to get into some trades here, because I think there's a lot of things you can do, even if you're directionally neutral with this volatility.
You know, the yen is really fascinating at being a country that's a major net energy importer. 90% of their energy comes from outside of the country. So you have higher yields in the US coupled with your higher energy prices, Thomas, and the yen is just in a tough spot, like so many of these Asian currencies. The structure of this chart is really fascinating because while the dollar yen spot rate is currently sitting at 159.5 right now, the Japanese futures or Japanese yen futures look like they're about to take another leg lower, which does put you into the potential quagmire of needing to deal with a Bank of Japan or Ministry of Finance yen intervention effort once more. But I would argue that in the very short term, as long as the war is still going on and the chance for another swing higher in oil prices is possible, intervention is less likely. They're not going to step in front of something where they're going to get very limited bang for their buck or bang for their yen. They're going to wait. So if we were to see 6J sit around 62.5, 63 here and dollar yen persist up at 159, 160, and then we get a peace deal and oil prices come off, that's when these finance officials in Japan could actually try to make a move to intervene, because then they'll have the wind in their sails in doing so. This is one of the things that the BOJ and the Ministry of Finance like to do or don't like to do. They don't like to fight the market. They want to wait for more advantageous conditions. We should watch this, though. Lows that we had in January, they've been resistance in the yen on these rallies back, and now we're struggling to get through that 1 month. If this wasn't the yen, this would look as clear as day as a new sell for the next leg lower, Thomas. That's all I could say about it. But there's intervention risk that we need to just keep in the back of your head, given the level.
Yeah, not a pretty chart. But I think you're right. It's not in their interest to do so now. If you get a dive, you intervene in the market. I'm not going to play the yen here. If I'm doing something, it's probably the pound, probably the euro. We'll see how the yen does. I love how last year I was super bullish on the yen, thinking the BOJ would finally diverge in a great deal from other central banks, and it's just never really happened in the way I've traded it.
We can wrap this up, Thomas. What's next on the calendar? That arrow works. As we make our way into tomorrow, there are PMIs coming out. How has the economy taken all this in stride? The U.S. economy, for example, 50 up from 49.8. It's not exactly screaming that we're going into a ravine, although the prices paid components of these reports will be watched very, very closely. In any event, Thomas, we're done here for now. Later today, I'll be back with Nick on Last Call, 3:30 Eastern, 2:30 Central, and then Ilya with Overtime, 4 Eastern, 3 Central. Thanks for joining us, and I guess we'll see you on Friday because Ilya and you are switching spots at the end of this week. So see you again on Friday. To everyone else, though, good luck trading. Tasty Live programming continues next with Dr. Jim Schultz.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from Tasty Trade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. Tasty Trade. Download today.
In the world of investing, a beast lurks between the numbers. Some watch from the safety of the sidelines, but others saddle up and ride that 1-ton rowdy ribeye for all he's got. If that's you, join us on Tasty Trade, named best online broker for options trading. Genius loves company.
Calling all traders. Are you using Tasty Live mechanics and enjoying awesome results? Are you an up-and-coming options savant? We're looking for you. For over a decade, Tasty Live has shared the most inspiring stories of traders teaching themselves a new skill, using probabilities, and experiencing new levels of success. If you think your trading journey should be shared with Tasty Nation, we'd love to hear from you. We are always on the lookout for the next class of rising stars. Email us at risingstars@tastylive.com if you would like the chance to share your trading journey and inspire others.
First thing about Tasty Trade is how easy it is.
It's a very quick, light platform. It's all on one page.
And with 1 or 2 clicks, you can be anywhere on the platform. Being able to see graphically where your profit and loss zones are. Whether it's a pool, a puddle, or a sea, you can navigate your way out of it with the Tasty platform. So I love that.
Global markets never sleep. Explore them with Forex on Tasty Trade. Get in on 80+ Forex pairs, 24 hours a day, 5 days a week. FX marks the spot. Trade it on Tasty Trade.
When you trade options at Tasty Trade, you see your probability of profit and loss right where you need it. Earn up to $3,000 in commission rebates.
I'm Jim Schultz, and this is From Theory to Practice. Welcome to the show today. Welcome to the broadcast, man. Welcome to the Wednesday edition of what it is that we are trying to do. I'm glad that you guys are here, and you are a part of what it is that we are trying to do, whatever that might be. I'm not super confident that we're going to figure it out today, but we're going to try it. We're going to spend the next 41 to 43 minutes seeing if we can figure it out together. If you're watching over on the Tasty Live network, then I would actually bounce on over to YouTube because you can join the conversation and join the discussion, and you can communicate with your brethren who are also watching the program. Man, you can celebrate if you had tacos for dinner. You can even celebrate if you had tacos for breakfast this morning because the market is strong. So you can, of course, dance and take victory laps and enjoy yourself with your fellow bulls that are watching the show. And if you haven't learned your lesson yet, and you are still a bear, and you're not necessarily expecting the tacos, you're not necessarily expecting a little trip over to Cantina 1511 there for my Charlotte, North Carolina folks that might be watching the show, then it's your fault. It's on you at this point because it's now happened 9, 10, or 14 times in a row. We know the taco is coming. We love the taco. We live the taco. Was there ever a doubt? So Josh, go ahead and bring us into the chat. Man, I don't think there was a doubt. Look, E-mini S&P's up 55. Man, look at that. E-mini S&P's looking strong. Risk-free instrument, also known as the NASDAQ futures. Extremely high-risk product, up 373 on the day. Then you've got the boomers up 235. You got the Russell 2000 futures index up 11 on the day. So the market super duper strong. Now it was actually stronger earlier. We'll take a look at it here in the next couple of seconds. But yeah, it sold off a wee little bit, especially like the Russell and maybe the boomers. S&Ps and the NASDAQ are pretty strong, with the NASDAQ now clearing 27,000. Man, somebody give me a hat. Like I need a hat. I need a t-shirt. I need something. I need at least a bumper sticker. Like if we can do this for Dow 30,000, like if we can do this for Dow 50,000, can you guys give me a little something for NASDAQ 27,000? Like, can you guys give me just a little something to grease the wheels with NASDAQ with the old 7 handle there in the 2-digit spot? Pretty impressive stuff, if I don't say so myself. Bonds down a point. You got, not a point, I'm sorry, a tick. You got notes down a tick. Got oil up 346. Man, didn't see that one coming. Once again, guys, I don't know if you need more evidence at this point. I'm not sure that you need more supporting points. Nobody knows a single thing. Nobody knows anything. Nobody knows anything at all. Like, we knew the tacos were coming. We knew the chimichangas were on deck. Like, that was a given. But beyond that point, nobody knows, man. Nobody has a clue. Oil up 345 today? If I would have told you again before the fact, ahead of time, and you didn't know, like, I don't know, man, is Cantina 1511 open tonight? Like, I'm not sure. Like, is Casa de Esperanza open tonight? Like, I'm really not sure. If you didn't know that, but you saw that oil was up $3.50, you would have assumed what? You would have assumed that the blockade is back. You would have assumed that, we're killing civilizations tonight. Like, we're doing all those kinds of things. And you would have been dead wrong across the board. And oil strong, market strong, nobody saw it coming. And so it makes me laugh, man. The whole thing just makes me laugh. Gold, you got gold up 33 on the day. The shifties are celebrating on a day like today. And you got silver. Silver's doing pretty well for itself as well. You've got silver up $1.30 on the day. with SIL up to almost 78. And yeah, man, the metals are up. The market is up. Volatility is going to be down on a day like today. Volatility futures down 25 cents. And then spot volatility, the old VIX, that guy is going to be down 34 cents. That's pretty strong, actually. So you've got the market up quite a bit, right? I mean, EME S&P is up almost 1%. NASDAQ is up well over 1%. And you've got volatility only down just over 1%, basically almost 2%. So between 1% and 2%. That's a pretty weak sell-off in volatility for such a strong market performance here today. Now, does that mean anything? I don't know. Like, is there any way that we can actually use that information this morning or this afternoon? Probably not. But it did give your boy 45 seconds of airtime. So we have that at least at our backs. So, all right. So there is some market commentary. But again, I mean, was there ever a doubt? Was there ever a doubt? I don't think that there was. Oh, speaking of there never being a doubt. So tonight is the night, guys. This is it. We got Tesla. We got IBM. So we're going to be doing some earnings trades here today. So if you're brand new to the show, welcome aboard. Like, if you're serious about making money, you are in the right spot. Like, if you're like, man, I really want to take my financial future seriously. Like, I really want to start kind of investing and being an active trader and just doing all the things in my portfolio that I've been putting off, that I've been procrastinating about. And I really want to get serious about it today. Well, you, sir or madam, are in luck, because today is your lucky day, because I'm going to give you not just one, but two earnings trades that you can fade tonight and make yourself a little bit of money. Like, you can take the other side of my two trades tonight, and you're going to get probably one, maybe two, maybe three nights out at Bonefish, depending on whether or not you are dining by yourself or with your significant other. And so I got you covered. Don't you worry about it. You just got to stay tuned for what's coming on down the chutes. So let's look at the portfolio, though, and look at UAL. So UAL down $6 today. So we had the direction right on this guy. Skewed strangle in UAL. You've got UAL down. That obviously makes sense. We called it yesterday. Again, we're just using common sense. I mean, have you been on a plane before? Have you taken a United flight before? It's okay. Like, it's not, I mean, we're not riding Frontier. Like, we're not in the Spirit lines. Like, let's not go that far. But is it a Delta? Absolutely not. Is it even close to Delta? Not even close. And so playing United to the downside, pretty straightforward stuff in my opinion. So we're up about $1.25 on the strangle so far. I'm going to sit tight, though. I'm not going to take it off yet. Normally with earnings, if I get the move that I want, then I kind of use that move as a bit of a Kickstarter into the direction that I want to go. I kind of use that move as kind of a way to kind of get me going to the ultimate objective, which is usually on a short strangle, about 50% of max profit. Now, sometimes I may take it off earlier, sometimes I may go ahead and manage that guy a bit more aggressively, but generally speaking, my default setting in this scenario is going to be, let's just sit tight, we'll use the earnings as a catalyst into the right direction, and what could possibly go wrong? Like, how could this possibly backfire? I mean, I can't see a way. Can you guys see a way? If you can, please let me know, and do so in the chat, because I would love to know. The algo is dying to know. Put that guy right there in the chat. And of course, if you have any questions for me, drop those in the chat too, and I'll try to get to as many as I can right around the halfway mark of the show. So UAL is looking pretty good. Pretty happy about that situation, but we move on. So onward and upward we go. So MES, man, we are really just taking it on the chin in this MES position, with MES down $200 on the day. Or I'm sorry, well, I mean, our MES position is down $200. We are still short this call at the 6,800 strike. And now it's kind of just personal, right? Like, now it's like, well, we got to stay in the trade now because MES owes us a bunch of money, right? Not unlike Chipotle, not unlike Best Buy, not unlike Oracle. Like, all these stocks owe us a bunch of money, and MES is very much falling in line with all the aforementioned names. And so for MES, we're going to sit tight, we're going to do nothing, and just kind of cross our fingers, maybe even cross a couple toes, that this guy does come back to us at some point. It appears that we're going to be close to 21 days here in just a minute, and so we'll probably end up rolling this guy out into the future and just battling this guy to the death. And of course, that will be the death of us, not the death of MES. Alcoa, we've got AA. Alcoa rallying today. That's really good for the short put. We're right around a scratch on this trade, so we'll sit tight and do nothing here, because now we've just created a little bit of additional breathing room between the 68.69 stock price and the 65 strike price. And so we're in a pretty good spot here with Alcoa. So we'll sit tight and we'll do nothing on that guy. Now, GDX, we just did this trade yesterday. This was a strangle that we just put on, and you can see it's just hanging out. It's just doing its thing, and we're not really up a bunch of money. We're not really down a bunch of money on the trade. It's just kind of meandering along. And so remember, when you do a strategy like a short strangle, I mean, an iron condor would also apply here, but that's the defined risk version. That's going to be very slow moving just by the structure of the strategy. But when you do something with like a short strangle where you only have naked units, you only have undefined risk exposure. And so generally speaking, you have this unfiltered exposure to the Greeks. And so things should move along a bit more efficiently, and things should move along and be a bit more effective. But remember, when you have a neutral strategy on, the thing that you're really trading is time. Like you're trading time, I would say first, and volatility second. Now you could put volatility first and time second, that's fine. It's kind of a 1A, 1B type of scenario. I have no problem with that. But the thing you are not trading is direction. And so when you put out a directional strategy, whatever it might be, short put, short call, short put spread, short call spread, whatever, if you get the directional move right, you get paid quickly. If you get the directional move wrong, then you get hurt quickly. I mean, that is quite literally what you are signing up for with a directional strategy in the options world. If I do something that's neutral, where I am almost by definition not trading direction, I'm trading time, I'm trading volatility, these non-directional elements, then it's going to take some time. Like you have to give the position a little bit of time to get where you're trying to go. Like you got to put that guy in the back burner and let it simmer and don't rush the process. Like if you try to rush the process on those ribs, you're going to ruin it, man. Like you know that. If you try to rush the process on that rice, like you're going to ruin it, man. It's not going to fluff up. It's going to be a big bowl of mush. It's going to be a huge pot of mush, and nobody wants a pot of mush, right? We would much rather have what? Tuna fish and applesauce. And so obviously you see where I'm going with this. You've got to let these things happen naturally. You can't override the natural kind of characteristics of the process. And so when it comes to a short strangle, sitting tight, doing nothing, let time do its thing, let volatility do its thing, that is going to be the play, and that is going to be what you are trading essentially from the very beginning. So GDX, we sit tight, we do nothing, and we found a way to weave in a tuna fish and applesauce reference on the GDX strangle. So our work here is complete. Johnson & Johnson, QQQ, Starbucks, Snapchat, TLT. I don't really give a rip about those. We'll talk about those another time. Let's go to the man of the hour. So let's go to the reason why you guys are all watching today. We're going to do a little Tesla. We're going to do a little IBM. And I see you guys, by the way, in the chat. Man, look at you guys. You guys are out. Man, I see you guys. I see Antonio is here. Sam L is here. E-Media is here. Man, look at Viggy Zags in the house. Ron Bashar is here. Man, I see Daniel Perkins sneaking in at the end, throwing some shade at the P&L Open. Man, Daniel Perkins, I didn't know you were a P&L Open, bro, but apparently you are. Yeah, look at that P&L Open. That P&L Open is not looking too great. So what do? We just do this. This is basic stuff, guys. We've talked about this a number of times. Many, many times. P&L Open. What P&L Open? I don't see a P&L Open. So yeah, so we move on. So Tesla and IBM. So these are the two things that we wanted to trade now. So we've got it's Wednesday. We're going into Friday. So obviously you probably can see where I'm going with this one, what I might like to do with these strategies, and you would be correct on one of them. But again, let's just think about Tesla as a thought experiment. So just think about Tesla as like a philosophy, like a way of life. You can use the technicals if you'd like. You can use the fundamentals if you'd like. You can use, whatever you want to use, probability analysis, quantitative analysis, whatever you want to do. But if I'm just thinking about Tesla, just as a little bit of a mental experiment, I don't know how you can possibly look at Tesla and be anything other than mega, ultra, super bearish. There is no way you can play this thing any way other than to the downside. So let's go into Tesla. Let's take a look at this guy. And we are going to queue up a bearish trade in Tesla. Don't tell my father-in-law. Like, I think he does watch the show from time to time, so I hope he's not watching today. If you are, Steve, I love you. I love you very, very much. But we got to do it, man. We got to play Tesla to the downside, which is actually good for Steve. Actually, right? I mean, obviously, if he's seen the show enough, he knows. Oh, man, he may have been a little nervous about tonight. Not anymore. He should be feeling pretty good about himself. So if we go into Tesla, I go to the trade page. We go to the 2-day cycle. This is it, guys. We're going with the tried and true. Sometimes you just got to dance with who brung you. Like sometimes you got to say, you know what? The chocolate chip cookie has never let me down, right? The fudge brownie has never let me down. Yeah, sure. I could try a snickerdoodle and it might work out. Yeah, sure. I could go with a little oatmeal raisin. Doesn't usually pan out, but maybe this time is different. right? Maybe this time is different, but sometimes you just got to go with the tried and true. So for us here, we're going chocolate chip cookie, Betty Crocker recipe, expected move butterfly to the downside. So let's go ahead. Let's cue this guy up. So I'm kind of thinking, let's see here. What strikes do we want? So we've got, it's a $400 stock. So I think that we're going to be able to, I see you guys trolling me in the chat too. Well done. Very, very well done. And so I'm here for you guys. Don't you guys ever forget that. Never forget that I am here for you. That is my number one objective, to help you guys in your endeavors to be successful traders and make money and do all these kinds of things. So I'm giving you my honest take on Tesla, and I'm playing it to the downside so you can load up your out of the money long calls and make a whole bunch of money. And so if I go to an expected move butterfly, I'm kind of hot on earnings though, right? We hit UAL. We hit a couple last week, didn't we? Did we hit a couple last week? I think we did. So you might want to be a little careful. Dr. J might be finding his rhythm here. And so I don't know, but if I go in here, if I do a 385, 365, 345, 1 by 2 by 1. So obviously if you're listening to the show, following the audio only version of the program, welcome aboard. I'm so glad that you're here. Again, I look up to you guys, man. Like I admire you guys that are only using the sultry voice to guide you forward through the forest. I mean, that's really all you need, right? I mean, once you've got a sultry voice, do you need anything else? I don't think so. But you guys, man, you're not even looking at the screen. You're not even looking at an option chain. You're like, let me just use that Barry White or maybe Barry Manilow voice to guide me. I think both of those are actually dead wrong. Let me use the sultry voice to guide me. So let's go 365. Oh, I'm sorry, 385. 365, 345, 1 by 2 by 1. It looks like we're going to pay about $4.38 for it. Okay, so I like this trade a lot. We're just outside the downside of the expected move. I do want to at least entertain the notion of widening this guy out just a little bit. Nothing crazy. Maybe we can use the janky strikes to our advantage here and widen this guy out by 2.5 points on both sides. So if I do a 342.5 and a 387.5, ooh, 558. I got to pay another $1 to do that. Yeah, I don't really love that. I got to pay another $1 in debit. So look at this. This is actually a very good teachable moment. Let me grab my drawing tool. So look at the debit that I would be paying for this strategy. Right? Again, remember with a butterfly, the wider the better, right? Obviously, ceteris paribus. You have to pay for the additional width. The things that you want in the market, they're not free. They're going to cost you something. So you have to decide, what gimmies do I want to go after? What gotchas am I willing to absorb? And what is my game plan to kind of get where I'm trying to go? That's what this whole game is about. It's gimmies, gotchas, and game plans. That's literally it. That's all you have to focus on. Well, here, I was at a $20 wide, and it was about $4.50. I expanded out to $22.50 wide, thinking it might cost me another 50 cents or 40 cents. But this guy cost me another $1, actually. And so that's a little bit too pricey for my liking when it comes to this butterfly. I'm thinking we just go back to a 385, 365, 345. And so you can see here that should be about 4.5. Ooh, it's only 432. Yeah, I had to pay. Wow, that's crazy, man. I had to pay another $1.20 to only increase my profit potential by $2.50. Now, it does give me more width on both sides, so I do have more room for error and more margin on both sides to potentially be profitable to any degree in the strategy. So there's that element too. But man, that was pretty expensive. I would much rather pay the smaller amount of 432 because from time to time, our earnings trades don't work. Like from time to time, these tend to be some losing trades. And for those of you that have seen the show for any length of time, you know that to be true. And if there are new people watching the show and you're thinking, is this guy serious? Should I really be fading him? Again, in the chat, guys, help the new people out. I'm being dead serious. If you want to make some money, you should be playing Tesla to the upside. So 385, 365, 345 on Tesla. 435 is my debit. Man, I like it. I like it a whole lot. And is Tesla... Somebody help me out. I know they're after the bell, but are they like a 401 after the bell or are they like a 430 after the bell? Like, is Elon going to do us a solid and drop this guy at 402 or do we have to wait until like 425? Like, somebody let me know because I'm very curious to see when I'm actually going to get paid off on this butterfly. And so let's go. Let's push this guy out. 435. And let's see here. 438 can't get filled there. Okay, that's fine. Let's do Let's see here. Let's try maybe 440. All right, so we got filled at 440. So we're in. So we are playing Tesla to the downside because everybody loves Tesla. And by everybody, I mean about 38% of the population loves Tesla. They love Elon. So we're going to fade all that. We're going to play it to the downside. Now we go to IBM. Now, when you think about IBM, you're probably shocked they're still in business. I mean, I was when I looked them up this morning. I'm like, wow, they're still out there doing it. That's pretty impressive. So IBM down $7 today, down almost 3%. This one, I think we get on the other side. So this one, it looks like an obvious short. It looks like an obvious bearish play. I mean, Tim Knight is locked and loaded. He's loading the boat on a bearish play on IBM right after my show. I mean, I don't know if he's actually doing that, but it does sound like something that he would do. So what are we going to do? Man, we're going to play it to the upside. What are we going to do? We're going to get bullish on IBM. So let's go to the May cycle. I'm not going to do a butterfly. I kind of want to mix it up a little bit. Let's shock the muscle. I mean, what did we train this morning? Oh, Wednesday? So Wednesday is obviously what? Again, this is basic stuff, guys. We really shouldn't have to go over this. But again, the content's not going to make itself. Monday is chest day. Tuesday is back day. And then what is Wednesday? Wednesday is leg day. So Wednesday is off day. Well, we actually did chest and arms this morning. So we actually did a little beach muscle day here on Wednesday. And so I'm kind of thinking to stick with that theme and kind of shock that muscle. Let's do the 23-day cycle, and let's just do an at-the-money vertical spread to the upside. I'm thinking 242.5, 252.5, and this is perfect, man. If we set this guy up, and you can see that it's about a 50-50 shot, which is exactly what we would expect. My debit paid is right about half the width of the spread, so all that lines up. 242.5, 252.5, everything checks out. Right, risk one to make one. I'm right at about 1.5% of the account size, so position sizing is fine. We even got a little positive theta. Look at that little positive theta on a long call spread. Man, I don't know that it's ever been done before. Have you guys ever seen positive theta on a long call spread? Man, it's been a minute for me personally, but I'll take it, man. I'll take every last little bit that we can get. And so this is it. If you're listening to the show, audio only crowd, I appreciate you guys very much. 242.5, 252.5. Long call spread in IBM, ticker symbol IBM. May cycle with 23 days to go, probability profit 49%, and we're risking one to make one. And man, I like it a lot. Man, I haven't liked two earnings trades this much in a long time. Long time. I mean, 2 for 2. It's basically a foregone conclusion at this point. And by foregone conclusion, I mean about 25 to 26%. That we'll be able to get there. So let's try 525. So we got filled to 524. So we got improved a little bit on IBM there. And so all right, so we're in Tesla to the downside. We're in IBM to the upside. And man, that is it. But I see you guys in the house. Man, look at you guys. I'm gonna get to you guys in a second. But before I do, man, you guys are doing some work in that algo though. Man, look at that. Look at that. I appreciate you guys. So look at Joel James in the house. Rob Bashar is here. Man, look at Michael Leeson or Michael Eisen is in the house. Man, look at you guys. So Michael Eisen's got a great question, actually. I'll get to your question in a second there, Michael. Let me get to the surprise and delight that Josh Amazon primed me. It's right there on the doorstep. And so let's take a look at what this is. So this is from A. Wills. What's going on there, A. Wills? I appreciate you. A. Wills. Give my best to Mrs. A. Wills, of course. A. Wills says, I have a short call ratio in May in EWY. I'm long the 145 call and I'm short 2 150 calls. I collected 335 credit. Friday is 21 days to go. And my spread is in the money. How do you manage this position? Yes. Okay. Great question. Let me see if I can, you said 145, 150 in May, you said, right? Yeah. 145, 150. And you sold it for 335. All right. Let's take a look at the EWY. EWY. Oh, that's South Korea. Wow, I haven't traded. Is this liquid? All right, they've got weekly options. Liquidity is 3 stars. Yeah, it's not bad. Wow, EWY. Man, we're really reaching out there, A-Wills. I like it. So if I go to May, you said 140, 145, right? Let me make sure that that's right. Yep, that's right. Or 145, 150. So 145, 150 is in the money. This is the strategy that you have on. So right now, you're down about $5 on the trade. right? And so that makes sense though, right? Because remember, with a ratio spread, the idea is, you want to pin the short strike, but you don't want to do it too early, because if you do it too early, you're in the situation that you're in, which you haven't even pinned your short strike. You've actually overshot the short strike a little bit. But even if you pin the short strike at 150, you would probably be showing some type of loss on this strategy, depending on when you got in the trade and how long you've been in this guy and what have you. But usually with a ratio spread, you want to pin the short strike, but you don't want to do it until the very end. And so that's why a lot of times when you do a call ratio spread, you actually just want the thing to go down so that you can kind of keep the credit that you collected or manage at some percentages of that. Understanding that if you are, in a situation where the stock does go higher with a call ratio spread, I should say, you're in a situation where the break-even point's pretty favorable. You do have some outs. You do have some things that you can do to kind of wriggle away from the position. So what do you do in this scenario? Well, with the ratio spread in general, this applies to either the put side or the call side. I like to look at the strategy and break it down to its component parts. Like, strip it down to the chrome, man. Like, what do you have on? You basically have a long call spread and then an extra short call. Right. And so if you look at a lot of the strategies that we do, there's a lot of friction in the strategies. There's like a bullish side and a bearish side. I mean, pretty much every strategy we do is going to have a bullish side and a bearish side if it's a spread. Obviously, if you're just selling a put or selling a call, it only has the one component. There is no friction because there is no other opposing side of the strategy. But if you're doing a ratio spread or a vertical spread, even a short strangle, you have, bullish sides and bearish sides. I like to break it apart, because when it comes to the management of a ratio spread specifically, because it is so versatile and it is so flexible, I'm looking to potentially manage that guy down to the component parts. And so understanding that right now, AOLs, you've got EWY higher. So which side of the strategy is working? The long call spread. Which side of the strategy is not working? The extra short call. And so understanding, all right, I want to, when it makes sense, and we'll talk about what that means here in a second, but when it makes sense, I want to manage what is working and give duration and life to what is not working, right? That's the basic idea. That's essentially one of the core component parts of everything that we do. When it comes to rolling on tested sides, rolling out for credits, what have you. That's essentially what we're doing. We're managing our winners. We're giving the losers duration. Again, with the understanding that your size is in check, your leverage is in check, and you're comfortable holding that position and potentially stewing in the bathtub of filth for a little bit longer. And so let's take a look at the two components of the strategy. So first, if I look at a long call spread, 145, 150, because this is the call spread portion of the strategy. This is only selling for 335. Okay. When I have a ratio spread on, put side or call side, doesn't matter. And I'm getting hurt on the ratio spread. So if I have a call ratio spread like you have on, the stock is higher. If I had a put ratio spread, which is what I typically do, it would be the stock being a lot lower. So beyond the short strike, which is exactly what you have. I typically leave the whole strategy intact. Now, I may roll the whole thing out for a credit and all those things, but I leave the whole thing intact. I'm not looking to manage the component parts until the vertical spread gets pretty close to its maximum value. So now, what is pretty close to its maximum value? Well, first and foremost, let's make sure that we understand what is its maximum value. The maximum value is the width of the spread. So in this case, that would be $5. So my maximum value here is $5. It's only marking for 335. So we're looking at a vertical spread that hasn't even reached 70% of its maximum value. Is that close enough to take it off and kind of say, all right, I got all that I could get or close to all that I could get out of the vertical spread. Let me battle the short call by itself. In my opinion, no. Don't have enough from the vertical spread yet to consider taking it off. Personally, I put 80% as a minimum floor. So for a $5 wide spread like what you have, I'm looking to take this guy off for minimum $4. Probably more than that. Probably more like $4.25, maybe $4.40, maybe $4.50. But 80% for me is the absolute minimum. So 70%, I'm like, all right, there's still a lot more appreciation left in this call spread. Because remember, if EWY keeps going higher, or even just stays right here, the call spread is going to continue to mature. The call spread is going to continue to gain value. And so you're going to see this 335 on this component of the strategy increase to 350 and 365 and 375 and so on and so forth. And so that's going to help you kind of offset some of the losses against the short call. So for me, this is at 21 days to go on Friday. I would just roll the whole thing out. If you just roll the whole thing out to the June cycle, if you want to keep it on, you're going to get a nice credit for doing that because you have that extra short call. And then once you take off the vertical spread, if it does get to a certain level where you're like, all right, I think I've extracted enough out of that, let me just focus on the short call, then you just manage the short call independently, the same way that you would manage any other short call, right? You just leave it on and hold the short delta if that's what you want to do, or maybe you consider adding a short put to kind of create a short strangle and neutralize your directional bias in that regard. And so that's kind of how I would view this there, A. Wills, but very, very, very good question. And I really hope that helps a little bit. Josh, nice job finding that question. That was a great question. Very good question. Let me see if I can find. Okay, so there's Michael. Man, I see Michael in the house. So Michael, what is going on there, Michael? Michael Eisen. I think it's Eisen. It could be something else, but I'm going to go with my gut on this one. Michael says, why the butterfly versus a broken wing butterfly? Yes. So generally speaking, broken wing butterflies are great strategies because they allow you to, to basically, what's the best? You kind of cut off one side of risk entirely on the marketplace. And so you're able to, if the market does rally in one direction, then you're able to, keep the credit that you collect or manage at some, percentage of that credit or what have you. The difference is broken wing butterflies are higher risk strategies than standard butterflies. So when I do a standard butterfly, I'm only paying a couple dollars for it, $3, $4, maybe $1, whatever it might be. In my case, it was $4. Usually, broken wing butterflies are going to be higher risk strategies, so there is more capital at risk. And so it's higher risk, but it's higher probability. And so that's usually the way that it works. With a standard butterfly, like what I put on, it's lower probability, but it's lower risk. And so it depends on how you want to play it there, Michael. There's obviously a time and a place for both. It just really depends on how you kind of want to slice and dice that guy. And so that's kind of how I think about it when it comes to regular butterflies versus broken wing butterflies. And so hopefully that helps a little bit. But hold on, let's go all the way back. Let's go all the way back to the beginning. I see you guys talking about Carr a little bit there in the chat. Yeah, what's Carr doing? Are they still out there doing it? They've been doing pretty well for themselves. Whoa, baby, look at that. Now that is a move. Now that is a move. Carr down 230 today. Man, I told y'all. Now, I told y'all when it was 300, I think, that we should get short. So we would have had to ride it up to 700 something. But, man, look at that. Look at that. Now that, my friends, is a candle. That is the final boss candle right there. That's it, man. Like, it's the end. Like, you're at the final castle. It's just you and Bowser. Like Peach's life, like her life, her safety, her security, it all depends on you, right? And then that candle shows up when Bowser walks out and you're like, man, he means business. Wow, look at that candle. That's some crazy stuff. So what came out today? Did something come out? Was it made known that Avis is just a pretty craptacular company? I mean, that would make sense. That would explain a 30% haircut in a day, I think. Oh, wow, that's crazy. That's some Wall Street bet stuff, guys. Like, this is some subreddit stuff. Like, this is reminiscent of GameStop 2021. Now, if it really is a GameStop situation, then what are we going to see? We're going to see the WSB bros take it right back up here. Like, we're going to see these guys get on their horse, and they're like, this is not over yet. We're taking this guy to 1,000. We're taking it to 1,200, what have you. But, yeah, crazy, crazy stuff out there. And this, by the way, is, I mean, all kidding aside, this is why it's more challenging to do short calls in individual stocks, especially individual stocks that, I mean, Avis, well, yeah, I mean, I was going to say Avis is kind of a new company, but it's not. It's been pretty crappy for, I think, a couple decades now. But, like if I sell a call in McDonald's, right? I'm not too worried about a chart like this coming out. Like that, could it happen? Of course. Is it theoretically possible? It always is. Is it likely? Not really. Right? So if I sell a call in McDonald's, I may feel some pain. I may get hurt pretty badly, right? But I'm probably not going to have to deal with a soul sucker, 100% move in a week or 200% move in 10 days or what have you, right? If I sell a call in IBM, right, I'm not super concerned about this thing rallying 60, 70, 90% in a given day. Now, again, with AI and all these kinds of things, I mean, they bring up AI, like that shoe company that like stopped doing shoes and like just started doing compute, and they like went up like 4,000% in like a day. So I don't know, man, maybe all bets are off these days and this time really is different. But I personally feel much better selling calls in like indexes. Established names would be number 2, and then the crazy like outlier names like this company just got going, that's going to be a very, very distant third and not usually something that I do too often. But yeah, CAR, man, look at that stuff, man. That's some crazy stuff. Little old Carolina Avis budget group. Avis budget? So is it both? Is it Avis and budget? I mean, they're both equally as bad, so that would make sense that they would be in the same basket. But yeah, man, that's some crazy stuff. And so I hope you guys didn't get hurt too badly on CAR. But let's go all the way back to the beginning. Where are we at? Man, I see you guys in the house. Sam L is in the house. What's going on there, Sam L? Doc, another Taco Tuesday. That's right. I mean, it was Tuesday yesterday. Again, guys, it's in the Constitution, right? It's like the 6th Amendment or the 11th Amendment, or I think it's actually both. I think it's actually written in both, given the staying power of Taco Tuesday. And so was there ever a doubt? And our boy dropped it minutes after the market closed. Like, he can't throw us a bone. He can't throw us a little breadcrumb on the trail. Drop this guy at noon. Drop this guy at 9:45, right? Give us a chance to kind of fight it out. Give us a chance to kind of battle it out. No, our boy drops it at 4:09 p.m., right after the market is closed. Now, you still got the futures and whatever else, but it's not the same, obviously, right? Homeboy's got to drop it at like 1:30, man. Give us a fighting chance. Otherwise, we got to wait for the gap up the next day and all that kind of stuff. But no, there was never a doubt. Sam L says, are we blocking the blocked or getting blocked by the blocked? What are we even doing? I mean, I have no idea. But there was never a doubt in my mind, not for a second. It was pretty much 50-50 the entire time. Or can you? Hello, Dr. Jim. Yesterday, you did a short strangle on GDX. Since I'm now a firm believer of naked puts, if instead of doing the short strangle, how would you have done a naked short put on GDX? Yeah, probably just bring the put in a little bit. So instead of being wider on the strangle, or can you, and selling both sides, where you kind of you're collecting credit on both the short put and the short call, so you can push them both out. I would probably bring the put in a little bit. So instead of selling like a 15 or 16 delta put, maybe I'm selling a 30 delta put or a 35 delta put or even 25 delta put, somewhere in that range. Generally speaking, 25 to 35 delta I think is a good range to kind of live in there. And so hopefully that helps you there, Ordenio. Sam L. Doc, how was the Costco adventure? Oh yeah. Now that you're basically a movie star, did anyone recognize you and ask you for a B- autograph? They did not. Sadly, they did not. But I'll tell you something. So I got to Costco last night. I was all by myself, right? Drove down there in rush hour, and so that was not super fun. But I got there, guys, I couldn't believe it. I could not believe it. It was empty. There was nobody there. Like a couple of stragglers, right? Just a couple of stragglers in like the comfy pants section. And it's like, yeah, I'm going to make my way over there pretty soon too. So I'll see you in just a little bit. But not too many people. Like not too many people by and large. I was shocked. Absolutely shocked. I flew through there. And by flew through there, I mean, I bought a whole bunch of extra stuff I wasn't supposed to get. So it took me a lot of extra time. But there wasn't a lot of extra people. I was really, really surprised. And so I'm kind of like, I don't know, man. This wasn't too bad. I mean, a little time away from the small children. I mean, I love my kids. I would die for my kids. But give me a couple hours where I can drive and listen to podcasts and do whatever else. Like, I don't know. It wasn't too bad. But that's going to be our little secret. Don't tell Autumn I said that. And so, yeah, but it was awesome. I couldn't believe it. It was very, very empty. Brian Racken in the house. What's up there, Brian Racken? Appreciate you, my friend. N1C is here, man. N1C, what's up, my friend? I appreciate you so much. Point B in the house. The market today. Ceasefire on, rally. Ceasefire off, sell everything. Not exactly. It's more like ceasefire on, rally. Ceasefire off, rally. Oil up, rally even more. But Dr. Jim stares at the delta. That's correct. That's the only thing you can do. You can only stare at the Greeks. Like you can only control what you can control. You can't trade the market that you want. You have to trade the market that you have. Whatever that means. And so SC Golfer, hey, Dr. Jim, what's going on there? Shane, I appreciate you, my friend. Thank you for all that you do, including the B- humor. And when I say B-, I mean A+, man, I appreciate you, my man. I'm going to send you that cash we talked about for you putting that in the stream at this very time. And well, I think we're hitting B- today. Now, we've been off our game a little bit. Like, it's been consistently C+. So for us to ratchet up to the top end of the expected move at the B- level, I will absolutely take it here today. So Samuel, Tesla earnings. Algo says one thing. Doc says another. iPod Touch already traded yesterday. Yes, he did. He absolutely did. But I'm joining forces with iPod Touch today. Like we are linked. We are synced up, man. And so we are playing this thing to the downside. And yeah, it's going to be some good stuff. There's the A Wills surprise and delight. So thank you there, A Wills. I appreciate you. Ranch, cool. I'm fully out of USO. I made a buck on the put side. Nice job, my friend. Very, very nice trade. Point B. What's your thought on buying leap puts for January 28th? Yeah, I know this is a really popular strategy, just leaps in general. And I think there's a time and a place. I haven't done like a true leap in a long time. So something going out beyond like a few months where you're kind of doing a poor man's covered call or like a, like a skipped expiration, poor man's covered call or whatever. That is definitely something that we'll do, from time to time, but I still don't do that often. But doing something that is like truly long-term, like January, did you say January 28? Are you meaning 2028? Or are you meaning like January 28th, like of 2027? I'm assuming you mean January 28. So that would be, you're talking about this guy, right? This guy right here, this Jan 21, 2028, that's 639 days away. Now that is a leap option. That's not even a leap option. That's like a hop, skip, and a jump leap option. Like you add the hop, you add the skip, you add the jump, and then you get to the leap. And so this thing is really, really out there, man. I don't know. I mean, I guess it's fine, if you want to hold something for a really long period of time. Let me actually look at this for 2 seconds. I want to get to more questions, but this is such an interesting thing. Like if I bought an at the money call, I just want to see here. I don't think this is a good idea necessarily, but I'm just curious. If I bought an at the money call, it would be $9,000. I mean, if I bought 100 shares in SPY, it would be $35,000. Now, I'm not comparing these two in terms of there being one for one, but it's just the first thing my mind went to try to get some bearings around buying power savings. And so maybe it could be here. If you go to like 80, 90 Delta, though, I'm not sure there's going to be a ton of savings. But let me try to get to a few more questions. That's interesting stuff, though, Point B. Very interesting stuff. Wolf is in the house. What's going on there, Wolf? Ranch is in the house. What is up? Man, you guys are back. N1C selling some copper puts. Man, go for it, my friend. I see Nancy Lee is here. What's up there, Nancy Lee? Asking me about the future value of Kodak. Kodak, they're doing pharmaceuticals now? Kodak selling peptides? Yeah, that's about right. I have no thoughts on that specifically, but I'm not surprised at all. You got to expand horizontally, man. It's not enough to go vertically now. Like, vertically is not enough. Like, you're in you're in photography, you're doing film, you're doing movies, you're doing pictures. Let's get you in some peptides. Like, let's get you into looks maxing. Like, that's what we got to do. That's where the opportunity is. And again, this is basic stuff. Danish Dynamite is here. Let's do a Tesla battery and ignite some cash. Let's go. I got you, my friend. And so we're doing it to the downside. So good luck on your upside plays. You'll probably do quite well for yourself. E-Media. Hey, Dr. Jim, any interest in Poet? Oh, man, I don't know. Is this another car situation? Oh, Poet's $12. You guys are sending me over to the dumpster. Man, I don't know. I'm going to pass for now. Do they have earnings coming up? Is it today? Oh, no, they got a couple weeks. Remind me when they have earnings. And maybe we'll do a little something. Obviously, a $2 move on a $12 stock is a pretty big move. But yeah, I'm going to pass for right now there, E-Media. But look at Griffin Jones is in the house. Sergio is here. Look at Reggie Sharma is here. Car shorts are still on. What a great catch in 2 of my accounts. Nice job, my friend. That's a great trade indeed. Good job there, Reggie Sharma. You should take some victory laps. And obviously, I mean, a weeknight bonefish, I believe it is in order. Like a weeknight bonefish, you've earned it, my friend. And so take out your wife, your girlfriend, your significant other, or maybe take the boys out to bonefish. There's no rule that says the boys can't go to bonefish. And so, man, go ahead and go for it, my friend. You absolutely earned it. But Griffin Jones, E-Media, wow, I'm like out of time. That's crazy. I see PBB Fine is here. Sebastian is here. RML is here. Man, Adam Armfield is here. Man, Catch That Voltage is here. Man, what is up? Catch That Voltage. Antonio is here. Man, look at Justin is here. Man, I'm missing questions. Guys, if I missed you today, come back tomorrow. Come back tomorrow. Try to drop it in the stream a little bit earlier. There's a greater chance that I will get to it if you drop it near the top of the stream. But I got to go. I got to run and get you guys over to Tim Knight. But I appreciate you guys. I appreciate you guys so much. If I can ever help you guys in any way, please shoot me an email. I am jschultz@tastylive.com. Or we can connect on Twitter. I'm at jschultzf3. I would love to hear from you guys on there as well. But stay tuned. We do have Tim Knight coming up next with Trading the Charts. In the meantime, guys, trade them small, trade them heavy, and stay optimistic. We'll see you guys tomorrow.
First thing about Tasty Trade is
how easy it is?
It's a very quick, light platform. It's all on one page.
And with 1 or 2 clicks, you can be anywhere on the platform. Being able to see graphically where your profit and loss zones are. Whether it's a pool, a puddle, or a sea, you can navigate your way out of it with the Tasty platform. So I love that.
Look who's back testing. Tasty Trade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at Tasty Trade.
When you trade options at Tasty Trade, you see your probability of profit and loss right where you need it. Earn up to $3,000 in commission rebates.
Think you know where ball's gonna go? Test your theories with backtesting. Pick from hundreds of symbols, any strategy you want, and all the data to trade smarter. Tweak the delta, dial the DTE, stack the legs, see what survives. Trade what you want, when you want with Tasty Trade.
Good afternoon, everybody. Tim Knight here, and it is Wednesday. Time to talk about charts, of course. There's a lot of cool stuff going on. It's another all-green day. We've got about a 400 points added to the NQ, new lifetime high on that one. Of course, after I saw you yesterday, right after the close, it's like you're watching for the close, right after the close, they said, we're going to extend the ceasefire again. What a surprise. And naturally, all the equity futures shot up. And so we had one brief down day yesterday in the midst of a very, 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 very green April. And that one little teeny dip yesterday was eradicated by yet another extension, which I suppose, I mean, you know, by the 76th extension, it'll be like, I guess it'll just go on forever. But what was interesting to me is that when a couple of weeks ago, the ceasefire was announced, there was an explosive move in stocks, like 150 points on the ES straight away. And we moved up last night, to be sure, but it was more muted. Instead of 150 points, it was like 40. Because a lot of the notion about, this is all going to blow over has already been kind of baked into the cake. So the tech stocks are doing the best today. As I mentioned, we're up about 1.5% on those, but there's a lot of cool stuff happening under the surface. So let's jump in. Here's the spider, going back a ways, a couple of years. And we've got our nice top here, and we've got our nice top here. And they behaved a little differently, as we've discussed. And this one, it was more textbook, which is a fall, retrace, and a hard fall. And this one, we got a fall, a retrace, and a sorry bears, and up it goes to lifetime highs. We have spent the past 4 days just kind of hanging out up here. And as I said, you can see here this huge gap, and this really changed the whole story of the market. This huge gap was when the ceasefire was first unveiled. And that was enormous and a real game changer. This one, it's like, we're cool where we are. We got our one red bar yesterday, which was kind of undone, but we're trading now where we were trading on Friday. But it just seems that concerns about the war and the world economy and such is zeroed out. We might as well be at 12 on the VIX at this point. Here's the diamonds, which, come on diamonds, which are not at lifetime highs. They are up, but less, about 0.5%. And they too have been kind of hanging out for the past 4 days, just under the 50,000 area. Not quite sure what to do with themselves. And the small caps, IWM, as with the cubes, are hanging out around lifetime high territory. Let me be more clear on that. The cubes are in fact at lifetime highs. The IWM, it is up, but it looks like the lifetime high was actually achieved on Monday. But all the same, past 4 days, pretty much in the same zone. Speaking of the cubes, there they are. We were in that range for the longest time, and we escaped it last week, and we've been getting farther and farther away from it ever since. A big driver of that is semiconductors. I mean, the entire bull market at this point is based upon AI / semiconductors / hyperscalers, the whole AI thing. If at some point the AI story starts to fall apart and that sticks, that's it. I mean, the unraveling of AI will be our equivalent in the modern day of the housing debacle back in 2007. That may not happen. Maybe AI is going to change everything for the better, and it'll be all just unicorns and rainbows. But if you're going to create a story about what could possibly break this market, the AI promise tarnishing around the edges would be the perfect narrative to do that. But here's SMH way above that long broken range and another lifetime high there. And the components of it, I'm not in semiconductor anything anymore. I give up at this point. I mean, look at this. Here's AMD blasting the lifetime highs. Here's Micron, MU, blasting the lifetime highs. A lot of blasting going on. NVIDIA isn't blasting, but it is up. And let me just pause to say there are two gaps that I think will be very instructive to keep an eye on, and they seem to have very little to do with one another, but NVIDIA and Bitcoin. The NVIDIA gap is this red line right there, like so, around 205 thereabouts. I think it's 205.58, but there's the gap. So that's one important item to watch in terms of resistance. And the other one, which we'll get to later in the show, is Bitcoin, whose gap is around actually, I've been saying 81,000. I looked at it closer. It's more like 81,775 or something, close to 82,000. And if we fail to get past either of those, that could be an indication that we're sort of done with this asset rally. So just mentioning that as we're passing. NVIDIA's earnings are over a month away. As you know, they're kind of off cycle. Like normal companies, they don't report now. They wait to have their own little schedule. So yeah, it'll be till I think May 27 or something like that they get around to reporting. And of course, SOXL, which is the leveraged bullish semiconductor fund, is up in the triple digits now. Having gone from like 40 to 100 and something just in a few weeks. And it has been just a sensation for the month of April. Absolutely. Over in the wonderful world of precious metals, gold, GLD, is up today. Not quite 1%. It's up about $41. I'm still, my one and only precious position is my GDX short, which has done well. And I'm going to stick with it. That's gold itself, as you can see, turning away. Yesterday was very dramatic, and we've undone a chunk of yesterday's drop. But on the whole, I still think that's poised for weakness. And as I say, GDX is my one precious position there. It is up about 1.5%. It was down about 4 or 5% yesterday, so it's deleted some of yesterday's drop, but not as much as gold. In other words, gold undid more of yesterday's drop than the minor drop today. So hanging on to that one. As always, tightening up the stop, keeping the stops nice and fresh, but it's been good so far. Yesterday, we spent a chunk of the show about CAR, the Avis budget group. And yesterday I mentioned never had a position in it. Even if I wanted to short it yesterday, I doubt I could have found a single share. Only the Lord knows what the borrow rate on that would have been. I didn't try. I had no intention of trying because stepping in front of a bus to see it if it stops isn't my cup of tea. But the focus was timely because if we look at CAR now, it opened the day strong, of course. It got up to $800 and something dollars, like $850 or so. It was just $847. So it opened strong and reached a never before seen high. I'm sure there was talk about quadruple digits soon, and then it stopped going up, and then the sellers came in. Put it this way: a few hours ago we were trading in the mid 800s. Right now we're trading in the mid 400s. This just looked like in a few hours. And you may take note of that rather large red bar on the screen. Pretty amazing stuff. Because the profits, the paper profits that the two funds that own the lion's share of this stuff, in fact, as I said yesterday, they literally own more than 100% somehow, were in the billions and billions of dollars. To go Carl Sagan on you. So huge profits. So kind of cool that it's that we talked about it yesterday at such length, and that it is doing this mega reversal. I was curious what the options were doing because the volatility, the extrinsic values on this is gargantuan. I was curious, like after a move like this, did put owners and call owners both get wiped out? And no, they didn't. As you might guess, the call. I was simply comparing yesterday's. It was around the 660 strike. I was looking at like calls and put prices yesterday because I kind of did a screen capture and compared it to today's latest quotes. And the calls obviously have plunged in value, like giant, whereas the puts are up pretty decently, as you also might imagine. So it's been really interesting to watch. And I dare say, if you told me like a year from now this would be a $20 stock, could happen. This is just insane what's going on. But yeah, yay. It's kind of a good time to look at this yesterday. And it's 2 days. We've only undone 2 days of gains. It's not like, it's completely gone. But I think today is probably the change. This is probably the inflection point. One other kind of zany stock we looked at a week or so ago was Allbirds. Remember that? So down around about here, it was sort of like a failed shoe company. And then they decided to pivot, very natural pivot from wool shoes to AI infrastructure play. And that produced incredible results. And this got up to around $25. And it's at $8 now. So it's lost 2/3 of its value. So some poor soul bought up here and is wondering what happened to the AI infrastructure play. This is just kind of how it goes. This is not the first time in market history something bonkers has happened with a particular stock. For whatever reason, be it a squeeze or taking advantage of some really hot topic, meme sector. So anyway, that's the weird part of the show. We look at goofy stocks. In the wonderful world of shorting, there are some things that are actually, even on a day like this, lifetime highs, green all over the place, that are going down. A few of my own short positions that are doing okay, God bless them. Sienna, down over 2%. We've got, this is a new one for me today, a HIMS, which is down, coming up on 4%. HPQ, a little bit better known than these others, they are down not quite 3%. INFY, I mentioned this one a couple of days back. I tweeted out something like, it's begging to be shorted, and it was. This is down over 4%, so that's slipping nicely. All on GE. We've talked about this too. GE Aerospace is off very nicely, about $12+, over 4%. Love all that red, and it's about context. This market goes to lifetime highs every single day except Saturday and Sunday. If a stock can act like this, that shows a lot of weakness under the hood. I think I mentioned this one yesterday. I don't recall. Pony. I did a post about it. I know that. But this is a Pony AI. They're down to not quite 2% as well. But as I said a few minutes ago, let's watch those gaps. So besides NVIDIA's gap, Bitcoin, this is the Bitcoin futures. And of course, the futures don't include the weekend trading. But this is the gap I'm talking about, which is just under 82,000. We are getting close. Now, I created a little starter position on a Bitcoin short yesterday. I got stopped out of it like that this morning. But that's what starter positions are for. It was little, so the loss was little. And I'm just being impatient. I'm not going to touch it until it gets real close to that gap. So that's worth watching. With Bitcoin up $20,000 since, I think, late February, companies like Strategy have been doing very well. Strategy has been blasting higher here. But it, too, is approaching what I think is probably a pretty decent resistance point, either this peak or this peak, I'm not sure. But it's all about the gap. You can see that also reflected in IBIT, which is the Bitcoin ETF. The equivalent level for that gap is right there, right at that line. So I'd watch for that, too. The big earnings event, we've got IBM coming up after hours, and also Tesla. I'm short IBM. I'm conservative these days, so none of my shorts are particularly big. But Tesla's interesting too. No position on that one, but my opinion is that based on what I've looked at in the chart, it's probably going to slip lower. But again, I'm short IBM and no position Tesla, but I think Tesla's going to fall. So we'll see in a couple of hours. Thank you for joining me, and I will see you here tomorrow. Good night.
What is theta? Options lose part of their value over time as they get closer to expiration. That's why they're called wasting assets. Theta is how fast the option's value changes in a day, not taking any other factors into account. Way far out, an option's price doesn't change as much as time passes. But at about 60 days till expiration, the time part of the option's price starts falling, and at around 45 days to expirations, it starts dropping much faster. If you bought an option, you'll feel time decay pushing down on that option's price. If you sold the option, though, time is on your side, and keeping the credit from the opening trade becomes more likely. Even though options lose their value over time, Tasty mechanics say to exit the trade near 21 days till expiration. Remember, gamma risk gets stronger in the last several days, and stock movements will have more of an effect on options prices. Again, theta is just the rate at which options lose part of their value. Pretty simple.
Feel like your wardrobe is missing something? Like style, purpose, and maybe a dancing dog? Can I pet that dog? The new Tasty Trade and tastylive web store is now live. New merch, bold designs. Did we mention all net proceeds go to one tail at a time? Invest in the real bull market, dogs. Go to tastytrade.threadless.com. Grab some gear and help some pups. You get merch, they get a home.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from Tasty Trade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. Tasty Trade. Download today.
We built Tasty Trade's web platform for today's traders. See it, click it, trade it. Drill into data, find opportunity, and track the action with hundreds of indicators. Track your options profit and loss history over time per symbol. Note your progress and plan your tactics with a trading journal. Fund your account and start trading right in the app. The tools, the data, the knowledge. See it, click it, trade it. Join the club. Tasty Trade.
Think you know where vol's gonna go? Test your theories with backtesting. Pick from hundreds of symbols, any strategy you want, and all the data to trade smarter. Tweak the delta, dial the DTE, stack the legs, see what survives. Trade what you want, when you want, with Tasty Trade.
Ring the alarm, hey, ring the alarm, boys. Turn up the charm. Listen up, y'all. Get out the damn stall. It's the last call. Hey, the last call. The last call. The last call.
Mr. Vecchio, my friend, we are back for the last call, and it's been a quiet rally, I would say. E-mini S&P 500 futures up 61 at the moment, about the highs of the session, 4 or 5 ticks off that we just got here in the last 10 minutes or so. You got the NASDAQ up 414, the Dow up 240, and the Russell up 13. So the NASDAQ and the E-minis, the outperformers of the bunch today. You've got oil futures at 92.60, up almost $3 here. They got as high as 93.73, so a little bit off the high here, but still kind of strong over the last couple sessions here. Volatility futures down 35. They've been pretty sticky. There was a point today where I think they went slightly in the green. At 2096 was the high of the session, which was 20 ticks off the open. They've been kind of sticky here at this 20 level. Bonds basically unchanged. They have been chopping between 114 and 115 pretty much for the last like 2 or 3 weeks here. Gold and silver both bouncing a little bit. Gold's up 41, silver up $1.21, so a little bit of a bigger move in silver there. And then Bitcoin just under the 80K mark. It's had a little bit of a resurgence here. In the stock world, it's been all about kind of these semiconductor stocks. SMH is just going absolutely bananas to the upside. You know, you've got Micron nearing 500. AVGO is all over the place. It's at 420, about the high of the session. AMD at 300 and change. You look at some of the optical stocks; those are at, Light is up $30, up 300-ish in the last 4 or 5 months. That's kind of been where most of the action has been. You got like Meta and Microsoft up a handful. Amazon has been super strong. Apple was strong today after yesterday's mini dip on Tim Cook leaving at some point. Google has been strong. You can't miss a dip. That's the story. You had a little bit of a dip.
5% dip.
0.5%. I told you it's Donald Pump is back, baby.
Is the worst thing that for the market for the war to end? And I don't mean that facetiously. Like, what headlines will we have to pump on if not war headlines? Well,
the greatest thing is that after this ends, there will be certainly another thing that will be problematic that will scare the children for a moment and give us that dip. We've seen it over and over again. There's always something new.
Yeah, there'll be another war tomorrow. The Bitcoin move to me is the most impressive one. It has, the charts look really nice right now. It's completely broken the downtrend from the October, the January highs. It's back above its April 2025 low. I hear this talk about the dollar falling out of favor because Iran's going to charge everyone the Ayatollah booth in the Strait of Hormuz, $2 million, $1 per barrel of oil, and they don't want to use U.S. dollars.
They should make their own token. I was talking about with Ryan, like Fartcoin is going nuts again. Why don't we have an Ayatollah coin?
We should make one, Nick.
We could front run that. There's probably 100 of them out there already. That wasn't original.
How many of them were Twitter friends with the real Ayatollah, right? Okay, come on. Look, the stock market move today is really impressive, given the fact that we have this backdrop. It's a really nice bounce, Nick. ES pulls back yesterday, hits the former yearly high set in January, former resistance turn support. We're cycling up to a new level here. If we get through 71.85, 71.80 or so, the path looks clear, like a little bull flag here for a move up towards 7,300 in the short term. It's tough to fight the tape right now. Are you bothered at all or perplexed by this lack of volume today? We have not yet crossed 1 million contracts traded in ES, and I can't remember the last time we saw that at this hour of the day.
Yeah, I have the way I am positioned and I've kind of gotten into this position just due to the move that we've had is I have like upside kind of tail trades that have worked over the last couple weeks that are profitable trades, but still have more room to go. Diagonal spreads, crab trades, stuff like that, where I have upside gamma via options. And then I'm short delta via static delta. I'm short the E-minis. I'm short small in the NASDAQ here. I'm short the Russell. Like, I'm short them all. I don't like what I'm seeing. I don't like the move in oil. I don't like the meme crap flying around. I don't like, semiconductors
flying around, Nick.
The cars, the birds, birds, trains, planes, automobiles, all of them. The whole basket is going nuts. People are texting me about AMC again. I'm seeing GME, 2,000 calls bought in December. We're in silly season. And, I think you got to watch that out. But if anything, yesterday looked like it was the turn. And I thought I was a genius, caught it. I took a little bit of heat, day one, day two. And then I thought I was a genius yesterday. And then you get the tweet. And that's the problem with trying to be short is in this market and this news environment, things change on a dime. And most of the time, and I talked about this with my dad, the elevator now is in both directions and has been for years, to be completely honest. It's no longer the, escalator up, elevator down. It's elevator in both directions. And if you are not putting positions on both sides that are going to capitalize from that, you're going to get chopped to pieces.
Tell me about it. I think the story that you're telling here about the pigs flying is really interesting. Cars are a fascinating one. This feels like a gamma squeeze circa 2021 all over again. If you look at the outstanding float right now, 35.32 million shares. One investor owns 49% of that. A second owns 22% here. There's about 6 to 7 million shares publicly floated, and the short interest is still more than 100% of the float right now. So what makes this interesting, when does this really all start? This group called Petwater Capital, they in February 26th start buying up shares in Avis around $96 a share. And they go out and they start selling puts $100, $120, $150 a share. And when those puts expire, they exercise them. And what does that do? They take more of the public float out of the market right now. Mm-hmm. So Nick, did I see early, this was trading near $800 today. What was that print that I just saw on my screen? 400?
Yeah, it's 460 now. And I would like to address the crowd here saying, Nick is the new Ilya. He does one appearance on overtime and he turns into Ilya. No. Okay?
Please, because I can't be the new Ilya. It's got to be someone else.
No. And you'll get Chris and Ilya after this, okay? Back to the regular scheduled programming. I'm not bearish. I think we are due for a little bit of some fear. I think the stickiness of volatility, the move in oil, the goofiness of the cars and the birds and the planes and the trains, all those things point to, hey, we got to cool off a little bit. You can't just go hockey stick to the upside every single time. So that's my prerogative, guys. I'm always bullish. I'm always leaning long. I'm always, positive thinking in my trading, but you can be tactical and you can trade a position. You don't have to marry anything. All right. The peeps call me out. I don't like that, but back to car. Yes. And it's
if they only knew the aggressive text message I've been receiving from you and after buy more stocks, Chris, it's funny that people think you're bearish.
No. I think they're giving me some flack here, but I was texting you. I tried to save you, Chris.
You did about.
You tell your kids about that, okay? You tell them about that.
I will. Uncle Nick.
Yeah, Uncle Nick. He was there for you, and I wouldn't listen.
You see why Uncle Nick's living in that nice house and we're not kids?
Oh no. Were you? So do you have any change of stance in your thinking here with the move in oil? The move yesterday. I was taken aback by it. I mean, you had into the close, E-minis closing at the lows, which we haven't seen really since kind of the stair step lower that we had, the escalator lower, which is now the thing. It's not the escalator higher, it's the elevator higher. But we had basically the E-minis closing at lows. NASDAQ was weaker as well. You had oil touching, I think 95 was around there, 95, 96, 97. Volatility was up pretty significantly, at least a full point into the close. And all of a sudden a tweet comes out and the entire thing is reversed. Is that too much too quick? Is the pendulum, does that creep you out a little bit? The swing of the pendulum being very, very quick like that?
No, because it was the headline that the market was angling for all day and was hoping for. So the market got what it wanted, which was that we're not going to resume active escalation again in Iran. And as long as that remains at bay, the market can treat this as if it's a done deal to a certain degree, at least stocks can. I mean, there are tons of problems that are in the supply chain that are still building. Those aren't even going to be addressed. But, for the United States, how much of the S&P 500's earnings come from, the region around Iran and that Gulf Coast region? Not the Gulf Coast, but the Gulf region and the countries surrounding the Gulf.
Not much.
Not substantial. Not more than, no, not substantial.
That's been the whole argument into the down move. Well, and oil as a thing,
and oil
is
at 90
obvious,
is not a problem.
It's high and not ideal, but not uncomfortable. Like
not uncomfortable.
You're not getting stuff stopping. There's no problem, and the AI stocks don't care about any of this. None of it matters.
No, because the supply chains are kinked but not broken. Then you just have bottlenecks, which raises prices.
It stinks for us. I filled up my car the other day. I was like, whoa, that stinks. I have to pay for that. Same thing with the tariffs.
Go back to what happened in 2006. Right. Well, hey, that was a good deal for businesses. They got to charge their consumers more money and they got rebated on the other end with the refunds that are coming now.
No. I told this story this morning. So my friend is in the flower business here in Chicago. He has a shop out in Detroit and in Milwaukee. It's a small business. And they do flowers, and it's obviously something that comes and gets imported. And basically, the importers, they pay the tariff, they up the prices, they give it to a distributor. The distributor marks it up now because they have to mark up for the importer's price, and then it gets to my buddies who have to mark it up again because that it goes down the line. The tariff refund, they can't get any of the tariff refund.
It's only for the importer.
It's only for the importer. So it's only for the Amazons, the Walmarts, all these big companies that have their own distribution, their own importing. Yet another money printing to the top. It goes to the top of the food line.
I love your Art Vandelay anecdote.
You like that? You like that?
I love it. Yeah. Listen, hey, it takes about 6 months to get an import-export license, having looked into it before. So maybe we got a...
What are you importing, buddy? Huh?
During COVID, surgical masks and gloves.
You and one of the other guys on the desk.
I tried opening a factory, Nick.
Yeah.
We got so deep in the game, we tried opening a factory.
The COVID hits and Chris is the first in line at Costco to get all the toilet paper. That sort of thing. He's always looking for a buck, this Vecchio.
And then I'm immediately selling them out of my trunk in the parking lot.
Double up in the parking lot. He's sicko.
We're trying to make a market, Nick. That's the job.
I love it. So,
I hear you on this. Oil to me at 90. Look, the whole freak out that we had in the 2000s. I know a lot of traders may not remember this, but when oil was looking at $120, $140 a barrel in 2006, the inflation adjusted price for today, given how everything has changed, is closer to $190 to $210 a barrel. So $90 in 2026 for oil is not $90 what it was all those years ago, 5 years ago, 10 years ago. It's a smaller part of everyone's budget. It's a smaller part of everyone's outlay. At $90, gas is going to be $4 a gallon or so. That's not great. But Nick, we just saw the retail sales figures here. People are spending through it because realistically, maybe it's another $100, $120 a month for consumers, those who drive frequently back and forth to work. At $1,200 a year, it's not fantastic, but it's manageable in the short term, right? Like you filled up your tank, no big deal, whatever, the other day, it's a few dollars extra. For me, I'm doing it. I think I spent an additional $30 on gas so far since the war started. Maybe that's because I work from home.
Yeah.
But I'm, $30 is something that most consumers can take in stride. And then you think about the structure of the consumption in the economy. Most of the consumption is done by top income earners.
Mm-hmm.
And that's not great for the K-shaped recovery. And we need better distribution of outcomes for sure. But the top 10% of people who spend 50% of the consumption in this country, an extra dollar per gallon isn't going to derail their plans. Recessions don't start because of declines in consumption. They start because of declines in business investment. And so if businesses can take that in stride too, then there's no recession here. And you just get a situation where you have higher nominal price levels. And what does well in those types of situations, Nick? REITs, metals, stocks. And sure enough, the REITs have been on fire here as we adjust to this
Which
new
ones do you look at, like
non-ceasefire
XHB or?
Yeah, pull up XHB. I mean, we were going over this with Helene Meisler yesterday, which for those that didn't see the interview, head over to our YouTube page, check out round 2.
Yeah.
Well received. This was one of the points of discussion there. Well received again.
Yeah. I mean, you're a fan favorite. I do some videos and they're like, well, who is this idiot? Come on. Vecchio gets on
Bring
there.
back the Radigan belt cam.
Yes. Oh my, it's a classic. Other things,
the top comment on my videos.
I will say, that was really fun. I mean, I had the most infamous Radigan experience of all because I got him in the back of a taxi in Turkey on his cell phone. I mean, that was you can't write that up. You can't make that story. That's one of a kind.
AI can't do that.
No, that's one of a kind. It's authentic.
That's why you gotta love him.
We do have a couple earnings after the close today, just to go through them. Tesla, which has had a nice bounce back here, trading at 387. It's basically unchanged on the day, up $1 or so. I have some long delta there. ServiceNow is another one of the software names, probably the first of the batch to report and one of the bigger of the groups. It's had a nice little bounce back here. I got some long delta there as well. LRCX, I'm pretty neutral delta here. With a 2-day trade, I sold a call with a short or a put ratio spread. This too has earnings after the close in the chip space. You have IBM as well. I got some long delta there, trading at 250 and change. TXN, which is Texas Instruments, if anybody is interested. You also have Love and Las Vegas Sands as well. Tomorrow morning there are a couple others, like you have Lockheed Martin in there. AAL, which is one of the airline group. You have FCX as well, one that I've traded a handful of times too. So definitely some interesting earnings here coming up on the docket for the next leg of the earnings season. You think any of those matter? Because I'm kind of looking at ServiceNow as kind of the bearing for how the rest of these service stocks are going to look moving forward.
Look, we've seen the multiples come in.
Yeah.
I mean, Nick, I think the question is, and I brought this up on air before about buying the dip in IGV, which I am not. But to make a case to go back to where we were at the highs last year, you have to make an argument that those type of multiples are justified and warranted again. But let's just say we get a ServiceNow report where it's like, hey, this company's making a ton of money still, and they're actually using AI to boost their productivity. AI is not going to eat them. They're going to use it to eat other things. I mean, it could be a change in narrative.
Yeah.
What's going to happen, I don't know. But I think that's not the most important one. I think in aggregate, you're looking at a whole host of companies that are related to the AI story, the infrastructure build-out story here.
Mm-hmm.
And last quarter, when we were going through these earnings, the question wasn't, what have you done for me lately? It was, what do you plan on doing for me in the future? You can tell us that business is good, but if you guide for too much CapEx, we're going to go, right? That's not really been the case this quarter so far when we're looking at these reports. It's more of like, okay, the earnings are good. Hey, the spending was justified. And you say that you're going to do more of it in the future. Hey, we believe you. So there seems to be a smaller hurdle right now for these companies to clear. Maybe that's because we're in the throes of a rebound of a bull market rather than, having just rallied 40% off of the April 2025 lows or whatever. It's like, okay, is this getting too elevated up here?
Mm-hmm.
It's a different context. So I think that framing matters right now. If Texas Instruments comes out strong, IBM comes out strong, it's no longer just the big names that are enjoying the bona fides of AI.
Yeah.
It's filtering out into different portions of the market. The breadth of this story is expanding and producing real revenues.
I agree with that. Do you have any take on Tesla? I mean, that's the biggest of the group. Volatility in there is very, very low. I have.
That's the thing.
I have upside delta, so I'm playing it to the upside. I'm wary of the downside because I feel like the SpaceX is not like the distraction here. I think Tesla is kind of the distraction company, and I'm worried. I'm worried that they're going to get spread a little bit thin here. Elon, I mean.
Oh, that's the thing. We haven't talked about Musk's attention span.
Yeah.
Because the guy's juggling 50 companies, right? That was a problem years ago for Tesla.
Yes.
Recently, in fact. Like, oh, you're at Doge. You really care about your company?
Yes.
And when he leaves Doge and says, I'm committed to it, the stock price rebounds. So I think that could be a fascinating angle to look at. Listen, Tesla itself is more than just cars right now. It's moved into storage. It's moved into battery. It obviously has
Chips.
issues with the
Trying to do
right?
chips too. Yeah.
So that maybe is Musk going to pivot away from cars more and focus more of his earnings call on the bots, on the autonomous driving, on the AI chips. I mean, that's really the growth story right now for the company because EV rebates just went away at the federal level. And the demand here in the US, while it's hot, we don't have access to low cost enough EVs right now. Tesla's vehicle sales are falling. So Musk to spin a story here, he needs to go beyond the cars and focus on everything else. And I think there may be something there. I personally don't have a position in Tesla. I've been burned in Tesla before this year. It's also the low volatility. So just from a pure tactical approach, Nick, this isn't something where you're looking to say like, inside move. You're not going to get paid on that right now.
I don't think so.
You got to take lotto tickets if you're doing it.
Yeah, I agree. I agree there. As we get into the final couple minutes here of the session, E-minis at the highs here, 71.68. We got as high as 71.71, up about 1% here. NASDAQ inching forward here, up 444. You've got the Dow up 300 and change, and the Russell up 16. Russell kind of lagging the group here. Oil sold off a bit, only up $2.82. You have volatility futures right here at 2065. They haven't moved. The VIX itself at 1869. You have gold up 41, silver up $1.32, and Bitcoin continuing to stay bid here. Do you take anything out of the volume today? It's been kind of an anemic day, especially with kind of like the flying around that you're seeing in the semiconductor stocks and some of the Mag 7s and the memes. You think it's the attention is going away? I don't like when the attention goes away from the big boys.
Everyone gets a sense of burnout.
Mm-hmm.
We got a ceasefire. Indefinite ceasefire was the announcement yesterday. I know today there's been some tinkering at the margins with what the exact timing of that is. Maybe it's 3 days, maybe it's 5 days. But if you were actively managing this market for the past month and a half, and you got that headline yesterday that the ceasefire has been extended until Iran gets its, warring factions together on the same page, you probably could look at today and go, I don't need to worry about this market today. I can take a step back. I can take a breather because we're not going to get the headline that the ceasefire deadline's, approaching around the corner, right? We're not going to go back to war during the ceasefire window. We're going to try to keep the lid on this thing. So I can take a breather today. I get that.
Yeah.
So I'm not reading too much into it. I think psychologically people wanted a break. The 3-5 indefinite window is the permission structure to, absent any significant catalysts besides the Tesla earnings after hours, I think a lot of people slept in. It's been earned.
I think so too. I don't know. I think, yeah, I hear you there. After
I'm not reading too much into it.
Yeah.
That's it.
Yeah. E-mini's up 70 here going into the close. For the earnings announcements, you have Tesla right at 5 after. You've got ServiceNow at 10 after, LRCX at 5 after, IBM 10 after. So they're all kind of coming there right after the close here. Have you been trading anything else? Any interest in like the gold and silver basket, oil?
No,
no gold
not
and silver.
I've been looking, I've been waiting and watching. I actually tried getting filled on a silver position the other day and did not. Thankfully, that's a thin market sometimes, Nick.
Yeah.
Because it would be underwater right now. But you look at these charts, right? Gold itself, October, November, February swing lows. That trend line there, we got back to it. And then just for the past 2 weeks, we haven't been able to crack through.
Mm-hmm.
And yesterday we put in a bearish engulfing bar right at our 50-day moving average. I don't know. That doesn't feel too hot. Copper, on the other hand, is feeling much better. Copper looks good. I joined Westwater a few days ago and getting some long deltas in copper, in part because of some of these supply chain issues that are going on around right now. There's just a sulfur shortage in the world. You can't liberate copper from its ore without sulfur. China has stopped exporting sulfur. You can't also, you usually just don't mine silver by itself. It's usually found around copper deposits. So if copper mining is going to slow, then perhaps supply of silver coming into the market slows as well. But right now it's more of a clear copper story. So long deltas in copper. I've been playing ping pong with oil. When this thing gets up, if you want to give me the opportunity to sell calls above 130, 140, I'm happy to step in there. And when this thing drops, into the low 80s, you want to give me opportunities to sell some puts in the 60s, happy to do so. And that's really all I've been doing here. I think there's a floor under oil right now. I think we have reason to suspect that. I also think that President Trump is bored of the war and wants to go after Cuba. So
the new shiny object.
It's Cuba or Greenland, man. I mean,
we already got Greenland in theory, on the papers or whatever. Sorry there. Yeah. I agree with you, though. I think oil continues to be where opportunity is. I know oil volatility has come in really significantly. I still think you're going to have a lot of two-sided action there. And with volatility at a 76 handle, it's still super, super high. So you're not missing anything there. As we go,
volatility is nice.
The volatility is great. As we go into the close, we've got E-minis up 70. That's our bell here. The NASDAQ up 445. I'm sure we're going to see some action in the overnight session here, or the after-hour session with you and Ilya, because you've got a bunch of earnings coming out that should be pretty significant for the market. So we're going to take a quick little 90-second break and come back. Chris will be on with my friend Ilya as well. They're on for overtime. We'll see you all in the morning tomorrow. Peace.
First thing about Tasty Trade is how easy it is.
It's a very quick, light platform. It's all on one page.
And with 1 or 2 clicks, you can be anywhere on the platform. Being able to see graphically where your profit and loss zones are. Whether it's a pool, a puddle, or a sea, you can navigate your way out of it with the Tasty platform. So I love that. You guys have the most unbelievable customer service in the business.
Email support, call support, get through right away.
They actively listen to the customers to make changes to the platform to make it better. In fact, I've never seen anything like it in any corporation in the United States.
Tasty Trade's active trader interface makes futures markets your arena. Built for the bold, not the board. Trade CME futures with a single click. From micro contracts to major ideas. And go even further with futures options. Tasty Trade lays out multiple ladders and charts for total visibility. Plus, hundreds of built-in indicators for traders who want a broader view. Tasty Trade, pro-level tools, intuitive design, total control.
New all-time highs for the NASDAQ, even as oil stays up. It's still Wednesday, April 22nd, 2026. This is Overtime. I'm your host, Chris Vecchio in New York. He's your co-host, Ilya Spivak in San Francisco. We're here to take you through the next 26 and a half minutes as we wind down this trading session. Trading session that, was anyone home? S&P 500, did anyone trade this today? 1.1 million contracts traded by the end of the day. That is exceptionally light. It's one of the lightest volume days that we've had since the war started, Ilya. I think it might be the lightest day since the war started. But that's not what people are talking about right now, per se. People are taking a look at what's going on in some of these earnings reports that are going to be pouring out here after hours, including Tesla, which immediately here, up to 399, was closing in around 387. Q1 revenue comes in at 22.39 billion versus 22.19 billion expected. The adjusted EPS is 41 cents versus 34 cents expected, and the gross margins higher, 21.1% versus 17.7%. So a nice little triplet of numbers there coming from Tesla. As we make our way through today's show, Ilya, we're going to get a whole bunch of other results out as well. There's Lam Research, LRCX coming out. There's IBM. There's Texas Instruments. There's ServiceNow, some of the names that obviously are related to AI and some of the AI eating software story, ServiceNow in particular. We'll keep an eye on Tesla as we make our way through the market. No volatility right now. Still 10 IVR. Oil up here today, though, Mr. Spivak. Another $3 or $2 and change. 3.1% right now in the CLM6 contract. President Trump was kind enough to clarify what he meant by indefinite suspension of fighting for the ceasefire, which is to say that 3 days, 5 days, he's hoping for a proposal by Sunday from the Iranian delegation. It's not just American news sources reporting it. Also have the Israeli Times saying that President Trump thinks the war could be over by this Sunday. However, alongside that assessment, 6 months to clear the Strait of Hormuz of potential mines from President Trump himself today. So you get this interesting twist, Mr. Spivak. What say you? Oil up, gold up, stocks up? What kind of world are we living in now?
Well, let's consider whether gold is up. I think that's probably the place to start. Because is it up? It sure looks like it's barely eking out an up day after what was a whopper of a sell-off yesterday. And so I'm not so sure that all of this quite ends with just looking at the daily change and going, oh, well, let's extrapolate that narrative. I don't know. Gold looks fair. Like it's quite hampered here.
You may have said I teed that up for you intentionally.
You may. To take a look at the yields picture. And it's getting interesting. Again, yesterday we get a big move in yields. Today, we don't really make it on the attempt to get back down. And so now you start to kind of piece this together and go, okay, oil is up. We have an indefinite something or other. The president hopes for all kinds of things. That's always a good strategy. But when you look at the bottom line, what does this indefinite ceasefire mean? Well, if you've shaken the pillars of the Iranian regime to the point where they can't talk to you because it's unclear who's talking, and they're fighting amongst themselves, well, maybe you've achieved what you wanted to achieve, which is to say regime change. You've achieved it in the sense that it's tough to see where the coherent regime is and who it is and who is actually in charge. So I guess you've changed things. Maybe things end up creating an opening here for all those protesters that were out in the streets by the truckload in December, now that you're not dropping bombs on Tehran, to come back out and finish the job. Maybe, or maybe not. Who knows? What we do know is that whereas Iranian tankers were making it out of the strait before, fewer of them are making it out of the strait now. Now, it seems like about 24 of them have made it out, but about 28 of them have been stopped. And 2 of them were captured, including one 5,000 miles away from the Gulf in the Strait of Bengal. So we're hunting them now. It's not just the Strait. This is sort of what happened with Venezuela, where we were hunting their tankers as far off as Iceland. So we're putting the squeeze on this, and we're not putting a timeline on it. What does that mean? Well, it probably means that whatever issue we had with, let's say, 30% higher oil, maybe not 60, as it was at the worst of the crisis, but 30% higher oil is pretty well baked in. And this is going to be a problem for bonds because yields are going to have to stay higher. It's going to be a problem for gold because yields are going to stay higher. You'll note the dollar is a little bit higher today, in particular when you look at it against the euro. It's starting to make some headway. And Bitcoin is curiously up.
Bitcoin looks real nice. I know that you're long.
Yeah, I am. And it's not because I believe in the great and powerful alt money future either.
Yes, you do. You tell me these things all the time. All the time. You're like, I secretly love Bitcoin.
I certainly love it when it makes me money.
Oh, there you go. But it's a nice little bounce here, right? I mean, the charts, we've been keeping this on the show the past few sessions. Downtrend from the October, January highs have been broken.
Mm-hmm.
You have your pivot through the April 25 low. This nice little ascending triangle here, which in the context of a downtrend, most of the time would resolve lower, but
it's that former low that's scary now.
The former swing low here that's
right
near
there.
81.
That's what you got to clear now.
And you can see that gap, by the way, in the futures here in the continuous contract. You have that gap from the 30th down to the 2nd. Okay. And so you get through that swing low here, you're clearing the gap, not quite the close gap, but the absolute low from that January 30th day. And then this thing can start to build, Ilya. I mean, that is one of the charts. This looks so much better than gold right now.
Which is an interesting thing, because this also is a non-yielding kind of asset, much as gold is, but there could be a completely different story here. We know that, for example, last year, gold was at a crazy bullish setting where it just did not care. Yields, dollar, whatever. It was going higher. Oof. I'm good here.
I say IBM earnings just came out, and given the stock chart, you can imagine.
That's it's not a happy result.
Operating EPS is 191 versus 181 expected. Revenues beat as well, 15.92 versus 15.67. Its AI book of business metrics were not published for Q1. I'm not looking at anything in the numbers here that looks awful. Software revenue was 7.05 billion versus 7.04. Free cash flow is higher, 2.22 versus 2.17 billion.
Yeah, all the big ones beat.
AI book of business metrics not reported for Q1.
That
is the interesting. Okay. Texas Instruments here out as well. Those shares are moving the other direction. While their revenues were a little bit softer at 438 versus 4.53 billion, EPS came in at 1.68 versus 1.38 billion, and they're looking at their guidance for Q2 revenues. The street consensus was 4.85 billion. They are guiding up to 5.4 billion.
Mm-hmm.
So Texas Instruments, Tesla getting a nice little bounce. You're getting your IBMs of the world peeling off a little bit more. Not publishing your AI metrics in this economy, in this market. Bold move, Cotton. Let's see how it plays out for you. That's probably not going to be well received even tomorrow. Ilya,
CSX hasn't done much of anything. They reported as well, and they missed on revenue, but EPS came in all right.
Are we seeing anything here that's going to potentially be the pinprick that derails the recent bump here?
I mean, to me, none of this has anything to do with really what the market has done. I mean, I suppose the bump in NASDAQ today, it outperformed the S&P, it outperformed Russell. Russell was the weakest of the bunch, which is interesting and growthy. There's maybe some level of extra anticipation ahead of this Tesla report. It doesn't seem like this Tesla report is going to do much of anything for anyone. I mean, if we just look at the way that the price action is working its way out, I mean, yeah, you get a little bit of a pop here, but where is that pop taking you? You're basically just back to the very short term intraday highs. So, okay, fine. We're back to the range that prevailed earlier today. Have we gone anywhere different? No. The high yesterday was 409. We're at 405 now. Okay, so we've jumped from 390 back to the range high. And what? So I don't really see any meaningful reason to think that anything here is going to matter more than the larger macro story. And in that larger macro story, you're starting to kind of get the outlines of what's going on. Because if we are in basically a holding pattern waiting for Iran to decide what it's going to do, blockades don't work quickly. I mean, it's not like they can't get any oil out. They can. So it's just less. And their economy is already hanging on by a shoestring. So, and the reason the people were up in arms in December in the first place, besides the regime's horrendous human rights abuses, that aside, that has been a long story for a long time. That aside, it was the economy and the absolutely abysmal state thereof. So could we get the people back out into the streets with enough of this indefinite blockade? Probably. Is the regime weak enough that this time they may actually tear it down? Maybe. Who knows? It's not happening by Sunday. So if you look at all of this together, then what's the upshot? More expensive oil, an inflationary impetus that's sticky, rates that aren't going down. It's not a problem for the stock market necessarily, unless it chooses to care, because the business cycle still looks reasonably okay. But it certainly seems to be a problem for gold. It seems to be a problem for bonds. And it seems to be a solution for both oil itself and the dollar and Bitcoin, which is kind of interesting when you consider that Iran is a major Bitcoin mining center. If you have been under sanctions for as long as you've been under sanctions, and you can't quite ship out your oil as much as you'd like, what can you do? You can burn it on shore to generate electricity. And generating electricity can be sold to Bitcoin miners. And then the Bitcoin proceeds, well, they're harder to sanction, aren't they? So you might, and some people might even accept them for payment when those people like to buy rockets and lob them at things. Houthis, Hezbollah, Hamas. Go figure. So Iran is a huge Bitcoin mining area. Well, you make their energy more expensive and you make less of it available for such endeavors. Might there be a shortage of Bitcoin? Especially now that all these ETFs are mandated to buy them?
You know, it's a compelling story. Are we going after the Iranian power grid anytime soon? You know, if the ceasefire holds,
I hope not.
Threats,
I hope enough people have told the president that would be a war crime.
Well, you never know who's listening to these days. IBIT BTC futures, it's the same chart. It's the same April 2025 low that's broken. Well, yeah, I don't think the story necessarily, I mean, I'd love to tell a good story. I think everyone here knows that.
It's a good story.
But this is also just a good looking chart.
That's what makes it a good story, right? Anybody can tell whatever story, right? There is never a shortage of stories. But it's the price action you have to start with. So you look at the price action and you go, well, last year gold was rallying up a storm. Bitcoin couldn't buy a vowel. Why?
Yeah, by the end of the year. No.
Why? Well, apparently whatever anti-fiat thing that was happening in gold was not happening in Bitcoin, and for, I would argue, obvious reasons. Because when you're diversifying away from sovereign assets into non-sovereign assets, this thing isn't that. It's an ETF and a futures contract regulated by American authorities. And that's the only thing making it liquid enough to be on anybody's radar. So
this turn in Bitcoin above its 50-day moving average, right? We have this little scoop where we rally up, we hold above that April 25 low. We're getting this switch in the slope of the moving averages. You can see it in gold here, where we broke down. I'm just going to get rid of the uptrend here, but we broke down recently.
Yeah.
Bearish engulfing yesterday, rally back today. Can't quite get through the 50-day, through the 1 week, through the 1 month, even on the close, despite it being a green day here. And then you have your 10-year yield, which the 10-year yield had a little bit of a pullback, came back into its 50-day, right around former swing highs in the market. And now it's looked like it's catching on the 50 and potentially getting ready to turn higher again. So you mentioned, yields came in technically over the course of the session, looking on the candle, because we gapped open higher. But we also closed above yesterday's high in the 10-year yield, despite all of the gains and the enthusiasm in the stock market. So, I mean, my attention starts to look to, if we're going to be needling, threading the needle of this path where we're going to have oil at like 90, 95, but probably no recession. Are we going to be looking back to a whole host of inflation-linked products, or products that typically do better during highly inflationary times? Do you see the Fed hiking rates because of a transitory inflationary shock?
Hiking, no, but not cutting, yes.
But not hiking, right?
Not hiking, no.
And so that does leave you with a little bit of a discomfort window, I should say, where inflation pushes up and the market goes, well, the Fed's not going to hike, right? They're not going to cut, but they're definitely not hiking. And so what has pricing power in that environment? I think it's the REITs, honestly. And this is the position that I'm starting to build. If it's home builders, if it's the REITs, if it's something related to the fact that there are limited amounts of supply for housing in this country, the tariffs aren't helping it, higher energy costs aren't helping it. And throughout U.S. economic history, Ilya, when inflation goes up, landlords are exceptionally fast to raise prices to retain that pricing power. This was a good trade in 2023, 24, coming on the other side of inflation. It may need to be bigger than a 45 in, 21 out cycle. But thinking about real estate in a world where there's no recession but high inflation, aren't we all sitting around complaining about high home prices these days still after COVID?
I mean, a little bit.
They haven't come back in. They haven't come back in. So, I mean, that to me is the most sensible option right now. If I'm thinking about places to allocate capital, incremental dollars here henceforth, rising interest rates is going to prevent people from building homes. So the existing supply is what we've got.
It's also going to perhaps, and I'm just exploring this with you now because I haven't thought too deeply about it, but my sense is that there is a kind of tension here between, maybe there's less supply, but also maybe less demand. And you're starting to see that already. You're starting to see, for example, even in the most expensive pockets, New York, San Francisco, prices are starting to get marked down a little bit. And that's just a function of demand loss. Now, if you squeeze people on energy costs, you squeeze them on everything else that transits the strait that ends up costing them, down to plastic forks and knives, because a huge share of polyethylene supply goes through the strait, the most common plastic. You look at all of this and you go, okay, well, it's all well and good, but people do need to be able to put the down payment down. They do need to be able to actually afford then the payments. They need to be able to go and get the homes. And in this environment, you get an affordability crisis that gets worse, not better, not only because rates stay up And so mortgage rates don't come down, but also because people just have less money to go do stuff with, especially when they have to commit to big ticket purchases like a house with a 30-year mortgage.
Yeah, you mentioned the issues of San Francisco and New York having potential falling demand. This is one of the politics of the area may have something to do with it.
Could be, sure.
Not exactly well-run places throughout the grand history of things. This is between the domestic migration between markets. So if I was looking, Elliot, one of the things I'm going to go into when I think about these REITs is where is the demand? Where have people moved to, right?
Mm-hmm.
Where are strong labor markets in states with strong local economies that people aren't fleeing? I saw this very foolish idea that the state of New York's proposing right now. They want to assign an exit tax. So if you leave the state, you move it. I get hired by a new company. They said you got to move to Chicago. New York's going to tax me for leaving the state.
It's almost
so dumb.
I don't know which idea is stupider, that idea or what just passed in the UK where people born after 2008 are banned from buying tobacco products just for life at any age. If you were born after 08, tobacco products, not for you. Because we know prohibition works really well.
We can make a market on that.
Right?
We can do that. We can make a market on that.
Right? At the same time, you're saying if you were born before that, you can still have cigarettes, so there's plenty of supply to be diverted. We can always find how some can, what do they call them? Lorries over there? We can find a lorry.
Yeah.
Surely.
There are these knock-on effects where if I'm looking at REITs, I want to get something that's going to be in a more stable market with lower supply. I'm just working through my process here. I'm going to go through an area where there's a high cost of living area because it means there's enough economic density and probably Fortune 500 companies that are headquartered in an area. I wouldn't want to buy a REIT in a town where there's no significant corporate footprint in a state with a higher than average unemployment rate with a housing market that's been overbuilt in recent years. That's not going to be good. But there are certain constraints right now in certain pockets of the country and in certain markets that are keeping these prices elevated. The war here, REITs are trading higher than they were before the war started, Elia. Up until the last day or two. We've had some really wacky moves in the market. Did you see what happened in the transports today? If you head over to DJT, the OG DJT, the Dow Jones Transports, you're going to see an 8% loss.
They should actually change their ticker to OG DJT.
IYT is down 2.4%. Why? It's because of Avis. Avis car rental was up over $800 a share today before coming crashing back down at $847.70 actually was the high. Now down to $443. This is a really fascinating company with a very interesting corporate structure right now. 71% of the float is off market, owned by two institutional investors. There are more shares that are shorted right now than are currently available to trade. Maybe that's changed over the past 24 hours, given the market movement that we've seen here, Ilya. But for example, car is part of the Dow Jones Transportation Index. And so when it's down 38% in a single session, it drags down and has a knock-on effect in other places. But this, to me, this is the inflation that is really silent in the system, is through trucking. Forget what we're seeing in car for a quick second, but through trucking, we have the tariffs, we have the impact on immigration, we have higher energy prices right now. So the labor markets are out of whack, demand is shifting. It all still feels like it's a good thing that we have DJT moving up the way that it has been. But when you peel out something like Avis and look at IYT, which does not have that same type of constitution, you are seeing some concern here today. And maybe that's why the Russell is lagging here. If domestic trucking isn't doing so hot and losing some of its vigor, which it did with today's move, that's a piercing candle. We've lost our 1 week moving average. We have not traded below it on a closing basis since March 31st. Right? We got the close above there, and we've done it every day since then. Something to keep in mind here.
Yeah. I mean, when you look at this whole thing And you start to have these kind of conversations. I think the thing you have to really sort of keep front of mind is how much shelf life there is on this narrative or that narrative or this idea or that idea, when you consider that at a moment's notice, there is a headline that's coming out of somewhere in the Middle East that gives you a correlation one approaching response across the range of assets. And so, I mean, I had to go on vacation. When the ceasefire got announced, they could have been more nimble on the way out. At the end, it ended up not being entirely a painful exercise. Took a little wallop on the dollar there, but thankfully I was straddling both sides of the market already. So lost some, made others. But when you look at this whole thing, it starts to go, you know what? We can have this fancy idea and that fancy idea, and it might even be right. But to invoke the great Ira Harris, as I often do, if you're right at the wrong time, you're wrong. And so this is now the way I'm sort of thinking about this. Stocks are stuck. If you look at the S&P 500, it's in a range. It's not going anywhere.
3 days. For 3 days, it's going in a range for 3 days.
Right. So it's had a breakout, and now it's thinking about it.
Hey, before we give Josh a coronary, because I see him texting away and typing here with my teams letting up, we do have to say overtime's out of time. You have a show to do, sir. Macro Money's coming up next here on Tasty Live. Stick around after the break. Keep watching.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from Tasty Trade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. Tasty Trade. Download today.
Global markets never sleep. Explore them with Forex on Tasty Trade. Get in on 80 plus Forex pairs, 24 hours a day, 5 days a week. FX marks the spot. Trade it on Tasty Trade.
Woof! The first half of this year's market has been giving the good guys the business.
It's certainly been back and forth for sure, Pete, and I'm getting whiplash over here.
With good mechanics, we can see Team Tasty stay strong in the second half.
Absolutely. Let's check out our starting lineup.
Liz Deerking, Eastern Illinois University. #1, because dedication and motivation equals success. Being able to make that one trade that builds on the next is the very first step.
Matt Helmuth, Illinois State University, #30, because that's how many of Tom's credit card purchases I have to decline a week. Stop trying to buy a suckling pig online, Tom.
Bobby Shepard, School of the Art Institute of Chicago, #6, because that's how many revisions every piece of copy goes through.
Jenny Andrews, University of Illinois Urbana-Champaign, #18, because that's the average of the VIX over the last 10 years, and I cannot wait for it to get back there.
I like the looks of that lineup.
Well, Be Mechanical is always better than just trying to run plays and see what sticks, Pete.
When you got skin in the game, you stay in the game.
That's right. Now get off the couch and get into the game.
Watch Tasty Trade.
First thing about Tasty Trade is how easy it is. It's a very quick, light platform.
Whether it's a pool, a puddle, or a sea, you can navigate your way out of it with the Tasty platform. So I love that.
Pay for back testing? No. Pick from hundreds of symbols, any strategy you want, and all the data to trade smarter. Tweak the delta, dial in the DTE, and stack the legs. See what survives. Check out Tasty Trade today.
Tasty Trade has crypto, and you can trade with 0 commissions, Bitcoin, Ethereum, Litecoin, and more. Diversify in one place. Crypto. We got it. We get it.
Make it make sense. That's what the markets seem to be saying here today after we apparently have an indefinite ceasefire in the war in Iran, at least as far as Washington is concerned. The messaging from Tehran a little bit more mixed, a little bit more confused. So we're trying to figure out what's going on here, and the markets are giving us some interesting signaling. Not exactly the most convincing, but at the same time, not really the most obvious. And so we're going to attempt to have a look here and figure out what's going on. This is Macro Money. I'm Ilya Spivak, head of global macro here at tastylive. And what we're going to do here is really break down the price action first and foremost, take a look at some of the economic data that's coming up here over the coming 24 hours to see if maybe there's a little bit of clarity there. But ultimately end up looking at what is perhaps a bit of a different way to look at this entire situation to source a trade, and maybe source it from not exactly the usual kind of space. Certainly not for a purely macro idea, and likewise, certainly not the kind of thing that you might conclude even for the asset in question. So let's see if we can't figure this out. We'll start with a look at the way that the S&P 500 and the oil and gold story behaves itself, of course, starting with the bogey du jour since the start of this war. That, of course, is crude oil. That's been the driver of this narrative. And what we find here is, of course, a familiar kind of stuck. So we've been now in this range for basically a month and some change. Now, of course, there's been many headlines around this or that development. There have been many turns and U-turns in the negotiations and in the story and in the president's mood and in who seems to be speaking for the regime in Tehran. But crude oil seems to be relatively stable. Now, it has seemingly baked in just about a 30% rise since the start of the war. And we get a little bit of a nudge higher here as a consequence of this apparently open-ended ceasefire that the president announced yesterday. He essentially aborted a mission by Vice President J.D. Vance to go back to Islamabad, Pakistan, to resume negotiations. And that seemed to follow, based on president's own pronouncements, from the conclusion that it's unclear who the U.S. is actually talking to, because the Iranian delegation is not of one mind about what Iran wants, never mind what it can negotiate with the Americans. It is, of course, another altogether interesting component here that Israel is apparently one of the belligerents in this war, but it does not get a seat at this table. So Israel is nowhere in this negotiation. They were told by the president that essentially they have to have a ceasefire with Lebanon. He essentially twisted their arm and made that happen, much as he made the ceasefire in Gaza happen last year. And at this point, the situation appears frozen in time. We have a one-sided ceasefire where the president is basically saying we're not going to keep bombing, but we're also going to keep blockading the Strait of Hormuz for Iranian ships. Now, independent observation suggests that maybe about 24 of them have made it out, but 28 have been stopped by the blockade, and another 2 have been captured. One of them as far off as the Strait of Bengal, something like 5,000 nautical miles away from the Strait of Hormuz. So the U.S. seems to be not just stopping Iranian cargo ships and tankers attempting to leave the strait, they're also hunting them in global oceans, not unlike what happened with ships linked to Venezuela before that whole situation came to a head. So when we look at then what's going on here, what this ceasefire seems to do is essentially lock us in a higher oil kind of situation for really who knows how long. While the Iranian regime attempts to figure out what its sort of nationalist pragmatists, people like Foreign Minister Araghchi and Speaker Ghalibaf, might be willing to do in negotiations as compared to what the hardliners in the IRGC might be willing to do. While that conversation is taking shape, we just have a closed strait. And in that setup, we just have baked in longer disruptions to everything that passes through the strait. Of course, most critically, the transit of energy, but not only. We've also, of course, seen a issue with the situation in fertilizer, in plastics, in aluminum, in helium, in all kinds of things. And so what this price action in oil seems to suggest, just as a kind of stand-in and a kind of proxy for events in the Gulf, is all we've done here is just said whatever issue is going to happen here as far as the price, it's going to happen for longer. Because what we are looking at is essentially a situation that doesn't really have a clear off-ramp. Now, it doesn't not have an off-ramp. I mean, the president has suggested that he expects the deal to be done as soon as this weekend, but how fanciful is that? Well, we don't know, because we don't know who the president means to do a deal with, considering he is himself saying that it's unclear who is actually in charge. And what we've seen over this past weekend is that kind of incoherence on full display. By Friday, last week, of course, the markets were celebrating after Foreign Minister Arakci confirmed that the Strait of Hormuz would be open during the ceasefire. And then on Saturday, the IRGC shelled Indian ships attempting to exit. So we can see very clearly that Iran is not speaking with one voice here. And what we're likewise seeing clearly is that oil prices, in their response to this, are concluding, well, we're just going to be stuck in this range then and maybe edging toward the top side of it as opposed to the other way around. For stock markets, this essentially means standstill. They ultimately don't go anywhere. We're still stuck in this range that we established last week when we punched through these highs here. So we've apparently decided to stop and think about it. But as we've said before, the kind of all the way recovered optimism that we see in stock markets doesn't really appear elsewhere. Certainly crude oil is one element. I mean, we can see here, this was the start of the sell-off for stocks when the war began. This was the top established by the Fed back in late October of last year when it told the markets they were extrapolating rate cuts way too far, and all of those were just not going to happen, and that the Fed was not nearly on the autopilot that the markets hoped. So there was something of a double whammy for sentiment here. It stopped improving once the Fed said that, and then, of course, the next major catalyst was negative, and that was the war, and we got tipped down. So we've recovered all of the war now, all of the Fed shock, even though rate cuts have not come back to the board as a consequence of all of this inflationary risk following on from the Gulf. And so what's been really interesting is while oil, as we just saw, has not unclenched, stocks have done the full round trip. And it would be easy to say, oh, well, the markets have decided the war is over and that it doesn't matter, except for stocks are the only asset, or almost the only asset, more on that shortly, but they're almost the only asset that apparently thinks that this thing is well and truly done. Now, what is especially interesting about that here is that all of the other sort of war trade markets are clearly of a different mind. So we had this sharp run up in yields and a sell off in bonds as a consequence of all of this. It's maybe only recovered about a third of the way. And that is a story that repeats itself over and over across the various sort of related markets. Of course, we see with this pop in oil that there's a little bit of a move higher in yields. It doesn't go very far today, but yesterday there is that move, and clearly on net, yields are higher since the start of the war than before. It's a similar story in gold. That kind of a process where we're looking at the markets going, well, sticky oil, that means higher rates. Well, for gold, that's clearly not a great story. It's been hamstrung since the beginning of this war by rising rates because, of course, it yields nothing. And so what we end up with is a situation where yesterday, gold takes a hit. Today, it finds a way to hold its ground just barely. But that's about it. And so the upshot there seems to carry on. In fact, If we consider here which assets are sort of fully recovered from the war, at least as far as the initial impact, and which assets are not, which assets are still showing signs of meaningful stress. We can see here that crude oil is net up about 25% since the start of the war. The 2-year yield is up something on the order of 8.25. The 10-year is up almost 6. But then gold is down 7%. But when we look across stocks are, in the case of the S&P, up 4. In the case of the NASDAQ, up 9 3, or almost 9.5. In the case of Bitcoin, up 15, which is an interesting kind of a setting for this whole setup. And again, more on that momentarily. But at least as far as the non-stock assets here, seems like we're going the other way. We're going to higher yields, higher inflationary risk type of dynamics. It seems to be the same thing in the dollar, which has started to perk up again. And of course, no round trip reversal here. It only pulls back about halfway from its wartime high. Now seems to be finding support again, just as gold comes back under pressure, just as bonds come back under pressure, just as oil starts to tick up again. And so a familiar story, again, stocks aside, is starting to take shape. Now, as far as data going forward here to keep this conversation going, we're looking at a whole round of PMI numbers coming out from the major economies. And of course, the ones that we're going to pay the most attention to are going to be the ones coming out of the Eurozone and the US, because taken together, that is essentially 2/3 maybe of global demand ultimately. If we break down global demand into sort of its constituent parts here, there's really only 3 major engines of global growth that account for nearly everything, or certainly the vast majority of demand. When we consider that the US by itself is about 26% of global GDP, the Eurozone is another 15%. So there's your third of global growth. You take all of that together, you're looking at almost 40% of global demand. China is another 17%. With it, you're looking at about 58% of global demand. The rest of the world is about 42%. And many of those countries are vendors that depend on demand from the former 3, from the US, the Eurozone, and China. So it'll be the Eurozone and the US in this set of data. We're going to get the Chinese numbers as usual about a week later. But the Eurozone and the US will be the main story for this data release. And of course, what we're looking at here, we can see the composite numbers for the Eurozone giving us a move closer to standstill. We're already basically stuck at standstill. 50 is, of course, neutral for these PMI numbers. Above 50 is growth. Below 50 is contraction. The further you go above 50, the faster the growth. The further you go below 50, the faster the contraction. It would be unwise, I think, to dismiss the incoming numbers out of Australia and Japan, even though the focus is probably later in the day. This is the front of the global supply chain. And last month, it shockingly slipped below 50 unexpectedly into contraction territory for the composite index for Australia. That might have been an early warning sign for the global economy. So more to keep an eye on there. The slowdown in Japan might also be something to keep in mind. That, of course, is a country that imports almost all of its energy. So that should be an interesting barometer of how much the crisis now with higher oil is already hurting activity. But as we say, the big story, the Eurozone, which is expected to give us essentially a second consecutive month of no growth and basically standstill. For the U.S., we're looking at, it looks like slight uptick for manufacturing, but essentially a flat result for services after an unexpected contraction last go around. And so not exactly the world's most encouraging numbers here. And if we look at how they distill into global PMI numbers, these are February's and March's numbers here most recently on this downswing, we can see here we are already watching the implications of all of this. It's already starting to show up, and perhaps most critically, starting to show up in the service sector. Manufacturing, of course, is starting to tick down, but we can see the price structure of things seems to already be punishing demand. We're already at some of the weakest performance that we've seen since essentially a year ago. And if this sticky oil situation continues, one might think it carries further. In fact, if we look at Citigroup data, bit of a squished chart here, but nevertheless, you can see what's going on. And this is the economic surprise index numbers across a whole range of economies. And what you see here is quite striking, because you can see for all of them, doesn't matter which way you slice and dice the regional numbers, whether you look at emerging versus G10 economies, whether you look regionally, whether you look globally, whether you include just the BRICS as a grouping, as though that means something, that grouping, that's a separate conversation. But however you wanted to slice and dice this thing, what you end up with seeing is data is increasingly underperforming or otherwise deteriorating relative to forecasts. And so whatever seems to be going on here, it is probably already some amount of economic deceleration, and that economic deceleration stands to be amplified by energy prices and various other input prices, again, whatever is being held back in the Gulf, on top of it. And you can see that clearly here, because if there is one easy barometer to figure how much of an inflationary impetus is coming from this sticky oil, we can take a look here at BWET, the break wave tanker shipping ETF, and we can see we're not seeing an unclenching in these shipping costs. In fact, these shipping costs have been rising since January, which is, again, testament to the fact that this is not just about the war. This is about the pressure that's been put on crude oil since the beginning of the year. And that's around the situation in Iran before the war, the protests there and the regime's crackdown on them, and sort of the sense that that might lead to instability. That's the situation in Venezuela. That's the hunting of Russian shadow fleet tankers by U.S. and eventually other countries as well, including France and improbably India. But the inflationary impetus is there. As we've said before, it seems to take about a month for surges in oil to show up in CPI. And so far, we've only seen maybe that first batch from January through February. This pop still hasn't shown up. And it's not like the markets haven't noticed. With the rise in crude oil, you've also had a rise in break-even rates. So the bond market knows that this is inflationary and it's not unclenching. As we've said before, inflation was already building outside of energy in the first months of this year, in goods, in services, and even in housing. And that's, again, holding energy completely off to the side. So it's really no shock that when this war struck, policy expectations for all of the world's central banks, except for Japan, which is off on its own mission here, has seen a sharp hawkish readjustment. Bank of Canada is perhaps the one that's had the least ultimate move. We had a bias to no change before the war and now after, now that things have settled. But for Australia, for the Eurozone, for the UK, for the US, the story is dramatically less dovish than it was before this war began. But that, of course, raises the important question. If the only thing seemingly responding to this for now are the dollar and gold, and bonds are kind of stuck in a spot, as are stocks, which apparently still seem to want whatever exuberant view they're holding on to, at least for now, well, what do? Do you chase stocks at record highs here? Do you try to squint and say, well, there's a bond move here somewhere? Well, maybe not. So this move in gold looks interesting. This move in the dollar looks interesting, but these are all these war trade ideas that are in various stages of finding a base. But one thing that we haven't really looked at in the context of this is Bitcoin. And an interesting consideration here, of course, is that while gold was rallying up a storm last year, Bitcoin was not. And while risk has been rallying up a storm, Bitcoin was not either. So it's a bit of a different story here than the usual Bitcoin narrative. But perhaps this Iran war has given it a bit of life. And perhaps the jump that we have here around this forever ceasefire with no clear end is a part of the story. Iran is a major mining center for Bitcoin. And to the extent that this blockade hamstrings energy supplies, and in particular, money and the generating thereof in Iran, if there is a disruption, then perhaps what could happen here is a disruption in Bitcoin mining from Iran. And of course, to the extent that that hurts Bitcoin supply at a time when there's all kinds of automated buying, even just for ETF purposes, we are looking at maybe Bitcoin behaving as a commodity and experiencing something of a supply shortage. And so that's why we might be getting squeezed to the top side here. So while stocks are certainly the obvious asset that has made a full round turn since the war, Bitcoin is actually up more since the war began. And that's after a long slide last year. So maybe we're looking at the wrong assets here. Perhaps this is really where the impact of this unclear ceasefire is going to make itself known most obviously. So from a positioning perspective, I've still got this short gold position that I've had since the past several days. I put this on Friday, or on Sunday, rather, at the market open. Still long the dollar here and adding a little bit as the euro has made some headway on the downside. And of course, holding long Bitcoin, which had a nice move today. still holding the short side of risk, thinking that eventually this thing has to realize what's going on here in all the other markets. But of course, we'll see if it does. This is why these things are done through ETFs to keep size small and through a risk-defined sort of framework to not lose too much when the stock market decides that it wants to be more resilient than the thinking here entails, and still holding these put verticals at the long end of the yield curve through TLT, looking for rates to continue marching higher as that inflationary risk continues to play through. And that is macro money for today. As ever, we are here Monday through Thursday. That's right after Overtime, a show that I co-host with Chris Vecchio, looking at the Wall Street close and where things might go therefrom. I'm also writing for the News and Insights portion of tastylive.com and commenting at Ilya Spivak on former Twitter and on Blue Sky. If you're watching this on YouTube, like and subscribe. Macro Money returns tomorrow. Happy trading.